aspects of liquidation and voluntary liquidation. While I will discuss regarding the voluntary liquidation, I believe in the second half, the respective speaker will speak on the liquidation part. So I would request all the participants to be interactive, given that it's a practical session. And I'll be assisted by my colleague Neha Malu for the procedural part. So in order to make the today's session more interactive, we have decided to divide the entire session into 3 parts. First will be, of course, regarding the prerequisites as to what are the prerequisites required when we consider or when we think about a company to voluntarily liquidate a company. And the second part will be the procedural aspect, because before discussing the practical part, it's important to discuss the practical aspect as well. So the second part will be procedural part. And at the end, we will discuss regarding the practical approaches, practical experiences that we have faced so far. And of course, we would like to hear from the participants as well, those who are handling the voluntary liquidation process and are facing the practical difficulties or have any concerns, we will try to resolve that. So let us start with this session today. I'll just share my PPT. I hope my screen is visible to all.
Yes.
Okay, thank you. So the topic today is about voluntary liquidation. When we say voluntary liquidation, it is about voluntarily liquidating the company. That is to say, the company is solvent enough or is solvent to make payment to all its creditors such that the company can be liquidated. So in IBC regime, there are 2 types of liquidation. We all know that one is voluntary and the other one is compulsory liquidation, which follows by CIRP process. So first CIRP process and thereafter liquidation process is there. But when it comes to voluntary liquidation, it is about the contributories of the company to decide that the very purpose of the company for which the company was incorporated is now over and we can now liquidate the company. So there has to be a solvency test first to ensure that the company is good to go for a voluntary liquidation process. Section 59 of Insolvency and Bankruptcy Code read with the voluntary liquidation regulations provide for the detailed procedure that the liquidator has to follow for the voluntary liquidation process. Apart from this, there are section 35 to 53 as well, which are simultaneously applicable in case of voluntary liquidation processes. Income tax provisions are also there, given that during the liquidation process as well, there may be realization, there may be interest income that liquidator earns. So the income tax liability will be there. And of course, at the end, at the time of distribution of the money, the surplus money to the respective shareholders, there will be income tax liability. So income tax respective provisions are also applicable. And the Companies Act provisions are applicable only in case of the corporate person on which the IBC regime will not be applicable, which is financial service providers, given that in the definition of corporate person as provided in Insolvency and Bankruptcy Code, the exclusion is given to the financial service provider. So in that case, Section 59 need not be followed. In that case, provision of Companies Act will be required to be followed. Now coming to the concept of declaration of solvency. Let me just give a brief idea as to what this, how this voluntary liquidation process commences and how to take it forward. So it is about to test the company as to whether the company is solvent. And after taking that solvency test, to pass the respective resolution by board, then by shareholders, to take consent of creditors, and then to start the process. So the very process starts with this declaration of solvency. Who is required to give this declaration of solvency? This declaration of solvency is required to be obtained from the majority of directors of the company who are there in day-to-day management of the company, who are aware whether the company is solvent enough or not, and accordingly is required to give an undertaking to the liquidator that the company is solvent enough to make payment towards all its liabilities. There are certain amendments which are recently introduced, which now also require the liquidator to, which also require the directors to provide that the statutory obligations are also considered, and the necessary provision in that regard has also been created to ensure that company will be able to pay all its liabilities. Right? So to give an example, as I always give in case of my session whenever it's about voluntary liquidation. So voluntary liquidation is about, like, I have enough food on my table, and the so that all the creditors who will be in the queue will be able to take the food from the table. So it's not about a limited food, it's about unlimited food that I have, and I'll be able to pay to I'll be able to give the food to the respective creditors who will be in the queue. Right? So this concept of declaration of solvency when it comes to voluntary liquidation process is very important, given that if, say, suppose the company turns out to be insolvent at a later stage, at that stage, and the declaration of solvency is given by the directors at the very first stage, then directors will be personally liable for the respective liabilities that may arises once the company, the voluntary liquidation process has started or completed, but the creditors are unable to file their claim, or the creditors have filed their claim at a later stage, but the distribution has already been made. Or in case the directors are giving a wrong declaration regarding the solvency of the company. So it is about the personal liability of the directors. So directors should be very, very cautious while giving this declaration of solvency. Now, before this solvency test, how to check whether a company is solvent or not? Why we are coming for the solvency test? Because often what happened with the professional is a client generally comes up with a balance sheet of a company and asks that I want to take this company for the voluntary liquidation. So whether the voluntary liquidation is a suitable process for me to take and to close the affairs of this company or not, because there are several processes, several different modes in which a company can be closed. Like there is merger, there is striking off, there is voluntary liquidation, there is liquidation. So there are different modes which are available to close down the affairs of a company. Now, which mode is suitable in a particular case is to be decided by the respective professional. Hence, to decide as to whether a company is good enough to go for the voluntary liquidation or not, it is required to have a solvency test. So we have some examples here to check the solvency test based on the financials of a company. So I'll just discuss these case studies that we have prepared. So let us see this first example. This first example is there are assets and liabilities in the company. The asset contains cash of ₹1,000. The liabilities contains share capital, which is divided into equity and pref share capital. There are brought forward losses and debt. So in this case, whether the company can be said that the company is solvent? The answer is yes. How? That the total asset is ₹1,000. Out of this ₹1,000, I am required to pay first debt, which is ₹100. The remaining balance of ₹900 will be there. This 900 has to be paid to the pref shareholders. So nothing will be paid to the equity shareholders. To the extent a company is able to pay its debt, the company can be said to be solvent. So I am here, I can pay the debt in entire, so I am solvent company here. Right? What will happen to the brought forward losses? Brought forward losses has nothing to do here, because if, say, suppose there were no losses but the profit, in that case, whatsoever surplus money I would have distributed to the shareholders would have been treated as a dividend in the hand of shareholders. So here we are not required to account for this brought forward losses. To the extent I am paying the debt, I have to pay in sequence of Section 53, even if the company is under voluntary liquidation. And if we recall the hierarchy which is provided in Section 53, it requires the debt to be paid first, and thereafter the subsequent liabilities. And the number of the amount to be paid to the shareholders comes at the end. Here, since there are no other creditors in the queue, so we are required to pay the money to the pref shareholders. And say, suppose if there would have been some extra money that even after paying the pref shareholders, we can pay to the equity shareholder, then this respective amount would have been distributed to the equity shareholders of the company. Now let us take the next example. So this next example is again, there is 1,000 rupees cash available. That is rupees 100. Here preference shares, including premium on issue, is premium on issue of rupees 400 is rupees 900, and equity is rupees 500. So whether I can say that the company is solvent? Here again, I can say that the company is solvent because I'm able to pay my debt, which is 100 rupees, and the surplus amount, which is rupees 900, will be distributed in this manner that I am required to pay the pref for rupees 500 and balance to the equity holder. Now, concern may arise as to why I'm paying 500 when the amount is 900, because it is this is premium on issue and not premium on redemption. So if it is premium on issue, then I am required to pay only the face value of the amount, which is rupees 500 and not the premium amount here. So I'll pay 500 rupees to the pref shareholders and the balance amount to the equity shareholders.
Madam, can I interrupt
Yes.
here?
Sir, may kindly unmute yourself and please ask the question.
Am I audible?
Yes.
Yeah. Let us say there is this assessment which is still pending in income tax, and that normally takes maybe more than 1 year, 2 years or something maybe. Then you don't know actually the liability because there's going to be contingent. So how would you tackle that situation?
So earlier, before the recent amendment was there, we were required to, even if the directors are giving the declaration of solvency, they are required to give this provision or this details with respect to this pending of assessment amount. And the liquidator under section 178 of Income Tax Act is required to give an intimation to the income tax department that whatsoever amount I'm required to pay or the company is required to pay, kindly let me know that amount. So the assessment is not required to be completed within the period of 3 months, which is provided in section 178. The assessing officer is only required to say the amount which is required to be set aside in order to complete this assessment. So if say suppose the income tax department has come up with the amount of rupees 1 crore or so that amount is required to be set aside such that the liquidation process should not be stuck because of this income tax pending proceedings. However, if after say suppose in that 3 months time income tax department has not turned up with any of the communication regarding the pending assessment, in that case liquidator is free to go for the further distribution. And of course, say suppose at a later stage if income tax department's due is analyzed, then the out of the respective surplus money which will be distributed to the shareholders, the amount of income tax department has to be paid.
No, I understand that this particular certificate from income tax itself takes time in these situations, and it is becoming a constraint. Is that true?
So can you please just repeat again?
I understand that this kind of a certification from income tax itself is becoming a constraint because of the delay in getting this from income tax department. Is that true?
Yes, sir. It is true that while as a professional, we are required to give this intimation under 178 and section 176 to the income tax department. However, hardly income tax department has turned up with any kind of communication within the period of 3 months, which is allowed in the respective sections to set aside the amount until unless the company is, that large. So income tax has not turned up with the amount which is required to be set aside. And moreover, by way of a notification, IBBI has now said that in voluntary liquidation process, you are not required to take any NOC from the income tax department as well. So in that situation, it may happen that say suppose I have given a notice to the income tax department and income tax department has not turned up to me within a period of 3 months. And I proceeded with the further distribution, the further realization and making the entire distribution to the respective stakeholders in the manner as provided in section 53. And at the time when I'm submitting the dissolution application to the NCLT, the income tax department turns up and says that there is a liability on the company. So this situation has also arises. This situation is also there, which even we have faced practically. So this is in order to tackle this situation, what we have done practically in our case was while distributing the surplus money to the contributories, we have also mentioned this caveat that if at all any liabilities come up at the later stage, so the amount that we are distributing now maybe has to given back to the liquidator so that the respective liabilities can be met.
Madam, one question in this. At the time when this IBBI circular had come for no requirement of NOC in income tax NOC in case of voluntary liquidation, that time it was discussed and it was given a view that it is the income tax department's duty to put the claim when the liquidator is giving out Form A. It is not the liability of the liquidator to wait till the income tax raises its demand. So that view was taken at that point of time. Only in case of refund, then the liquidator will have to be required to wait, since there is a refund expected and it should not be a loss to the shareholders. So is it the possibility? Because how can the liquidator be responsible once the dissolution petition is done? And another thing is, if we have to wait for 3 months, then we have to also complete the liquidation within 90 days. That is again 3 months, in case there are no creditors.
Ma'am, while you have correctly mentioned that the income tax department is not required to give that NOC any now, is not required to, we are not required to obtain any NOC from income tax department when it comes to voluntary liquidation process. However, in that particular resolution, in that particular circular that you are referring to, if you have noticed, the reference to section 178 is still there. So it is said that if you have given the notice under section 178 to the income tax department and the income tax department has not turned up within the period of 3 months as provided in the respective section, in that case, you are not required to obtain any particular NOC from the income tax department. So you are, as a professional, you are required to give that notice under section 178 to the income tax department, and you are mandatorily required to wait for the period of 3 months before making any distribution. Now, the question comes as to what will happen. The timeline is given for 90 days. So this timeline for 90 days or 270 days is given in two different circumstances. The circumstances is such that if there are no creditors, in that case, the timeline is 90 days. If there are creditors, in that case, the timeline is 270 days. Can we count the income tax dues as a creditor? Of course, we should. If the respective director has not accounted for or not created any provision for the income tax department, not already paid the respective advance tax towards the income tax dues. So if the liabilities has already been assessed, if the directors are already aware that there may be a liability, so you cannot say that there are no creditors in the company and can, required to finish the process within a period of 90 days. In that case, you have the 270 days period to finish off the process. And again, if say suppose you are unable to complete the process within that period of 270 days, in that case, you are required to take the consent of the contributories and can, for the further extension of the liquidation process.
But again, in that case, if we treat the income tax department or such authorities as the creditors, then how can we take the creditors' consent? Because if we say that there are creditors, then we have to also take the creditors' consent to go for voluntary liquidation.
So that is the reason that for this particular creditor, for this income tax department, they are saying that you are required to give this notice, because you cannot expect income tax department consent to proceed ahead with the process. So for income tax department, there is section 178 that you have to consider. So you have to give this reference to income tax department, and the creditors as are appearing in the books and records of the company, you have to take consent for those creditors only. Of course, the secured and unsecured creditors have to be bifurcated for that, and you have to proceed with that. And as far as it is about income tax department's consent, so while the IBBI has clarified that you are not required to take any particular NOC from the income tax department, however, practically it has been seen that in NCLTs, still NCLT asks for the NOC or the timeline provides a timeline
Yes.
to income tax department to come back with their view, if at all they have any, or any objection if they have, within a period of 30 days or so with respect to this voluntary liquidation process, so that NCLT can order for dissolution.
Madam,
NCLT mostly asks for the NOC from the liquidator. They asked to submit in the Ahmedabad bench. It had happened that they had asked for submitting the NOC when we had told them that it is not required as per the IBC regulation, but they were like, no, we need it.
Yes, so different stance has been taken by different NCLT. NCLT Mumbai still gives this 30 days time to the income tax department to come back with their views, if at all they have any. And if they do not come back with their any observations or any objection, then NCLT usually allows dissolution of the company. In NCLT Kolkata, they consider this circular issued by IBBI, and they say that again the liquidator is not required to obtain the particular NOC from the income tax department, so they allow the dissolution of the company. So just allow me a second. Yes, sir.
Yeah, madam, if I don't have the money to be paid to preference shareholders, whether still the company will be considered as solvent?
Yes, sir, because pref shareholders are the shareholders. They are
Right.
not considered in the purview of debts. So to the extent you are able to pay your debt, you are a solvent company. What you are distributing to the shareholders is the surplus money. So
Correct.
out of the assets that are available, you are paying your debts, and after paying your debts, whatever surplus is there, that surplus is required to be distributed to the shareholders. However, when you are distributing the surplus to the shareholders, there you have to give preference to the preference shareholder, and remaining money will go to the equity shareholders.
Thank you,
So
ma'am.
even if,
And yeah,
yes.
and the intercompany loans, they qualify as creditors, right?
Sorry, sir.
Intercompany payables are there, so
Yes,
they
sir.
will qualify as creditors.
Yes, sir. Yes, sir. For intercompany loan, they will be qualified as creditors.
Thank you, ma'am.
Thanks, sir. So let us
Ma'am,
take the
just
next.
one question, sorry. Just one
Yes,
question
sir.
on
Yes.
the integrator loans. So suppose there is an integrator loan or outstanding payable. So before distribution to the shareholder, should we do the set off?
In fact, if you can set off before commencement of this process, that will be more easier for the liquidator to continue with the process. So what we generally advise to the respective client is whatsoever liabilities you can assess and whatsoever liabilities you can met before this commencement of liquidation process, we advise generally to clear those liabilities and carry only limited liabilities in the book, so that liquidator can quickly just pay off those liabilities and can conclude the process.
And what if they have not done that?
In that case, liquidator will have to pay off the liabilities.
But after set off or before set off?
No, so there can be a situation of set off. Set off is, say, suppose there may be a situation like I am the respective company owes me a certain fund and I owe certain fund to the respective creditor. So instead of paying money and taking it back, it's better to set off the money and pay the respective part if any their surplus part remains. Or if if say suppose there are receivables, in that case the other company is required to pay the receivables to me.
And ma'am, may I just add one more complication? If there is a FEMA angle involved, it's a foreign investor, and a certain amount by a company in liquidation is required to be received from a foreign, and certain amount as a part of the liquidation is required to be paid to a foreign shareholder. So can we do a set off in that particular case?
Foreign shareholder, sir, can you please just repeat this again?
So in case of a set off, an Indian company has provided certain services to a foreign shareholder, like they always do. So certain amount is standing as a credit in behalf of the Indian company balance sheet. And then the liquidation has commenced. And then as a part of the liquidation, a certain shareholding amount has to be paid back to the foreign shareholder. So now the question is, can we do a set off?
So this is
For
not
that-
the shareholding amount that you are required to pay to the foreign shareholders, sir. I believe that you are asking regarding the foreign shareholders in case of an Indian company. So how to pay that amount when there is certain set of amount still there in the books of the company. So
Correct.
what you are distributing to the foreign shareholders is the surplus money. You are not required to pay the amount particularly, even if the amount is not there is no surplus fund. So the moment you will have surplus fund, you are required to give that surplus fund back to the contributories of the company, irrespective of the fact whether the contributories are foreign shareholders or Indian shareholders. Of course, if there are foreign shareholders, in that case, you are required to repatriate the money to the foreign shareholders. And the set of amounts, say, suppose if there is certain liabilities of the foreign shareholders are there and you are required to pay off the liabilities, of course, you can set off the liabilities from the amount, the surplus money that you are required to give to the respective foreign shareholders and pay the balance amount to the foreign shareholder.
Okay, all right. Thank you. Thank you.
One more question, ma'am.
Madam,
Yes,
one more
yes,
thing.
yes.
What is the rule by which you are saying that redemption premium, if it is payable at the time of redemption, is also need not be paid? Because ultimately surplus is being distributed as dividend. So why redemption premium should not be paid if money is available?
I am saying that redemption on premium is required to be paid, not redemption, not premium on issue. So when you are issuing the amount with the premium, there is no liabilities on the company at that time. The liabilities arise at the time of redemption of the preference shares. So when I have committed that I will redeem the amount with the premium, at that time, for the redemption with premium amount, I am required to pay the full amount and not for the issuance.
Hello, ma'am. Each setup
Yes,
is
sir,
setup
yes.
is allowed. Each setup is allowed once the voluntary payment commences, because one side there one part amount is asset, other side liability. Because as per liquidation, we have to first recover the amount and then distribute. In that context,
Sir, your question is not very clear. Can you are required?
each setup is allowed once the voluntary liquidation commences.
Voluntary liquidation commences, is set off is allowed.
Yeah.
So set off is allowed. So this is,
Okay.
there is no restriction with respect to set off that you cannot set off. Of course, say suppose, so as a liquidator, your job is to realize the assets and pay off the liabilities. Now, it is not about to pay off liabilities particularly in the form of cash. You are not required to pay the liabilities particularly, to individual creditors, irrespective of the fact that the creditors is also there in your books as a debtor. So if say suppose there are creditors who are also there in the books of in your books as a debtor, so you can certainly you can set off the amount and pay the balance amount to the respective creditor. There is no restriction on that part.
Madam, I have one question.
Yes, sir, yes.
In case of voluntary liquidation, if there is it is 100% subsidy of a foreign company, it means only both shareholders are the foreign entity. Then the surplus amount to be repatriated to these shareholders after all repayment to the debts and other liabilities. What would be the compliances or precautions a liquidator should keep in mind, the FEMA provisions also regarding repatriation of capital in case of voluntary liquidation? Can you please explain what would be the compliance part more important from the liquidator point of view?
So in fact, we have also faced one of the case where there were two shareholders only. The company was WOS and both the shareholders were foreign shareholders only. And we were required to pay the amount, repatriate the surplus money to the respective shareholders. In that case, the approval of RBI was there. We were required to pay the money through the AD banker. So the AD banker was required to be appointed by the liquidator at that time, or required to be there at the time of repatriation of money. So that at the initiation of process, you are not required for any approval from the RBI. But at the time of repatriation of fund, the AD bankers have certain requirements that you are required to fulfill so that the money can be repatriated to them. Or else there may also be a situation that the foreign shareholders have Indian accounts. So you are not required to repatriate money to the foreign accounts. If they have Indian accounts, or if they have other companies in which they direct you to pay the money, so you can pay the money to that particular account as well. So that this particular AD category bank's requirement will not be there. So in our case, we had AD category banker there, and there were certain requirements that we were required to fulfill. And based on that, the money was repatriated to the foreign shareholders.
It means, ma'am, as you said that RBI approval is required
Is
on a
not
letter.
required.
Is not required.
Yes, is not required.
it will be
RBI's
repatriated
approval
through
is
AD bank
only
only.
required when the company is governed by RBI and the company is getting closed. So in your case, it is not a company which is governed by RBI, but in your case, the shareholders are in foreign and you are required to distribute the surplus money. So you
Yes.
have already realized the assets, you have already paid off the debts which were there, and there are surplus money which are with you that you are required to distribute among the contributories of the company. Now, the contributories are not there in India, the contributories are in foreign. So you are
Yes.
required to distribute that amount to their foreign account. So
Yes.
for distributing that amount to the foreign account, you cannot just simply distribute by way of a normal banking. You have to have AD category bankers approval, and based on that approval, they have the procedure to repatriate the fund to the foreign account, and accordingly you distribute that amount to the foreign accounts.
In that case, if we do not get the approval of the AD bank within 90 days, then what will happen?
Then you have to take extensions. You have to take consent of the contributories for the respective extension. So this timeline of 90 days and 270 days is provided to close the affairs of the company in case of voluntary liquidation, like there are timeline in case of normal liquidation as well. The timeline is provided. However, we all know that there are hardly any case wherein the process of compulsory liquidation also has got closed within a given timeline. So when it comes to voluntary liquidation, of course, this timeline of 90 days and 270 days are given because the IBC is all about the time-bound process. So the time has been, the time has been fixed by IBBI so that the respective professionals can act in such a manner that the process can be closed. If there are no creditors in the company, in that case, you are not required to, there are several processes which will get deleted and you are not required to follow the entire process. For example, the process of verification of claim will not be there. The process of preparing the list of stakeholder will not be there. So there will be several things which will not be there. So those timelines you'll certainly be saved if the creditors are not there. In that case, IBBI said that you are required to close the process within a period of 90 days. However, for some procedural difficulty, if say suppose we are unable to meet that timeline of 90 days, of course, there are contributors from whom we can take the consent and we can seek extension given the particular reason as to why we are unable to close the process within a period of 90 days. Again, this 90 days process or 270 days process is for liquidator to complete the process and not for the complete dissolution of the company. Within this 90 days timeline, you are required to complete the process from your part and to submit the dissolution application with the NCLT. Now, if say suppose you have completed the timeline within a period of 90 days, you have submitted the application with the NCLT. However, NCLT takes time. There are several matters. Those who have already filed the dissolution applications with the NCLTs might be aware that there are several applications for voluntary liquidations which are pending for more than 2 years before the NCLT for consideration. So there is no particular timeline for the completion of the process. The completion of the process timeline is only for the liquidator. Liquidator's timeline to complete the realization and distribution should be completed within a period of 90 days.
Thank you,
Madam,
ma'am.
two questions here.
I'm also having two
The AD
questions.
bank request will be given after the liquidation order, or can it be given in advance? And second is, whose responsibility is it? Is it for the foreign investor's responsibility to take the approval, or is it the liquidator?
So generally, it's liquidator's responsibility to connect with the AD banker and to make the foreign repatriation. However, if say suppose there are foreign shareholders who are kind enough and providing the necessary support to the liquidator to make the respective repatriation, of course they can. But certainly it is a responsibility of the liquidator to connect with the AD banker and then make the repatriation of the fund.
Ma'am, I'm having two questions. First one is, as you have informed that the distribution, that it's the obligation of the voluntary liquidator to complete the voluntary liquidation process and make the distribution and move the application with the NCLT within a period of 90 days, right? So my question is that in the whole process, voluntary liquidator completes the procedural work and he approaches the AD bank for the repatriation of money. And as you know, that while making the repatriation of money to the foreign investors, they do ask for a copy of FCGPR reporting number, or if there is FCTRS, right? And in case the investment is more than 10 years back or 11 years back, it sounds, and the company is not having the copy of those reporting number, though the company has made it, right? And it has done the coordination work, and it has marked the mail to the RBI, and everything is going in line. They are making the follow-up, right? But in all this process, while the voluntary liquidator is able to fetch that FCTRS and FCGPR reporting number, this period of 90 days gets lapsed, right? And it certainly, I believe, it is not the fault of voluntary liquidator. It was the company who was supposed to maintain the records. So in this particular case, what will be the liability of the voluntary liquidator, and what additional compliance requirement voluntary liquidator is supposed to do? Two questions.
See, if there are liabilities of the company, which company has not made during, before initiation of the liquidation process, then certainly to the extent it is for the beneficial liquidation of the company, the liquidator is required to comply with those requirements. Now, if for complying those requirements, if the timeline of 90 days get elapsed, in that case, the liquidator has to call a meeting of the contributors and has to seek the extension of the timeline, giving a particular reason as to this is the particular reason for which I am unable to complete the process within the period of 90 days, and I seek an extension. So please understand that in case of voluntary liquidation, the role of NCLT comes at the end and not during the process. So during the process, during the entire process, the liquidator is required to run the process, and the liquidator is required to take consent of the contributors, because the very process starts with the consent of the contributors only. So as and when the liquidator is, stuck, or the liquidator needs any approval, the approval has to be sought from the contributors of the company, because of whom or pursuant to whose resolution the voluntary liquidation process has started. So if, say, suppose within this 90 days timeline is getting elapsed, in that case, you have to go to the contributors, you have to call a meeting of contributors, and you have to say the particular reason as to why the process is not completed, and then they will certainly provide the extension for completing the process.
Okay, thank you.
Ma'am, one thing,
Next.
ma'am, just a second. This is related to the contributors meeting. So is it required only in the meeting of the contributors, or through a letter also we can get the consent?
While it is provided to have a meeting of the contributors, but say suppose there are only one contributor. In case of wholly owned subsidiary, I have only my parent. So what will I do to have a complete meeting? I can just have a discussion with the respective contributors and can take the consent by way of a written format as well. So in that, so this situation varies from, company to company. In case, say, suppose there are more than one contributors and that requires discussion, or the contributors may have varied decisions or varied views, in that case, of course, a meeting is required to be called. So meeting is all about to exchange views and to have a discussion. So when there is nobody to discuss, then the meeting is not required.
Okay, one more question, ma'am, to add. As you were discussing about RBI compliances while making the repatriation of money to the foreign investors, I would like to confirm that there is a requirement of FCTRS reporting and EMF reporting required, because our AD banker is taking a declaration in this regard. So can you please clarify on this point also?
So, ma'am, this is completely practical. In fact, we also abide by the guidance of the AD banker only. At the time when we had
actually,
done
this
the
is
foreign
my first
repatriation.
case, so I'm not clear about this repatriation thing, but they are taking this voluntary declaration from the voluntary liquidator that the FCTRS and EMF compliances reporting will be made. So I just thought to get it clear.
So we were also completely guided by AD bankers only. So as the way they asked us to provide the documents, the way they said that these documents are required to make the repatriation, we have complied with those directions, and accordingly the money was repatriated. This is completely practical, ma'am. You have to approach the AD banker to have the further clarification on this.
Okay, thank you.
Madam, one question.
Yes.
So I have the asset of rupees 100 and I have the debt of rupees 100 also. So I am solvent. Now, from where the liquidator fees has to be paid, ma'am, whether it is to be routed through liquidation account that we are going to open, or we can take into our personal account, ma'am.
Ma'am, sorry, sir, this liquidator's fee is, in case of voluntary liquidation, is decided by the contributories. So
Right.
at the time of commencement of this process, the contributory says that say suppose 5 lakh rupees is decided as a fee of the particular liquidator, that this amount will be paid. So this amount will be paid from the liquidation account. And from this liquidation account, first of all, the fees of liquidator has to be paid. Because in voluntary liquidation process as well, the hierarchy as provided in section 53 has to be followed. Section 53, if you see, it says that the liquidation cost is in the first priority. So liquidator's fee is a part of liquidation cost only and has to be the first priority. So before even paying off, any debt, you are required to meet the liquidation cost first. So whatsoever money you have realized, you are required to meet the liquidation cost first. That will include, of course, liquidator's fee, fees of newspaper advertisement, fees of filing, etc. So those costs has to be paid first. After that, the distribution has to be made, and distribution has to be made to the debt towards the creditors first, and thereafter the surplus money is to be distributed to the share.
So in that case, madam, the asset should be definitely more than the debts also.
Yes.
At least to the extent of liquidator fee and public announcement and some other expenses, the asset should be more than that.
I'll come to that part, sir. There is one slide in which I have discussed this part in detail. Just allow me some time. I'll discuss that part in detail now.
Okay, thank you.
Ma'am, I have one motion if you allow.
Yes, sir. Yes.
Yeah, thank you, ma'am. Ma'am, in one of the cases, the company was in the voluntary liquidation and the company was a sound company. There was some tax due, but the corporate was the company and the directors was not aware of the debt of the company, of the income tax debt. When the liquidator make the public announcement and the company has received the claim from the income tax department, which is more than the assets available to the liquidator. So in that case, that voluntary liquidation be treated as a compulsory liquidation?
Yes.
Or
Yes.
okay.
So there may, again, I will also discuss about this part in detail. So there may be a situation where, say, suppose directors have declared that the company is solvent. Once the process start at the later stage, we found that the company is not solvent because there are some uncertain liabilities which even the directors were not aware of. And the company eventually turned out to be insolvent company and not solvent company. In that case, the liquidator is required to make an application to the NCLT to say that the company, the process has to be converted to the compulsory liquidation from voluntary liquidation. So there are circumstances, there are several cases. I can give example of some of the cases. There was one case of Central Inland Water Transport Corporation Limited matter, wherein the same case happened. However, eventually they submitted to the NCLAT. The matter went to NCLAT as well, and NCLAT eventually said that they submitted that there are other assets through which we can meet the liabilities. So the process has to be restarted. But initially the process was such that when they said that the company is solvent, eventually the company turned out to be insolvent because of some court liabilities, etc. So there are cases on this.
One more question with respect to the date of commencement of the liquidation, voluntary liquidation process. In case of the creditor, the company has to take the consent from the creditor as well within 7 days. But as per section 59.3, the section says that the liquidation shall be deemed to be commencement from the passing of the SR. So let's say the liquidator has to take all the steps, like they have to make the public announcement in 5 days. And from the liquidation commencement date, let's say if the SR has been passed on first day of the month, the liquidator has to make the public announcement till the 5 of that day. But the liquidator, the creditor has right, creditor can give their consent by 6th or 7th. So in case the creditor has not give their consent 6 or 7, because they have right to till the 7th, or liquidator has made the public announcement. So in that case, what will be happen, or how the process will be done?
So in the liquidation regulation, it is provided, the voluntary liquidation regulation, it is provided that the company is required to pass the special resolution within 4 weeks of obtaining the declaration of solvency, and is required to take consent of the creditors within 7 days. If there are creditors, the company is required to take the consent of the creditors within 7 days. So this timeline, the bifurcation of timeline is provided in the voluntary liquidation regulations. So we have to read the code in along with this regulation. And regulation, as per the regulation, the timeline, the clock will start from the date of consent of the creditors. So the moment you are taking consent of the creditors, from that date, this the voluntary liquidation process has to be said as started. So the timeline for the entire process will start from that creditor's consent date.
But the subsection 3 says that the liquidation proceeding in respect of the corporate person shall be deemed to be having commenced from the passing of resolution.
There are the provisions are not in line, but in several cases where there are creditors, the timeline starts from the creditor's consent date only.
I would like to add one thing, with the clarity on one thing. You said that the timeline of voluntary liquidation initiation will start from the consent of creditors. In our previous discussion, you said that income tax authority dues will also be considered as a credit. So, matlab, like getting consent from income tax department is also required. Like, just
No,
for the
ma'am.
clarity's
I
sake.
have also said at that time only that for creditors, for income tax department's consent, section 178 is there.
Yes.
You're not
Yeah.
required to take consent of income tax department and other regulatory authorities. You know, you're not required to consider them as a part of creditor when it comes to creditors' consent under voluntary liquidation, because there are
Okay.
separate sections which require that you to take their consent. So for commencement of this voluntary liquidation, when the provision, as far as the concern of this particular provision is there, it says that 2/3 of the creditors. So this creditor you have to see from the books of the records of the company, and the creditors has to be bifurcated into secured and unsecured creditors, and you have to take consent of the secured creditors 2/3 and unsecured creditors 2/3.
Okay. Thank you.
Thank you so much.
Ma'am,
Let us-
myself is Suman Kumar.
Yes.
There is one query. Regarding my case, I was appointed voluntary liquidator. After doing all the things, getting even NOC from income tax department, I filed a request for remittance to the bankers. Banker was inquiring for what is the UIN number of the share. After that, while inquiring, I came to know that though the company filed the FCGPR, but FCGPR was not approved around 7 or 8 years back. After tracing, we were able to find that the application was pending with Forex Department of HDFC, Forex branch of HDFC. And while contacting with RBI, RBI said, sir, this is pending due to KYC of investor, non-providing of KYC of investor. And it will be issued only after getting the KYC of investor. While contacting the stakeholder, they are saying ki sir, the company has already, the investor company has already merged with some other company, and so it is not possible to get KYC. What would be the solution in this case? Can you please advise?
So again, it's a complete practical query. Practical concern arises from the, and it varies from case to case. So again, similar question, I believe somebody has asked sometime before as well. So I will advise in this case, sir, to have the consent of the AD bankers and to be aligned as per their requirement only, because when it comes to repatriation of money, you cannot repatriate the money without consent of the AD bankers. So certainly we have to be guided by AD bankers, legal team as to how to proceed in that particular
But
case.
I remember one thing. I remember one thing in one of our case. This happened that the FCGPR was not approved while making the repatriation, and certainly when we approached to the RBI, it all went into the compounding. So then the company has to go for the compounding first. Then when that compounding got over, then that voluntary liquidation process started. So it was a complete mess. So
But in this case, ma'am, the voluntary liquidation process already started. And
yeah, it is already started. And yeah, at that time only, while making the distribution, they realized that the FCGPR was not approved, as the sir said. So in that case, the compounding was only suggested.
And the compounding was taken by was done by the liquidator?
They acted, but they hired a separate consultant for that also, compounding, and they got worked in simultaneously, hand in hand, to complete all this.
In my case, even RBI officials agreed. Sir, I will not ask you to get it compounded, but at least provide the KYC. And the fact was communicated to the stakeholder, but even though the stakeholder is not able to provide the KYC details.
So one can do like one can transfer the respective amount to IPF because voluntary liquidation process cannot be stuck because of this KYC requirement. And because the timeline is already going, so you can transfer the amount to the IPF so that the liquidator, the respective shareholders can claim the amount at a later stage. And
it can be transferred to the IPF fund.
Yes, because you cannot just continue with the voluntary liquidation process for the indefinite timeline. So, and you cannot go to the NCLT unless you are done with the process. So you can transfer the amount certainly to the IPF account such that once you are with the NCLT, once you are in the NCLT's domain, then NCLT will certainly give the necessary directions to, comply with the requirements and complete the repatriation process. And transferring the amount in IPF does not mean that the amount is gone forever. It is about that, of course, the respective shareholders who are entitlees can claim the amount from IPF back. So they can certainly claim the amount from IPF fund at a later stage once the company is, under NCLT's domain.
Okay, that can be one of the
solutions. Yes.
Okay, thank you.
Okay, so let us continue. So again, there's one more example. The second scenario here, I think this scenario I have already discussed. Okay, so coming to the next example. So here, the amount is the total, the cash is 600 rupees. I have debt of rupees 100, brought forward losses, preference shares of rupees 200 and equity shares of rupees 800. Here, premium on redemption is rupees 200. Now, what will be the fate? How to distribute the money? So out of this total 600 rupees, I'm required to make payment for the debts first, which is 100 rupees. So this will be paid in full. The preference shares, I have to pay this premium on redemption along with the preference shares amount. So 200 plus 200. So I'm required to pay this 400 amount here. And the balance amount, which is rupees 100, will be distributed to the equity shareholders. Let us see this next example. So this next example is cash is rupees 600, debt is rupees 100, preference shares is rupees 200 and equity share is rupees 800. Here, say suppose this premium on redemption on equity share is rupees 200. Now, what will be the fate? How to distribute this amount? So the amount will be distributed in such a manner that out of this 600, I will distribute 100 rupees towards this debt, 200 rupees towards this preference shareholders. So I'll have balance of rupees 300. This 300 rupees will go to the equity shareholder. Because there is nothing called redemption on equity shares. This is just a trap here. So there is nothing called redemption on equity shares. So the surplus amount will go to the equity shares completely. And one last example is also there. It is, say suppose there is 600 rupees I have, debt is 100, brought forward losses is there. Now there is preference. There's series of preference in the preference shareholders. Series 1, 400, series 2, 300, and equity shareholders is 300. So out of this 600 amount, I'll pay the debt first. I'll pay the 500 rupees to both the series in proportionate manner, and balance will be
amendment.
And the balance amount will go to the equity shareholders. So there will be nothing balance after paying the preference shareholders. So no amount will be distributed to the equity shareholders. Can I say the company is solvent? Yes, the company is solvent, given that I am able to pay my debts. So to the extent I am able to pay my debts, the company is solvent. Now, there are certain highlights of this voluntary liquidation process. I'll just quickly cover that the voluntary liquidation process we all know that is shifted from Companies Act to IBC, and there were distinction in the Companies Act earlier that there was members voluntary winding up, creditors voluntary winding up. Now that these are not there. Now everything is voluntary winding up only, voluntary liquidation basically only, wherein you are required to take consent of shareholders, then consent of creditors if there are creditors, and then you have to proceed ahead with the process. So, and well, for the financial service sector entities, there is the IBC is not applicable, given that in the definition of corporate person, there is exclusion for the financial service providers. So in that case, the provision of under Companies Act has to be followed. If there are unclaimed undistribution proceeds, that amount will go to the company's corporate voluntary liquidation account, and how to deal with that account, my colleague will discuss in some time. Then the liquidators receives a receipt from IBBI. The amount that we receive, the money which remain with the unclaimed or undistributed, how to deal with that money. So that I said that my colleague will discuss in detail. Now coming to this entities eligible, as to what all entities are eligible and which all entities can go for this voluntary liquidation process. So of course, the first requirement is solvency. So a solvent company, either public or private, whether listed, unlisted, can opt for this voluntary liquidation process. LLPs can also opt for this process. Under Companies Act, unregistered companies, foreign companies, and financial service providers are required to opt for the voluntary liquidation, because these are not governed under voluntary liquidation under IBC. There are certain important preconditions, as I was saying, that I will discuss in detail at a later stage. So this is that particular stage. So this important preconditions for voluntary liquidation. As I said, that the prerequisite for a voluntary liquidation process is solvency of a company. I'll check what will I see to see if at all the company is solvent enough or not. I'll see the balance sheet of a company. I'll see that there are what all assets are there, what all liabilities are there, whether the assets are sufficient enough to meet all the liabilities. I can say that yes, the company is solvent enough. However, there may be some liabilities which may or may not be there in the balance sheet of the company. Say suppose there are contractual obligation. There are long-term supply contracts. There are guarantees given by the company. There are derivatives. In that case, how to proceed further? So, this is the reason that we take the declaration of solvency, and now the ambit, the area of this declaration of solvency has now been extended further, so that the directors are now also required to give details of the provisions that they have created for the statutory or contingent liabilities, etc. So what these contract or contractual liabilities, contractual obligations may have implication on the voluntary liquidation process. I'll just give one example. Like in many of the contracts, we have seen that in the event of default, one of the situation is winding up of the company. So if say suppose I have entered into a supply contract with any of the supplier of mine, or I have entered into any particular contract with any of my intercompany or any of the other related parties or any other party, say suppose for any of my continuing business of the company. And in that particular contract, there were event of default. That event of default generally contains this particular part that the company is going for the winding up. So the moment I'm going for the winding up, I am triggering that event of default. In the moment I'm triggering the event of default, the necessary liabilities will be there on me. So the directors are also required to account for these kind of liability, as to if at all there are any contracts, any particular guarantees given by them that may impact the voluntary liquidation process, or that may impact the solvency of the company, that are also required to account for at the time of commencement of voluntary liquidation process. Now, how to deal up these kind of issues when the voluntary liquidation process, the company is considering to proceed ahead with the voluntary liquidation process. So generally what we say, the requirement is that the moment you are starting with the voluntary liquidation process, you are required to obtain the declaration of solvency, and declaration of solvency has to be accompanied by the 2 years of audited financial statement of the company and the as on date, the accounts of the company. That as on date account is not required to be audited. So there's nothing mentioned regarding the auditing of that account. But say suppose the financial year of the company closes on 31st of March. The voluntary liquidation process of the company, say suppose, starts from 5th of May. So this period of 1 month and 5 days are still there, where the company may have entered into further transactions which have impacted the balance sheet or the financials of the company. In that situation, what is to be done? So in that situation, we always advise to have up-to-date account as well, along with that account of 31st of March, the audited account of 31st of March. Have that account as on date and provide that to the liquidator. because once the company is in liquidation, there will be no balance sheet and profit and loss preparation. There will be only liquidator's receipt and payment account. And the liquidator is also required to file the income tax return for the entire year. Even if the liquidation process started from 5th of May, I am required to file the income tax return with effect from 1st of April to the 31st of March. So for this 1 month and 5 days period as well, I am required to file the income tax return. So how to account for that particular amount or that particular transaction in the income tax return? So in order to account that particular expenses or income whatsoever the company has received, it is always advised to have audited account from the company as on the liquidation commencement date, to have that audited accounts in hand, such that once the company is in liquidation, the liquidator will be able to see the actual position of the assets that are required to be realized, the actual position of the creditors, because the directors are as a part of declaration of solvency, the directors are also required to give the estimates of assets, estimate of liabilities, and the details of creditors which are there as per their record. So those details will be there. So based on those records and based on the audited financial statement of the company, the liquidator will actually be in a position to analyze as to what all assets are realizable assets. There may be certain assets which are not realizable. Say suppose there are certain laptops lying on there, some chairs are there, which may not have any value. So liquidator is required to bifurcate in the realizable assets and the liabilities which are required to be paid. There may be certain liabilities which the company has already paid off. So we also advise the companies to pay off those liabilities which you feel that you can, otherwise you can deal with those liabilities, like by mutual set off, by mutual agreement, etc. So give a balance sheet to the liquidator to the extent you can give a clear or clean balance sheet to the liquidator, so that it will be easier for the liquidator to continue with the process. Because once the company is in liquidation, the directors will have no say. Then the process has to be, carried on by the liquidator only. So we always advise the companies to, before starting the liquidation process, do your homework. Start with the assets. Suppose there are buildings, there are flats, etc. There are plants which you otherwise do not want to be, liquidated or realized by the liquidator, and you can certainly get a better acquirer for those assets. So you can sell those assets before starting the process and can realize the money. So once you have the money will be in the books of the records of the company and will be certainly in the bank's accounts of the company. It will be easier for the liquidator to continue the process and complete the process within the given timeline as provided in the liquidation regulations. So this is certainly certain things which we all should keep in mind while, seeing the solvency of the company as to if at all the company is solvent enough or not, and what all can trigger the solvency of the company. Now, coming to the process overview, so I'll hand it over to my colleague Neha Malu. She will take you all through this process overview. And again, there are several questions, practical questions that we have jotted down that we will discuss after this process overview. Thank you. Neha, can you please share your screen, or you want me to continue with this?
Hello everyone. Is my screen visible to all?
Yes, ma'am.
Thank you, sir. So basically, we'll be talking about the process, voluntary liquidation process, as in what all do we need to see, what are the checkpoints before a corporate debtor basically opting for the voluntary liquidation process. So if at all any company is wanting to go for voluntary liquidation process, there are certain checkpoints which are to be ensured before we take any decision of going ahead. So first of all, the prime most important point which is to be checked is whether the corporate debtor has committed any default or has not committed any default. Because if it is proved that there has been any instance of default, then the option of going for voluntary liquidation does not comes into picture. Now, what does this term default implies? This term default implies that whenever the debt was due for payment, the corporate debtor has failed to acknowledge that debt and had failed to subsequently pay the amount as well. If this be the case, voluntary liquidation cannot be opted for. And this is quite logical too, because if I'm not able to service my debts properly, how I'll give a declaration that I'm solvent enough to go for voluntary liquidation. So this is the first check that is to be ensured. Thereafter, a declaration of solvency is required to be obtained from majority of directors. Now, recently there has been an amendment in this particular regulation of voluntary liquidation process, wherein initially there were just 2 points which are to be mentioned in the declaration of solvency by majority of directors. First was either the company do not have any debt, and if the company has the debt, it will be able to service those debts out of the assets which the corporate debtor has. And the second point was that the corporate debtor is not going for voluntary liquidation with an intention to defraud anyone. So these 2 points were already there previously, and recently a new addition has been included in the regulations, which provide that the declaration of solvency given by majority of directors shall also clarify this point, that if at all in future there comes any obligation towards statutory dues, so that the corporate debtor will be able to service. Now, what kind of statutory dues? So, for example, any past outstanding income tax dues, which is like commonly seen in most of the cases, like recently we saw in one of the liquidation matters which we are handling, some old outstanding income tax dues of, say, for example, 2007-8 were called for payment. So this kind of information is also required to be mentioned in the declaration of solvency. So first point was that the corporate debtor or the corporate person has not committed any default. Second is the declaration of solvency. Third point is with respect to taking members' resolution. So there could be, it depends on case-to-case basis as to which particular resolution is required to be obtained. So as we read under Companies Act as well, there are 2 kinds of resolution which is taken. One is the special resolution, one is the ordinary resolution. So if a corporate debtor is voluntarily going for this process, then a special majority, that is a special resolution, is required to be obtained. However, on the contrary, if voluntary liquidation has been auto-triggered, for example, a company was formed for a particular project and that particular project has been completed, and now it is called to dissolve this company, and therefore it implies towards a auto-trigger of this voluntary liquidation process, then in this scenario, ordinary resolution suffices. And last, and the fourth point, it depends on case-to-case basis. For example, case-to-case basis, from that I mean, if there are creditors, then the creditors' approval is required to be obtained. And if there are no creditors, this particular steps get skipped out from the checks that are there for voluntary liquidation process. So after we have crossed all of these 4 checkpoints, and the company shifts from being into normal process to into voluntary liquidation, from normal operations to voluntary liquidation. Next, if I move ahead to the process timeline as to what is required to be done within which timeline, there's a timeline which we have prepared, and I'd like to run through this particular timeline one after other. So first of all, there's a requirement of taking a declaration of solvency from majority of directors, which I've already addressed in my previous slide. From the date of taking of this declaration of solvency, the clock starts ticking. So after this declaration of solvency has been taken, within 4 weeks of this particular date, SR is required to be passed for taking the approval of the shareholders, or say the contributories of the corporate person, which is opting to go for voluntary liquidation. Next is the case with respect to approval of creditors. Now, if at all there are any creditors, then only this particular steps comes into picture. Otherwise, there is no such concept of taking approval of the creditors. And the date or the time for commencement of voluntary liquidation process starts on the date of taking SR.
Madam, here creditors includes financial creditors and operational creditors, or only financial creditors?
Sir, it includes all class of creditors, and in fact, for example, there are secured and unsecured. Then we have to take approval of 2/3 of the secured creditors and 2/3 of the unsecured creditors separately. And say, for example, my SR was, we took the SR on 1st of April, and thereafter this 7 days timeline for taking approval of the creditors start ticking. Now, for example, I've taken secured creditors approval on 2nd of April and unsecured creditors on 3rd of April. Then my liquidation commencement date will begin on 3rd of April, the last date on which I've taken the approval of the creditors. But all of these approvals is required to be taken within 7 days of passing of the SR. So this becomes our liquidation commencement date. And right after the liquidation commencement date, the liquidator's role comes into picture. Because after the company has come from the normal operations, the company has shifted to voluntary liquidation. The board of directors of the company gets suspended and the liquidator takes charge of everything. So right after the appointment of liquidator, a public announcement is required to be made within 5 days of the commencement. So in our case, the example which I took, 1st April was the date of shareholders. 1st April was the end of the time on which I took the shareholders approval. 2nd April was the date on which we took the approval of secured creditors, and 3rd April was the date on which we took the approval of the unsecured creditors. Now from 3rd April, within next 5 days, which is 8th of April, the liquidator is required to make a public announcement. Public announcement inviting claims from the stakeholders. And this particular announcement is should also mention the date on the last date on which the claims shall be admitted by the claims can be submitted by the stakeholders. And this last date is 30 days from the date of liquidation commencement, which in our case is 3rd of April. So right after making the public announcement, intimation is required to be given by the IP who has been appointed as a liquidator to IBBI, stating that I have been appointed as a liquidator of so-and-so company for the purpose of voluntary liquidation of so-and-so company. Thereafter, a notice to ROC IBBI is also required to be given within 7 days from the liquidation commencement date in case there are no creditors, and within 14 days from the date of shareholders approval if there are any creditors. So this timeline also justifies with the already stated provision of taking creditors approval. Next is the timeline for submission of claims by the stakeholders. As I already mentioned, at the time of making public announcement, the liquidator states in that public announcement that claims can be submitted latest by 30 days from the liquidation commencement date. And if after submitting the claims, if the stakeholder thinks that the claim is not correct, or if there are any modification in that particular claim, so that thing can be done up till 14 days from the last date of submitting the claim, which is T plus 44. T is the date on which the liquidation has started, and 44 days is the utmost timeline which has been given for either withdrawal or modification of the claim which has already been submitted.
Madam, in case the creditors take more than 7 days for giving their approval, then what?
Sir, because the law has statutorily provided this timeline, so that cannot be breached, obviously. And we cannot even say that we can go for condonation because that is also not possible. Because as Barsha ma'am already addressed, in case of voluntary liquidation process, the role of NCLT comes at the last stage, at the latest stage when the dissolution application is filed before NCLT. So that cannot be done. And because voluntary liquidation is something which is a pre-planned activity and not a sudden activity which has triggered, therefore, the management of the company, because as I already mentioned, till the liquidation commencement date, it is the role of the management of the company. From liquidation commencement date till onwards, it is the role of the liquidator. So management will have to make proper arrangements that they are able to meet the set timelines. Thereafter, hello, sir. Yeah. Is that addresses your concern, sir?
Yeah, got it. Yeah.
Okay, sir. So moving ahead to the another concern, which another process that has to be ensured is with respect to submission of the prelim report by the liquidator. So prelim report is basically, I would say, a snapshot of the plan which the liquidator has prepared for the purpose of completing the voluntary liquidation of the corporate debtor. This prelim report needs to mention the capital structure of the corporate debtor, the estimated value of assets, liabilities, the plan of action which the liquidator is opting for to complete the voluntary liquidation process, the liquidator's fee, and other details which has been provided under the regulations. These are the prelim information which is required to be mentioned in the preliminary report, which is submitted by the liquidator to the corporate debtor within 45 days from the liquidation commencement date. Right after this step comes.
Madam, in case of preliminary report, it is to be submitted to the corporate person. So the
Right, ma'am.
corporate person, as in the promoters, we have to submit, or to the erstwhile directors we have to submit,
Ma'am, this
or
is
just send it to the registered office.
Ma'am, generally it is submitted to the registered office, because if I say that or maybe to the contributories is required to be submitted, because what happens in case of voluntary liquidation, it is the contributories who take the decision. So for example, if I have to take any suggestion, if I compare it with the compulsory liquidation, there the role of SEC comes into picture, Stakeholders Consultation Committee. However, in case of voluntary liquidation, it is the role of the contributories. Therefore, this prelim report is required to be addressed to the contributories of the corporate debtor.
So at the individual addresses of the contributories, we will have to send one copy.
We can simply mail it to the mail addresses that we have, instead of sending it to each of the contributories individually.
Okay, and whether
That
any
will,
requirement to submit to the IBBI, because it is not specified.
no, ma'am, there is no such explicit requirement with respect to such submission. Therefore, not necessary. However, in case IBBI sought such information, then we'll have to anyways submit it to IBBI. But that
Okay.
depends on case-to-case basis.
Okay, thank you.
Neha,
Yes, ma'am.
just a query regarding the submission of the preliminary report you said. I'm just jumping to the timeline. Like, suppose it needs to be completed within 90 days, but for any chance, like it goes beyond 90 days or beyond 270 days. So, like, are we supposed to submit any progress report also to the IBBI, or only the final completion report is required to be submitted to the NCLT?
So, ma'am, in case of voluntary liquidation, there is no progress report concept as such, and our concept of status report is there. So every time we are crossing this 90 days or 270 days timeline, we have to call the meeting of contributories within 15 days of the expiry of 90 days, 270 days, as the case may be. So this
Okay.
there has, sorry.
Yeah, understood.
Right. So this amendment was recently was included in the voluntary liquidation regulations, 31st January, if I'm not mistaken, wherein earlier the meeting of contributories was to be called after the expiry of 1 year timeline from liquidation commencement date. Now this meeting timeline has been reduced from 1 year to 90 days or 270 days after expiry of every 90 days and 270 days. And during that part, sorry, ma'am.
Sorry, you continue, then I'll speak.
Yeah,
Right.
one more
Yes,
thing, Neha.
Yes, ma'am.
My point is, you said that preliminary report need to be submitted with the contributory. I don't agree. It need to be submitted with the corporate person, and corporate person means the company only. Because when you will check the regulations of this voluntary regulation, the voluntary liquidation regulation,
Yes, ma'am.
corporate person represent the company only. This is
Okay.
my understanding. You can clarify.
Surely,
You can
ma'am. I'll
clarify on this
check
point.
the
I will be
provision.
glad.
Sure. Sure.
Neha?
Ma'am, one more query in this
I'll just quickly
status
answer
report.
this query regarding this submission of prelim report. So the idea basically regarding this prelim report is that we are submitting to once the special resolution is passed, then we are answerable to the shareholders as to what we are doing as a liquidator of the company, how far we have realized, or what plans we have with respect to realization or with respect to distribution. Because once the process is there, once the process started, then the contributors will always will be in a hurry to have the money back, the surplus money back to them. So the only questions that they have, that so far what you have done and by when I'll get my money. So prelim report is all about to give that suggestion to them, give that timeline to them, or give that overview to them, that see, so far there are this much of assets in the company that I'm required to realize. So, and this is my future prospect, like this is the prospects through which I have decided to move ahead with the voluntary liquidation process. If you are saying that you are required to submit it to the company, in the company to whom? To the management of the company. What will management do? There's nothing for the management to do here. The management is to assist only, because the moment the voluntary liquidation process started, then the business of the company ceased to exist. Only to the extent for the voluntary liquidation process of the company you are required to continue, you will continue. Hence, the report, whether it is prelim report, whether it is status report, you are always required to submit these reports to the contributors of the company. Of course, you can keep the management, the respective directors who are coordinating with you in CC in the reports while you are sending the reports to them, but the report should always be submitted to the contributors of the company.
Okay, so we can do one thing. We can move hand in
Yes,
hand.
Neha,
We
you can
can
continue now.
Okay.
Neha?
Right, ma'am. Yes.
Yes. So just in a nutshell, I just want to recheck and reconfirm that for voluntary liquidation, the different reports which are required to be submitted is one, the preliminary report that is to be submitted within 45 days. Second
Right.
is the status report, which is earlier was to be submitted on yearly basis, but now with the latest amendment, it is to be submitted or it is to be at least shared over mail or through a hard copy to the corporate debtor within 90 days or 270 days, as the case may be, of the voluntary
Right.
liquidation.
Yes, ma'am.
That is correct. And once
Right,
all
ma'am.
these
So,
reports are done, we are not required to submit any report or a progress report to IBBI or NCLT. IBBI, as the case may be, whenever any queries are arising from them, but otherwise we are not required to submit any specific or special report as a part of the compliance with the NCLT or with the IBBI, and only with the NCLT, IBBI, the final report, once the voluntary liquidation gets over, the report is required to be submitted. That is correct, right?
Right, ma'am. Just a point which I'd like to add over here. So, after this recent amendment which I mentioned, this status report is also required to be submitted with the board within 7 days of the meeting, which I'll be covering in the later part of my presentation. This has been a new addition. Earlier, it was not there.
Board means IBBI.
Right, ma'am. Board means IBBI.
So now, in
Or
that
maybe
case,
I can share the amended provision. I think that would help us in better understanding. Just a second.
please.
Madam, can you also cover what is the Companies Act forms that need to be filed at the time of liquidation commencement, voluntary liquidation commencement?
Sure, sirs. We have already noted this particular concern, and while addressing the questions which we have already jotted down, we'll be addressing this issue as well.
Thank you.
Right. Sir. Is my screen visible, ma'am?
Yes, it is.
Yes.
Right. So this is a new addition, sub-regulation 4, which states that the liquidator shall file the status report with the board within 7 days of the meeting of contributories. Now, every time we are crossing this timeline of 90 days or 270 days, as the case may be, we have to call the meeting of the contributories within 15 days. And after the meeting of the contributories, the status report is also required to be submitted with the IBPI within 7 days of the meeting. This is a new addition which was included recently on 31st January in this particular regulations.
Okay, can you just tell the number of the regulation, please?
It is 37/4, ma'am. Regulation 30, sub-regulation 4 of regulation 37.
Regulation 37/4.
Right, ma'am. Regulation 37/4.
Okay. All right.
So, ma'am, in this case,
Thank you.
this timeline can be adhered for a new liquidation which commences after 31st Jan or has just begun somewhere before 31st of Jan. But what can be done in case the liquidation had begun in like 2023 earlier and it has already crossed this 12 months period? Then when does this for existing liquidation, when does this timeline of 90 days would start? Because it will be difficult to calculate the 3 months period in case the liquidation has started from say 2022 or 2023 and is pending due to this income tax refund issues and other matters.
Right, ma'am. So, like, no such clarification has been provided by IBBI so far. But what our view is, say, for example, our voluntary liquidation process initiated in say 2021, and it is still continuing. And this notification was brought on light on 31st of January. So maybe we'll calculate this 90 days or 270 days as the case may be from the date of this notification or the date on which we are completing the 1 year timeline, whichever is earlier.
So this is what our view is. But as of now, there has been no clarification as such from IBBI
Right,
on this.
because one case, one of the cases, this the 1 year period, the subsequent year end is happening on, like, say, 20th of February. So we were into a fix whether to start counting it like from the 2021 or from 25th of February, where the actual 12 months period end, and then to comply with this 15 days and 7 days time.
So maybe I'd request Barsha ma'am to address on this particular concern. Just a second.
Even I
Yes.
have the same
So-
query because I have a voluntary liquidation which
Yeah.
is on since 2020
The
actually.
thing is that any particular circular, until unless specifically contains the part of retrospective applicability, the circular will always be applicable from the prospective effect and cannot be said to be applicable from a retrospective effect. Say suppose the voluntary liquidation process of a company already started, and then at a later stage, after the expiry of 90 days or 270 days, circular come and that says that if there are no creditors, you have to complete the process in 90 days. If there are creditors, you have to complete the process in 270 days. Can I say that that particular circular was applicable on me as well? Because I have already crossed that timeline of 90 days or 270 days. I cannot say that, but that particular timeline was applicable in my case. So until unless it is specifically mentioned in the circular or notification itself regarding the retrospective applicability of a particular circular or notification, in our view, these circulars or notification will always be applicable from prospective effect and cannot be from the retrospective effect.
In that case, ma'am, for the case which has been initiated.
Is there any other question, Neha, on the chat box as well? We can see the chat box simultaneously.
So the question was from 31st January,
Okay, so there
we
is
will
a question whether the approval from the creditors is also required to be taken within 4 weeks from the declaration. No, the timeline for approval of creditors is provided in the regulation. It says that within 4 weeks of declaration of solvency, you are required to take consent from the shareholders. And after shareholders approval, within 7 days, you have to take consent of the creditors. So there is a separate timeline for consent of the creditors. If I was audible to all?
Yes, ma'am. Ma'am, with respect to the timeline you have said for the 90 days and 270 days, which will be applicable from the prospective case and not the retrospective cases. So a case which has been initiated in 2020 or 2023, for that cases, the timeline will remain 12 months for the all the meeting, or we have to calculate 90 days and 270 days from the, as Neha said, from the notification date, or
So here it is important to understand that the timeline, as I said earlier, that the timeline is for what? Timeline is for the liquidator to complete the process. The process is about realization and distribution. For this realization and distribution, I have given this timeline of now 90 days and 270 days. Earlier it was 1 year. So this timeline is on me. Now the process which has already started in 2020, the 90 days or 270 days, whatsoever timeline is now there, has already expired for those liquidation. Now we cannot say that those timelines were there in my case as well, because as per the earlier regulation as well, after completion of that 1 year timeline, I had to hold a meeting of contributors. I had to seek consent of the respective contributors to continue with the process, which certainly I have done. So I cannot, this cannot be taken of we cannot be taken that 90 days or 270 days timeline was applicable on me. And even if, say, suppose those timeline was applicable on me, what was the requirement? The requirement was to take consent of the contributors, which I have taken. The contributors have allowed me to continue with the process, and therefore the process is continuing. So there is no harm. There's no, laws that I'm making to the liquidation process. Liquidation process certainly is stuck because of some of the other statutory obligation or some income tax refund which is pending to be received or some other matter. And certainly I'm taking the consent of the contributors, as and when I'll be done with the process, I'll submit my report to the NCLT for the processing or for the dissolution.
thank you, ma'am. Thank you, Neha.
So basically,
Thank
we
you
will
so much.
not be required to submit the status report to the IBBI in the interim period.
So, ma'am, there is no interim period reporting requirement per se in the liquidation regulation. This is only provided in case of compulsory liquidation, which is as per liquidation regulation and not voluntary liquidation regulation.
No, the
In
interim
liquidation
period
regulation,
means
the requirement is to submit. Ma'am, just allow me a minute to continue. So this in liquidation regulation, the liquidator is required to report to the NCLT. Why? Because NCLT has appointed the liquidator. And being a court officer, the liquidator is required to report to the NCLT that what the liquidator has done in that quarter period. How far the SS have realized, what actions the liquidator has taken. So these are required to be reported in the progress report when the liquidator is liable to report to the NCLT. Here in voluntary liquidation process, the liquidator is liable to report to the contributories. Every time I am not required in voluntary liquidation process, there is no particular requirement to submit any progress report to the contributories. However, when the given timeline is crossing, at that time I'm required to take consent of the contributors to continue with the process. Hence, we always say that during the meeting itself, present the status report with the contributors before the contributors and say and give the entire overview of the SS or overview of the process that you have handled so far, how far you have realized the SS, how far you have distributed, and why the process stuck, why you are unable to complete the process within the given timeline. So this status report should be presented during the meeting. If you are conducting the meeting, if say suppose there was only one contributories, of course at that time you are not required to conduct any meeting per se. But if the contributory requires you to have a meeting, to have a discussion, of course, you can have a meeting, have a discussion, present the report, and then take the consent and continue with the process further. Yes, ma'am.
exactly what we are discussing. Then I was asking the status report, then it is not required to be given to the IBBI unless we cross this timelines of
Yes.
90 days and 270 days. And
Yes.
in
In
case of
between, there is no
existing,
reporting
right,
requirement.
in case of existing liquidations begin prior to the latest amendment, then in that case, the 12 months period will apply to them.
In case?
In existing cases where the liquidation has already begun somewhere in 23 or prior to this 31st Jan notification, it will either be the 12 months period, or for the purpose of submission of status report, it will be either the 12 months period or 90 days or 270 days starting from 31st of Jan.
So let us understand in this way that say suppose that my liquidation process has started just before this notification came. And at that time, I have not completed that 90 days period yet. And there are no creditors in the company. So I have no reason to continue for a year. I have this timeline of 90 days. I can certainly abide by this timeline of 90 days. I cannot take, unnecessary shelter of the earlier regulation that I'm not required to comply with this because there are no creditors. There is no reason for me to stuck for a period of a year. But if say suppose that 90 days period is already elapsed and now the notification is there while my process is continuing, can I say that I am required to comply with the circular? That cannot be a practical approach to have that circular, applicable in case of the companies wherein that period of 90 days or 270 days have already expired. So accordingly, the practical view has to be taken and this will vary from case to case.
Thank you.
I hope I am clear on this.
Yes.
Okay, Neha, you
Yes.
can continue further.
Right, ma'am. So we discussed till the submission of preliminary report, and next moving to the verification of claims. The liquidator is required to verify the claims within 15 days. Sorry, within 60 days from the liquidation commencement date. So last date for submitting the claim was 30 days from liquidation commencement date, and the last date for verifying the claims was is 60 days from the liquidation commencement date. Now, whatever decision the liquidator has taken with respect to the claims of the stakeholders, the same is also required to be intimated to each of the stakeholders, whether the same has been accepted or rejected within 7 days from the date on which the verification has ended. Next, moving on to the preparation of list of stakeholders. So this will vary, this timeline will vary from case to case basis. If there are creditors,
then the timeline is T plus 75, which is 75 days from the liquidation commencement date. However, if there are no creditors, which is, as we discussed, this 90 days timeline gets applicable. In such scenario, the timeline which has been provided in law for the preparation of stakeholders is T plus 45 days. After this, yes, ma'am, do
Yeah.
you have like, right?
Yes.
Yes.
There was one query. Verification of claims by liquidator is to be completed from within 60 days. And
Verification of claims, yes.
yeah, and preparation of list of stakeholders is to be prepared from within 45 days.
Ma'am, this 45 days timeline is there in case where there are no creditors as such. So
Okay.
I'll tell you, in 2022, if I'm not mistaken, in the month of September, this amendment was brought in where this timeline was reduced reduced to 90 days to 70 days. So at the same time, there is a model timeline which is given in the voluntary liquidation towards the end of the regulation, which says that if there are creditors, then 45 days timeline is there. If there are no, if there are creditors, the 75 days timeline is there. However, if there are no creditors, then 45 days timeline is there.
Okay,
This
okay,
was
clear,
right.
clear. Thank you.
Right, ma'am. Thereafter, if a creditor wants to appeal against the decision which has been taken by the liquidator, so here the creditor can take resort to section 42 of the Insolvency and Bankruptcy Code, which talks about condonation of delay. So condonation of delay is one of the actions that the creditor can take in case the debt has not been submitted within, the claim was not submitted within the timeline provided. And alternatively, if the liquidator, say for example, I'll explain this point with the help of an example. Say I'm a creditor and I've submitted claim for 100 rupees. But the liquidator, after considering the books and all the accounts and all, have only admitted my claim to the extent of 80 rupees. So in case of dispute, I can take resort to section 42 of the Insolvency and Bankruptcy Code, being a creditor, and file an application before NCLT for passing the judgment against if there is any dispute between the decision of the creditor and the decision of the liquidator. Next is with respect to distribution of proceeds. So a corporate debtor has various assets, which we are seeing like flats, buildings, and other assets. So once those assets has been sold off, the proceeds has to be distributed within 30 days of realization. So there could be an instance, for example, a company which is in voluntary liquidation has 5 different assets. 2 of them have been already sold off, and the remaining 3 are yet to be sold. In that case, what the liquidator can do is, because of this 30 days timeline, make an interim distribution first and thereafter subsequent distribution as and when the money is realized from the sale of other assets. But this timeline has to be required to be ensured that whenever there has been a realization, within 30 days of that realization, the proceeds is required to be distributed first to the outsiders and thereafter to the insiders. From outsiders, I mean the creditors and who are not forming part of the shareholder group of the company, and the waterfall arrangement as is provided in the section 53 is required to be ensured. After this distribution, if there is any unclaimed amount in the corporate voluntary liquidation account, this has to be deposited in the unclaimed amount. And lastly, a final report is required to be submitted with the ROC, IBBI, and adjudicating authority. Now, this particular report brings the voluntary liquidation process to the end. It's just that the dissolution application is pending. Right after submitting this particular final report, this timeline of 90 days to 70 days gets over, and a final what we call the dissolution application is required to be filed with the adjudicating authority, that is the NCLT, for dissolving this corporate debtor. So this is all in all the holistic image of the timeline which is required to be ensured. Next, we move ahead to the timeline.
Ma'am,
Yes, ma'am.
one
Right.
query.
Yes, ma'am.
In this case of submission of final report, the liquidator will be deemed to complete the winding up from his end upon submission of final report, correct?
Right, ma'am. Just the
Or the
dissolution part
clearing,
is pending.
because the practical issue what arose was the payments to the contributories was made within the stipulated period, but then after that preparation of final report, getting the liquidation account audited, and then submission of this final report to ROC or IBBI will take some time. of at least say 15-20 days. So can we deem the process to be completed within the period of 90 days or 270 days if the payments to the final payment to the contributory has been made and the bank account has been closed as on that 90th day?
No, ma'am. So this process comes to the end upon submission of the final report.
Okay.
Right. Rajesh, sir,
Madam,
you would
my
like to?
question is,
Yes.
my question is regarding holding of contributory meeting of contributories. My case is already 1 year old, and one meeting of contributories has already been held. So now next I'll be holding meeting of contributory next meeting within 270 days or 1 year, as earlier it was 1 year.
Right. So as Barsha ma'am addressed this concern, yes, she mentioned that this is a prospective amendment. So whenever an amendment comes, generally it is prospective in nature. That is, it applies to the new voluntary liquidation proceedings which have started. So this will depend on case to case basis. But at the same point, if, for example, in our case, there were no creditors. That, for example, there were no creditors, and we were supposed to complete the process within 90 days timeline, 90 days from the liquidation commencement date. And this 90 days timeline, they got extended on 15th of January, 15th of January 2024. Now, the question arises, do we need to call the meeting of contributories basis this new amendment, or can we take shelter under the previous provisions which provided for calling the meeting after the end of 1 year? So in this present case, it will not be good to say that, because we cannot take shelter basically under the old provisions, that we'll wait for 1 year because our process started earlier before this requirement of calling the meeting of contributories on a shorter period came. So in this case, we cannot say that, and therefore the meeting is required to be called within 90 days and not after the end of 1 year. But this will vary on case to case basis. So considering all the facts of the case, we'll have to take a prudent decision as to which particular course of action would suffice the provisions of law.
Okay.
Right. I think there's some issue. Just a second. But you can't make queries.
Neha, in fact, there was one query asked by one participant that what will happen if, say, suppose I'm already done with the process. I have realized all the assets. I have distributed the surplus money and I have submitted the final report with the NCLT, right? And even after submitting the dissolution application along with final report with the NCLT, say suppose there are certain expenses that I'm required to meet, or how to deal with those expenses. Should I make the final distribution before filing the dissolution application or after filing the dissolution application? How to deal with that particular situation? So here I would like to highlight a bit that nowhere in the liquidation regulation it is particularly mentioned that you are required to close the liquidation account before filing the dissolution application. So what should be the practical approach? The practical approach should always be to complete the process from your end, not to make the final distribution. Distribute the extent, say suppose if you have realized the 100 rupees, out of the 100 rupees you have make the payment towards the claim received to the extent of 20 rupees. You still have 80 rupees in hand. Out of this 80 rupees, you are required to make distribution to the contributories. So my approach will be to distribute at least, out of this 80 rupees, to distribute at least 60 rupees among the contributories in the proportion of their contribution in the capital of the company, and still retain the 20 rupees or say suppose 10 rupees in the liquidation account. Why so? Because say suppose once you file the dissolution application, it is not that within a month of filing the dissolution application you will get the dissolution order. That may take some time. Even sometime it takes years, to get the dissolution order. In between, there may be certain obligations on the liquidator to meet for. So whether the liquidator will meet these liabilities out of his own pocket? Certainly no. So what is to be done is to file the dissolution application with the NCLT and not close the liquidation account at that time, when the seek first direction from the NCLT to make final distribution and close the liquidation account. So the moment the NCLT gives you direction to close the liquidation account and make the final distribution, then make the final distribution, close the liquidation account, file an affidavit in this regard with the NCLT, and then you are done with the process. Because at that time, you will certainly have an order in hand that now, as per the NCLT's order, you are done with the other process as well. So there will certainly be no other liabilities, and of course, the NCLT will pass a dissolution order. But the moment you are filing the dissolution application, if you close the liquidation account, you'll make the distribution as well, then certainly you will be in the loop, to make the further expenses. Once the money is gone to the contributors, you cannot expect them to give you money back. Well, it has happened in some of the cases, when we have asked the contributors to refund some monies because at the later stage, there were certain expenses that we were required to pay. So we have asked the contributors to refund some of the monies out of the surplus money that we had distributed so that we can meet the expenses towards liquidation expenses. So it is always advised to not to close the liquidation account at the very moment you are filing the dissolution application, but to wait for the order of NCLT. And the moment you are having the NCLT's order in hand, then close the liquidation account, make the final distribution of which will of course be a very small amount, need not be a very large amount that you are required to keep aside. Just keep aside a small amount so that at least whatsoever expenses will arise in between, from the date of filing of the dissolution application till the time of getting the dissolution order, you'll be in a position to meet those expenses as well. This is our.
Can the liquidator take some provisional amount and account it in the final liquidation receipt and payment account towards these expenses?
This is, yes, because this voluntary liquidation process is completely contributories driven process. So here, if say suppose contributories are allowing you that please close the liquidation account, make the final payment to us after keeping aside certain amount with yourself only, that whatsoever expenses will be there, you will make those expenses out of those amount that you are keeping aside. And even after, say, suppose dissolution, if there will be certain amounts remain with you, that amount again, you will distribute to us in the proportion of our contribution. So this kind of, caveat can be taken at the time of making distribution to the contributors, and accordingly, liquidator may keep the money with him if the contributors are allowing the liquidator to do so.
Thank you very much.
Yes, Neha, you can continue.
Right, ma'am. So last we discussed till the process timeline as to what all to be ensured within what all timeline. This particular slides reflects the timelines which are specific for liquidator to ensure. Like for example, within 5 days from the liquidation commencement date, a public announcement is required to be made, as I already discussed in the format provided under Form A. Thereafter, the public announcement should mention the last date for receiving the claim, that is 30 days from the liquidation commencement date. The claims are to be verified within 60 days from the liquidation commencement, and whether the same has been accepted or rejected is required to be intimated to the concerned stakeholders within 7 days from the date of verification. And if at all the creditors want to appeal to the NCLT against a decision that has been taken by the liquidator, there is a timeline of 81 days which is provided. This is merely a reiteration of the points which we have already discussed. Moving on to the liquidation commencement date. So this point also indirectly we discussed during our deliberation. If there are shareholders and no creditors, in that case, the date of shareholder resolution, from the date of shareholder's resolution, the liquidation commencement date begins. But if there are creditors, the date of creditors approval would be taken into consideration. And if say there are 2 classes of creditors or say 3 classes of creditors, then the later date has to be taken into account. However, one thing which we need to ensure that creditors approval is taken within the time span of 7 days from the date of shareholders approval. Next is the consequences of commencement of voluntary liquidation, as in if a company, if a cooperator gets all the required approvals and then it slips into the voluntary liquidation process, and what all consequences do we see in that case? So first of all, the cooperator ceases to carry on its business, but exists until dissolution, because until unless the dissolution order has been passed, we cannot say that the cooperator has ceased to exist, because dissolution in a way is equivalent to death.
dissolution of a corporate debtor is like death of a company. So until and unless a death has been allowed, basically a dissolution order has been passed, we cannot say that the corporate debtor has ceased to exist. But it ceased to carry on the business because voluntary liquidation has been opted for to take the company towards its dissolution. Next, second point, the directors ceases to hold office and the control comes in the hands of the liquidator. The registered office of the corporator stays till the dissolution order is passed, and the employees also ceases to exist. So the initiation of liquidation, because the corporator has ceased to carry on its business, there is no need to keep the employees as well. However, certain retainers can be kept basis the decision of the liquidator for the requirement of filing of income tax return of the corporator till the dissolution has been filed. So with respect to this issue, whether an income tax return is required to be filed or is not required to be filed, if a company goes into voluntary liquidation, this will be addressing in the Q&A round, which we have planned for the last segment. And fifth point is with respect to interest on debt. So here there is a disconnect, which I feel. So the claim which a stakeholder submits is up till the date of liquidation commencement date. So in case of insolvent companies, it is quite likely that the company will not be able to service those interests given that it is short of funds. But in case of voluntary liquidation, we always say that there is enough surplus to feed the stomachs of all the stakeholders. So in that circumstance, if we say that the interest gets accrued only till the date of liquidation commencement date and not subsequently, there is a slight disconnect because in case of voluntary liquidation, the company is not insolvent in the first place. The company is solvent and is very well in the position to service those debt. But the provision of law is such that the interest gets accrued only till the date of liquidation commencement date. Thereafter, the next point is with respect to consolidation of suits. So unlike in case of compulsory liquidation, voluntary winding up does not stay suits or by or against the company. So as we see in case of compulsory liquidation, there are two steps. One is the CIRP, and if the CIRP fails, the company steps into liquidation. So right after the CIRP application is admitted, there is a moratorium, and therefore no suits can be filed by or against the corporate debtor. But similar provisions are not there in case of voluntary liquidation. And in case there are any further claims by the creditors, then creditors cannot file suit for recovery of debt. Instead, they'll have to lodge claims with the liquidator. So this is about the consequences that a corporator faces upon initiation of the voluntary liquidation process. Next is with respect to the process, which I think we have already covered. So I would like to move straight to a comparatively significant point, which is with respect to the liquidation cost. Now, why I'm saying this particular point is significant because in 2022, there was an amendment in the IP regulations, the insolvency professionals regulations, which says that any liability that comes because of any non-compliance after the company goes into this process, then the liquidator has to personally bear that liability from his own pockets, and that particular expense will not form part of the liquidation cost. So what is included in the liquidation cost has been provided, and what will not be included in the liquidation cost is not coming from either the liquidation regulations or the voluntary liquidation process regulations, but is coming from IP regulation as well, which explicitly says that if there is any payment obligation on account of any non-compliance, that the liquidator will have to bear personally. Next, we move ahead to the conduct of the liquidation process. Here we'll be discussing about realization of assets and realization of uncalled or the unpaid capital. So the assets of the corporate debtor is required to be realized by the liquidator. And while submitting the prelim report, one of the points which are required to be mentioned in the prelim report is the plan of action. How is the liquidator planning to conclude this voluntary liquidation process? And there also it is mentioned that how different assets of the corporate debtor is planned to be realized. Because there can be a scenario when, say, if I sell one asset individually versus if I club those assets and sell it together, will fetch me more money. So whatever be the case, will be mentioned by the liquidator in the prelim report. Thereafter, the liquidator may value the assets of the corporate debtor, and because, for example, if I do not value the assets, I would not get to know what value will I fetch if those particular assets are sold off. and accordingly, I cannot even see if the corporator is solvent or insolvent. So for the purpose of the solvency test, the point which the directors declare is that there is enough surplus to pay off the liabilities. But how is this enough surplus gets computed? This is derived basically by the valuation process, wherein the values of different assets of the corporate debtor is considered or for the purpose of declaring the solvency of the corporate debtor. Next, with respect to the uncalled and unpaid capital, if there has been any part of the share capital which has not been paid by the shareholders, then the same will be called upon by the liquidator to pay him for the purpose of distributing to the to the outsiders first and thereafter to the contributories. And if, say, for example, a shareholder says that this particular uncalled portion will not be paid off, then the shareholder who denies to pay off the uncalled portion will be kept outside the list of contributories who will be paid off by the liquidator at the in accordance with the waterfall arrangement provided in the section 53. Next, moving on to the bank account, the liquidator is required to open the bank account for the purpose of keeping the funds of the corporate debtor. Now, here a question may arise. The corporate debtor, which was in operations earlier before it came into the voluntary liquidation process, must have had a bank account. So can the liquidator just use that particular bank account by changing the name from the company's name to company in voluntary liquidation? So in our view, the same is allowed, and the same bank account can be used by the liquidator, provided the name of the account has been changed from company in voluntary liquidation. And whatever amount has been realized from the sale of the assets of the corporate debtor, as I already mentioned, is required to be distributed within 30 days from the date of realization. And any payment over and above 5,000 is required to be paid only by check or by online mode for the purpose of keeping trail of the same. Next is with respect to distribution of assets or order of priority. So this I already covered, that the waterfall arrangement as is provided under section 53 is required to be followed. Now someone might ask a question over here that if there is already an abundance or say sufficient funds to pay each of the stakeholders of the corporate debtor, then why this priority? The money can be paid in any manner whatsoever. But if we think logically, if we pay off the money in any order whatsoever, then it will create chaos. And for the purpose of maintaining a proper, arrangement, this particular waterfall arrangement which has been provided under section 53 is required to be ensured in case of voluntary liquidation as well. Next, timeline for completing the liquidation process. This we've already discussed, that if there are creditors, then the process is to be completed within 270 days. And if there are no creditors, then the process is required to be completed within 90 days. If this 90 days, 270 days timeline gets breached, then the meeting of contributories is required to be called within 15 days from the end of 90 days, 270 days, as the case may be. And this process is to be followed after the expiry of every 90 days, 270 days, till the final report is submitted to the IBBI. And next is with respect to the unclaimed and undistributed amount. So whatever unclaimed and undistributed amount remains in the voluntary liquidation account, the same is required to be transferred to the unclaimed amount. So here also there was an amendment on 31st of January. The notification which came also provided for amendment in this particular section. So a clarificatory amendment I would rather say, because there can be different scenarios. For example, the dissolution application has been filed, but the order of dissolution has not come yet. Or say, for example, the final report has been submitted, but the dissolution application is yet to be filed. In such scenarios, to whom will the stakeholder address this particular issue with respect to claiming the money back from the unclaimed amount? So this recent amendment prescribes that till the time the dissolution application is filed, the application for taking the money back from the unclaimed amount is to be made to the liquidator, who after checking the information will apply to the IBBI for release of the amount. And in case this particular claim has been submitted by the stakeholder after the dissolution application has been filed, or say post-dissolution, then this particular issue is required to be addressed to the IBBI and not to the liquidator. because the liquidator is discharged from his duty after the dissolution order. And after this, we move to the suspension of process. In which scenarios will the voluntary liquidation process get suspended? Not completed, but suspended. So there can be two scenarios wherein the voluntary liquidation process gets suspended. First is if I connect this particular aspect with the first requirement, that is the declaration of solvency. While giving the declaration of solvency, majority of directors of the corporate debtors acknowledged that first, the corporate debtor has sufficient funds to pay off its liabilities, or the corporate debtor do not have any outside liability at all. And second, the company is getting liquidated to not defraud anyone. It's just that the operation is no longer needed, the company is no longer needed to be continued, and therefore it is going for voluntary liquidation. Here, if any of these 2 points gets, say for example, does not get applied for, then that case, the voluntary liquidation process gets suspended. For example, if the voluntary liquidation was opted for the purpose of defrauding anyone, or the corporate debtor do not have sufficient funds to meet its liability, then the process gets suspended. So last, with respect to tax implications, I would request Barsha ma'am to take over from this particular front.
Right. So Neha, you can continue showing your screen only. I'll just continue with the process. So now coming to the taxation aspect when it comes to voluntary liquidation process. Of course, one of the very important thing to decide. So whether liquidator is still liable to file the income tax returns once the company is under voluntary liquidation process? Yes, because there may be incomes during the liquidation period as well. Say suppose there are rental incomes that the company is receiving. Say suppose there is some FD created on which we are receiving interest income. So the liquidator is required to file the income tax return when the process is there. Now the taxation aspect can be divided into two parts. One is taxation in the hand of shareholders, and the other is taxation in the hand of the company. When it comes to taxation in the hand of shareholders, the very first thing which comes is section 222C. Why I'm saying so? Because as I said that the surplus money is required to be distributed among the contributories in the proportion of their contribution in the very capital of the company. To the extent this surplus amount pertains to the accumulated profit of the company, that distribution will be treated as dividend in terms of section 222C of Income Tax Act. What do I mean by saying this? That in the balance sheet of the company, if say suppose there are accumulated profit, so what I'm distributing the amount, to the extent I am distributing towards the accumulated profit, that amount has to be treated as a dividend, and remaining amount there will be a capital gain on that. So this bifurcation has to be kept in mind while making the distribution. As regards taxation on the company, certainly, as I said, that during the liquidation process itself, the liquidator is liable to file the income tax returns. The liquidator is liable to assess the income, because there may be the income during the liquidation process as well. Of course, the liquidator is required to give the intimation to the Income Tax Department under Section 178 and 176 of the Income Tax Act, so that the required money as determined by the assessing officer or the chief assessing officer can be set aside before making the distribution to the contributories in proportion to their claim. But even after that intimation given to the Income Tax Department, that is towards the income tax dues, income tax liabilities that may arise. So for that liabilities, maybe assessment is pending to be done. Maybe there are some litigation pending, some matters pending for assessment, etc. So the income tax authorities give you a ballpark figure of the amount that is required, that will be sufficient enough to meet those liabilities, and accordingly you can set aside those liabilities and can move ahead with the further process of the voluntary liquidation. If say suppose you fail to receive anything from the Income Tax Department, then still as per Section 178, after waiting for 3 months period, you can move ahead with the further distribution of the money to the stakeholders, given that insolvency and bankruptcy process itself is a time-bound process and cannot be waited for the infinite period for making these distributions and all. So
Madam, I have
yes,
a query.
yes, sir, yes.
What is the treatment of the PAN card, the PAN number? Once the liquidation process concludes, they are supposed to hand over the PAN number back to the department in the
Yes, sir.
in the
So
date of the
once
death of an SSE.
So I'll deal with this. So once the voluntary liquidation process of the company is complete, and once all the liability, there are no liabilities showing in the income tax portal of the company while you're logging in, there are no pending assessment, pending liabilities are showing. At that time, you can certainly apply for surrendering the PAN of the company. Surrendering of PAN should be done after receiving the dissolution order. So once the dissolution order is in hand, you are required to intimate the same to the IBBI, you are required to intimate the same to the respective regulators, to the registrar of companies and the other regulators as well. At the same time, at that point of time, you are also required to surrender the PAN of the company. Why so? Because until unless you give the intimation to the income tax department that you are done with the process, you will keep on receiving the intimation or the notices from the income tax department that the return is not filed or this particular thing is there. So it is very important to submit that surrender that PAN with the income tax department along with attaching the dissolution order. So now, Neha, I think we can start with the practical queries that we have jotted down.
So this actually brings us to the last segment which we have planned for today's session, that is the Q&A. So based on our experience so far in dealing with the voluntary liquidation process, we have collated certain practical concerns which I'll be putting up and accordingly will be answered by Barsha ma'am. So starting off with the first step which relates to the declaration of solvency. So ma'am, law prescribes a timeline for the shareholders approval, for the creditors approval, but no such timeline has been provided for taking the declaration of solvency from the board. So like, should it be taken, the declaration of solvency should be taken from the board meeting in which the decision for voluntary liquidation has been taken, or should be taken after the board meeting in which this idea of going for voluntary liquidation is considered by the board?
So Neha, first the company decides for the voluntary liquidation process, right? The voluntary liquidation is to be decided by the board of directors of the company. So either, there may be circumstance that I'm holding one meeting wherein I'm discussing that let the company be voluntarily liquidated. And in the next meeting, I will be having, the declaration of solvency from the majority of directors. Otherwise, apart from that, the alternative option that we have is to have the draft ready, the draft for the declaration of solvency. Because what happens practically is the directors are already aware that these kind of situation we'll be discussing in the upcoming meeting. So what they do is they prepare the draft of the declaration of solvency, and the agenda items are sequenced in such a manner that first the decision regarding the voluntary liquidation will be taken. Of course, that will be subject to the approval of the shareholders, and the subsequent item will be declaration of solvency to be taken from the majority of directors. And the date, as regards the concern for the date of the declaration of solvency is there, the date should be either the previous date from the board meeting or the board meeting's date. Cannot be after the board meeting's date, because once the board meeting is already there, you have already discussed regarding this declaration of solvency. Because based on this declaration of solvency, only the directors are decided to move ahead with the liquidation process. So you have already decided that the company is solvent enough, and now you are moving ahead. So it should be the date of board meeting or a date previous to that.
Ma'am, can I interrupt on this?
Yeah, ma'am, surely.
Yeah, for the directors to determine the declaration of whether the company is solvent or not, they will require the balance sheet position as on a particular date, on the basis of which they will decide, like, we will have to draw the financial statements as on a particular date closer to the board meeting. So is there any provision specifically is asking, like, till what period the balance sheet is to be prepared, and the board needs to take this decision for voluntary winding up subject to approval of members?
Neha, I would like to answer this query.
So ma'am, basically there is no timeline as such which has been provided over here, but because this declaration of solvency has certain annexures. So one of which says that how much value the assets of the corporator has. The other says that how much liability the corporator has to bear in mind for the purpose of declaring if the corporator is solvent or insolvent. And there is no date as such per se. However, the date before the board meeting, the agenda papers, whenever we are sharing, we'll be sharing the details, the latest details which is possible, because cannot be, practically speaking, cannot be if I'm, for example, giving the declaration of solvency today, the financials is of the same date, because of the practical concerns, it can be either a day older or so. And circulating the agenda papers, similar details can be circulated with the directors as well.
So, Neha, we can also say this, that as in the attachment of declaration of solvency, you are required to attach the audited financials of previous 2 years, right? So the previous 2 years audited financials will be there. And also you are required to give the estimate of assets and liabilities in the declaration of solvency. If you see the declaration of solvency's format, so those assets and liabilities details are also required to be provided therein. So based on that, you are required to provide those details. And of course, for the for the further assistance to the liquidator, as I also discussed previously, should be the as on date assets and liabilities details in hand, so that the liquidator can actually assess the actual position of the assets and liabilities as on the liquidation commencement date. Now, you cannot say that, say today is the shareholders resolution passed, shareholders have passed the resolution, and the auditor immediately will sign the report. The auditor will immediately provide you the accounts. So it cannot be the same date of passing of the special resolution. Can be a week's difference between the two, but should not be relied upon the last audited financials only. There should also be accompanied by the accounts, maybe condensed statement of assets and liabilities as on the liquidation commencement date for the further assistance of the liquidator.
Both are required to be audited, the statement of assets and liabilities at time of declaration and at time of commencement of liquidation.
Why? Yes, ma'am. This should be audited, while it is not specifically provided in the regulation. But why I'm saying that this should be audited is for the filing of income tax return. As I've also given one example that, say, suppose the voluntary liquidation process started in between of the year. Say, suppose on 15th of May. So from 1st April till 15th of May, the liquidator is not there on board, but the liquidator is required to file the income tax return for the entire year from 1st April till 31st of March. So what will happen to this particular account of 1st April to 15th of May? That is the date of commencement of the liquidation process. So this account should be audited by the erstwhile management of the company and the auditor of the company, such that once the accounts are handed over to the liquidator will prepare the receipts and payments account. That will also be audited, and based on the merger of these two accounts, the income tax return will be filed. So while it is not specifically provided in the regulation, however, for the sake of convenience of this income tax return filing, etc., we always advise to have the audited account in hand.
The income tax return filing in case of this intermittent period will be arising at what particular date as such, because till the dissolution happens, the liquidator as such is required to file the income tax return every year.
So this liability of filing income tax return is always, in general terms only. There are no particular format provided as on date that you can file the income tax return for, say, suppose 3 months or 6 months. So you have to wait for the entire year to get completed to file the income tax return. However, if, say, suppose you receive the order in between, means, say, suppose you are required to complete the process within a period of 90 days. You have completed the period of the process within a period of this 90 days. You also submitted your report with the NCLT, and by the grace of NCLT, you also received the order for dissolution of the company before the timeline for filing of income tax return. Then you have to complete the process. Then you have to inform this completion of the process to the income tax department that the process is done, and now you cannot file the income tax return once the dissolution order is there in hand.
So in that case, the income tax return will be for the latest 31st March.
Because you are required to file income tax return for the previous year in the assessment. So you are filing the income tax return for the previous year and the form will be available, say, suppose from, I think, July or August, the form will be there. So you will be able to file the form for the previous year by that time. So there should not be escaping of income, because there may be an interest income or so. So if at all those incomes are there, you are required to file the income tax return. Even if, say, suppose you are not in a position to file income tax return, at least you should ensure that the necessary liabilities which arises pursuant to that receipt of income are paid from your end. The self-assessment tax are paid, the advance tax are paid appropriately, so that the income tax department's dues are taken care of. So this one has to ensure.
Oh, thank
Right, ma'am. So moving ahead to the next related question which I have. So the provision provides for taking declaration of solvency from majority of directors. So let us consider a case where since, for example, there are 5 directors in the company, out of which 4 are resident outside India and 1 is resident in India. So how do we take approval from those directors, or can we basically make the other 4 directors resign and appoint some new, maybe 2 new directors who are resident in India for the purpose of forming the majority? So how would like to address this issue, ma'am, if majority is residing outside India?
So Neha, the very idea for this declaration of solvency is to take declaration from the directors that the company is solvent enough to make payment for its dues, right? The directors who were there can certainly vouch for that and can certainly provide an affidavit that yes, the company is solvent enough. The dues, the statutory obligations which are there, the contingent liabilities which are there are also considered, and accordingly the necessary provisions have been provided before initiation of this process, right? So those directors who were there are required to provide this declaration of solvency in majority, irrespective of the fact whether the directors are in India or in foreign. So if they are in foreign countries, so they are required to have that apostille from the necessary notary public and then submit the declaration of solvency to the liquidator. As far as the concern of resigning the directors and getting the new directors appointed merely for the sake of compliance is concerned, well, I will not suggest that for sure, given that the new directors have just joined. How can someone who has just joined, you can put on the liabilities to them to to say that the company is solvent enough? Because the declaration of solvency is not just mere declaration. It is also about the personal liability of the directors. That is to say, if, say, suppose the company will not be in a position to meet its liabilities in a future date, once the voluntary liquidation process commences, at that time, the directors who have given this liability will be personally accounted for the declaration that they have given. So you cannot just merely for the compliance purpose, appoint a new directors, get the old directors resign and take declaration from them that just say that the company is solvent enough so that I can move ahead with voluntary liquidation. That should not be an approach.
Understood, ma'am.
In that case, I want to ask some question. Practically, the board meeting has been held through the VC. All the directors participated from the foreign countries, and Indian director participated and consented for the voluntary liquidation. Foreign directors sign their declaration of the solvencies in their respective countries. But apostille and notarize of the documents take time of 1 or 2 days, sometimes in few of the countries. So let's say the director has signed their declaration of solvency on today's date, and the apostille has been done tomorrow, day after tomorrow. So like how the practically will consider the date of solvency when the director has signed in the board meeting in which the company has uh, passed the resolution for the liquidation. So
So
it
the
will suffice.
provision requires you to have declaration in hand. Given that it is in the form of affidavit, hence we also ask for have a notarization done for them. The notarization may take time. And of course, one cannot decide, at the 11th hour that let us go for the voluntary liquidation. Obviously, it is the process which we have certainly discussed earlier as well. So it is not an overnight process that overnight we have decided to put the company into voluntary liquidation and start the process from the very next day. So
Yes.
certainly the directors were aware that the company will be moved to voluntary liquidation process, and the notarization or apostillation whatsoever is there will be there. So they have to prepare for that accordingly, so that the necessary declaration along with the particular requirements can be provided within the given timeline. However, if, say, suppose there's a delay of a day or two, that can certainly be taken care of by the liquidator, because declaration is already there, merely the notarization of the same is pending. So that can be taken care of by the liquidator.
Okay. Thank you.
Right, ma'am. Now, with respect to this solvency test which we discussed, I have a related question. For example, there are certain workmen dues, for example, terminal dues, say, and I think one of the participants has also raised a similar question. What if there are terminal payment obligation with respect to termination of the service of the workmen? Is that also required to be factored for the purpose of checking whether the cooperator is solvent or not?
Certainly, Neha, because it is a case of voluntary liquidation where you are saying that your company is solvent enough. When you are saying that solvent enough, you have to account for all the liabilities, all the prospective liabilities as well that may, arise at a later stage. Say, suppose today there are liabilities which are showing in the balance sheet of the company. There may be certain liabilities which are not showing in the balance sheet of the company as on date, but may arise or may trigger at the moment you commence the voluntary liquidation process. So you have to account for those liabilities as well, and keeping those liabilities in mind only, you are required to provide the declaration of solvency. And that is a very reason that now the amendment is made in the declaration of solvency part, that the directors are also required to provide for the contingent liabilities and also say that the necessary provisions are created for meeting those liabilities.
Understood, ma'am. And so this is with respect to the declaration of solvency related. Next, if I move ahead to this fate of the group companies, which was also, I think, during your deliberation, one of the participants raised this particular question. What will happen, for example, if the holding company goes into liquidation, and what if the subsidiary goes into liquidation? So what will happen to the holding of the subsidiary which is in liquidation, which is in voluntary liquidation? Or say, for example, what will happen to the subsidiary of the holding company which is into liquidation? What will the fate of these companies?
Like you have asked two questions in one question itself. So accordingly, I'll answer this. I'll bifurcate this in two parts. Let us take the first part when the subsidiary is getting liquidated, right? So when the subsidiary is getting liquidated, being a holding company, I am the contributory, I'll receive the surplus money. So there will be no changes in me. The moment I'm getting the surplus, the moment the company is getting voluntarily liquidated, whatsoever surplus money will be there, I'll get that money back. The amount that I have contributed in that company, that to proportion to that contribution, I'll get my money back, right? So, and simultaneously, when, say, suppose on the other hand, when the holding company is getting liquidated, that means the parent company is getting liquidated. In that case, what will happen? In the parent company's book, the subsidiaries was shown as an investment. So what will happen to that investment? The investment was there. Either the new contributories will be there, so I can transfer those investments. Either I can realize those investments, I can sell off those investments, and I can realize the proceeds. I can distribute the amount to the respective contributories, or what I can do is I can make in specie distribution of those investments. So these investments are my assets, and I'm required to realize these investments. So what will happen? What impact will be there is, since I was shown as an investment in the book of my parent company. So today, say, suppose A was my parent company, tomorrow B will be my parent company. So these changes will be there in my accounts.
So basically the parent changes. Initially, I was the parent. Now, because I am getting voluntarily liquidated, some other person will come in as a parent of the subsidiary company.
Yes, yes. There's one question in the chat box as well, Neha. I'll just read it out. It says that when is the GST to be surrendered and whether NOC required? So, sir, there is no requirement of taking NOC from the GST department. However, as regards the surrendering of this this GSTI number is concerned, as I said, like in case of PAN surrendering, once the dissolution order is in hand, at that time only you are required to make necessary intimation to the regulatory authorities that if you have GSTI number, you have to surrender that GSTI. If you have PAN account, you have to surrender that PAN number. If you have SIN number, that is the registration from your registrar of companies, you are required to intimate your registrar of companies that I'm surrendering my SIN, that is to struck off, and give necessary impact on the MCA portal for that.
Madam, one question from regarding GST.
Yes,
sir. So we know that IRP, RP or liquidator have to take the GST registration number. But problem is that IRP, RP or liquidator act as the representative, but the documents of the ex-directors are required. So if the ex-directors don't provide the documents, what the IRP, RP or liquidator will do? They are saying that we will not provide the documents because we are suspended. But as per the GST requirement, documents of ex-directors are required. So in this scenario, what the liquidator or the IRP or RP will do?
So in the voluntary liquidation process, generally it is not happened that you don't get the support of the respective directors of the company, because it's a case of solvency liquidation, and directors or contributors provide their necessary support to the liquidator. However, if say suppose there are cases wherein the
It is a
directors are
case
saying
of,
that the
Madam,
company is
yes.
already so the
It
company
is
is
a-
already into liquidation, and why should I provide? I'm not required to provide those documents, etc. So you can now have the board resolution in hand, wherein in the board resolution all the necessary powers were given to the liquidator of the company. Based on board resolution, you can see that now the powers of the board are also with the liquidator, and based on that, the liquidator is the only person who has to continue with the process. And because these issues are often seen in case of opening of voluntary liquidation account as well. Many times what happens is bank also ask for the consent of the directors, for KYC of the directors to open for the liquidation account, even if that is not required because it's a liquidation account. So you are required to make them understand that, see, that the company is already under liquidation. I am the liquidator of the company. I am authorized by the board of the company. They have authorized me to take all the necessary action as may be required for the voluntary liquidation of the company, for the beneficial liquidation of the company. So now their power is, they don't have the power. The power ceased to exist. Now I have the power, so I have to continue with the process in that line. So these practical difficulties often, the professionals faces while dealing with the voluntary liquidation process.
The bank account, when it is opened, the PAN of the bank, PAN of the company is given, na?
PAN of the company, yes. PAN
Yes.
of the company is there. Of course, PAN of the company is there. But in our case as well, so I'll just give you one example that in our case as well, it was initially when we were facing the, when we started our very first voluntary liquidation matter, in that case also we faced very difficulties to, open one liquidation account with the bank, because bank was asking for the KYC of the directors, bank was asking for the other documents of the company, while we are continuously providing the shareholders resolution and directors resolution and saying that directors authorizations are not required, director need not be the authorized signatory of this account, etc. But they were not ready to accept those things. But eventually, yes, there are now plenty of matters. So banks are also now are also ready to open this kind of account with them. So now
Open,
they don't face
yes,
this
bank can open, but which PAN is to be registered with the bank account?
Which
PAN? Company का PAN देना होगा ना? हाँ, yes, PAN number of the company is, will be given.
PAN
na?
number of the company.
Yes,
Certainly
PAN
PAN
number
number
is
of the
company.
company.
If you give another PAN number, then it will not be linked.
Correct. Absolutely. Absolutely.
They also
In this
demand
case,
the
what
PAN of
the IRP,
liquidator.
RP or liquidator will do?
Absolutely, sir. And they
When
in
will
fact
register,
demand for the PAN of the liquidator. They ask for PAN of the liquidator to provide.
Personal PAN?
Yes. Personal PAN of the liquidator to provide.
Not the company PAN?
Not the
Both
company.
actually. Both actually.
Sometimes they ask for both the documents. Sometimes they ask for the PAN of the liquidator. When we say that the PAN of the company is to be there, it is a special account. Liquidation account is always a special account. It is not like a normal savings or current account. It is a special account that is to be dealt with in accordance with the particular regulation is there. So now I think the banks are supportive enough. They are providing the necessary support for opening these kind of accounts, etc.
Now, if the bank account is linked with the company PAN number, then in the present scenario, what the IRP, RP will do?
You are correct, sir, that if the bank account is linked with the company's PAN number, then so it will of course be very easy for the liquidator to continue with the process. But if it is linked with the liquidator's personal account, then it will get
when the GST number is applied, the details of the directors are asked.
That we have to make them understand, sir, that the directors a personal account will not help, because they are not liable for doing anything and they are not there. They are just there to help the liquidator to the extent required.
Yes,
And not properly, there is no board per se.
When we will go to we are going to the portal of the GST and registering, that the director's details are asking.
So that's we have to, I think you have to deal with the GST authorities. You have to make them understand regarding the process, so that they can, provide
They are
this
saying we
back-end
can do
solution for
anything.
these
We
kind
can
of
do
issues.
anything because the system is here like this.
Yes, so certainly some back-end issues, back-end solution they can provide for these kind of issues, so that the liquidator can successfully register for the GST.
Okay, madam.
Right. So another question which I have, ma'am. So how do we deal with vulnerable transaction in case of voluntary liquidation process? Because certainly there can be some vulnerable transaction which the cooperator might have entered with its related parties or say unrelated parties. So how do we deal it? Do we deal it in the same manner as we deal in compulsory liquidation, or is there anything specific in case of voluntary liquidation process?
Very interesting question, Neha. So this voluntary liquidation provisions which are there in insolvency and bankruptcy code are also applicable in case of voluntary liquidation matter as well. So as I said, that regulation section 35 to 53 are also applicable in case of voluntary liquidation matter as well. So if, say, suppose after commencement of liquidation, the liquidator come across with any of the situation that there were vulnerable transaction, there were avoidance transaction, and the financials of the company which are provided to the liquidator does not give a true and correct picture of the statement of the status of the company, in that case, the liquidator is free to make application to the NCLT, saying that these are the vulnerable transactions, and based on these transactions, the company may not be said to be a solvent, or may not be in a solvent position, and therefore the company can be, moved to liquidation process, compulsory liquidation process from voluntary liquidation process.
Understood, ma'am. Understood. Another question, this was raised by one of the participants during the session. So this is related to form filings. So there are annual filings which are to be ensured by all the companies, which is AOC 4, MGT 7. So in case of voluntary liquidation process, how do we tackle it? Do we file the same MGT 7 and AOC 4, or is there anything specific in case of companies in the voluntary liquidation?
So Neha, say if in the we are required to file the AOC 4, MGT 7 for the previous financial year, right? So say suppose 31st March year end has already happened, and after that the board and the shareholders have passed resolution for the commencement of the voluntary liquidation process. And while passing these resolutions, the board has not filed for the AOC 4, MGT 7 while they should have filed for. In that case, the liquidator is required to file for that previous year, means as on 31st March, AOC 4 and MGT 7 with the registrar of companies. However, once the liquidation process commences, after that, the requirement of filing AOC 4 or MGT 7 is not there. So after that, there is no requirement to file this annual returns, etc. However, the requirement of filing of income tax return is still there. That return is still required to be filed. But this AOC 4, MGT 7 is only limited till the time the company was not in liquidation.
Got it.
Madam,
Yeah.
in the case of voluntary liquidation, what is the treatment of related party creditors? Will they be treated as the same according to class of creditor, or is it separately dealt with?
So as I said, that voluntary liquidation is about solvent liquidation, wherein you are saying that I have enough food on my table so that I can feed everybody. So when I have enough thing, of course, I'll make payment to everyone. But there is a queue. That queue has to be maintained in line with section 53. So everybody, irrespective of the fact that the person is related party or not, the person will stand in the queue, and I'll keep on paying the respective persons in line with section 53. So it is not that if the person is related party to me, I'll not make payment to that related party. I'll make related parties payment as well. It is not a case of normal compulsory liquidation. It is a case of voluntary liquidation. Sufficient enough money. So just the manner of distribution you have to follow. That's it.
Ma'am, I have a question.
Yes.
Ma'am, after the special resolution passed by the members, sometimes, a certain checks have been given by the company and they clear after the date of the special resolution. So how to tackle those? Because that is basically, now the responsibility of liquidator to do it.
Certain checks passed. Can you please just repeat the
So,
question again?
yeah. So basically, ma'am, certain checks have been given by company to various persons, which is cleared after the date of special resolution. So in that case, because after that particular date, this is the responsibility of of the liquidator. And moreover, when we were making the declaration of solvency, because those checks were not cleared, so we have actually taken account for that those particular entries also in the declaration of solvency.
Certainly, the directors are required to give the effect to those checks that they have made, but the check is not cleared yet. But they are required to account for, or they are required to give a clear picture of those checks as well in while providing the declaration of solvency. So if say suppose I am providing declaration of solvency, I am saying that the money is enough, but I have already issued a check of rupees 10 crores to some of the creditors, while the fund is not there in the bank account of the company. Who will be liable to make payment of that 10 crore rupees? So liquidator cannot pay that money out of his own pocket. So this amount is certainly was required to be paid by the directors of the company. And if they have issued check and one hand, and on the other hand, they have provided this declaration of solvency, which eventually turned out to be a wrong declaration, then directors will be personally liable for these kind of declaration that they have given, or these kind of liabilities that eventually will occur.
Okay, thank you.
And this particular scenario might also lead to a suspension of the process on account of this defrauding any party.
Absolutely, absolutely.
Right. Next, moving ahead to some general questions which I have. So, our first question is: can the company in voluntary liquidation distribute dividend to its contributories during the while undergoing voluntary liquidation process?
So, Neha, the question of declaring dividend always comes when there is surplus thing, in the company. So I am making profits. I am distributing that profits among my shareholders. Here, when it comes to voluntary liquidation process, you are not making profits. You are entering, certain income may be there pursuant to the, FD that you might have created, pursuant to the certain rental income which are there. So you're not earning any profit because there's no business per se. So you cannot say that the company can declare dividend. However, at the same time, I will also like to highlight here that to the extent there is accumulated profit in the company, you are distributing the surplus money among the contributories. So the amount to the extent that pertains to this accumulated profit, that should be treated as dividend. At the time you are, distributing the surplus amount among the contributors. So to the extent that accumulated profit amount, the declaration should be, the distribution should be treated as dividend under section 222C of Income Tax Act.
Understood, ma'am. And there's a related question which one of the participants has put in the chat box, which is whether the shareholders can transfer their shares during the VL process.
So ideally this should not happen because the shareholders are aware that I am already, the company is already going for the liquidation. So whatsoever my contribution was, I will receive that amount. I'll receive the contribution in that proportion eventually. So there's no question of transferring the shares to anybody else. But if say suppose the shareholders are, renouncing their right to receive that surplus money, they are saying that instead of paying me the surplus money, you can pay this second person the surplus money whatsoever I'll receive. So they can certainly do.
Got it. Got it. Another concern which I have is, ma'am, there are certain unnecessary expenses that the corporator might have to bear on account of having the registered office in some posh locality of a metropolitan city. In that case, can we shift the registered office to some other area so as to save those rental expenses which we are incurring unnecessarily, even though the company is not in operation right now? So can shifting of RO be possible after the company goes into voluntary liquidation?
So yeah, this shifting of registered office process, if you see, they require certain resolution, right? Board resolution they require. And there is particular format in V3 portal that you have to, comply with in order to shift the registered office, even if you are shifting the registered office in the jurisdiction of same ROC, right? There's no particular area wherein you can provide these details of liquidator therein, right? So what is advisable in that case the board are certainly aware that the company will go to the voluntary liquidation process, and eventually the company is continuously incurring the expenses towards rental income, payment, etc. Right? So what board can do is, before passing for this board liquidation process resolution, they can pass the resolution for shifting the register office of the company and simultaneously file the form INC 22 with the registrar of companies, because the only thing that requires to shift the register office is INC 22. Of course, when you know that the company is going for voluntary liquidation process, there's no need to maintain an office in a posh area, right? You can certainly have a smaller office just to meet the respective liabilities, to meet the respective, to complete the respective processes, etc. Right? So if that is required to shift the register office in a particular area, so that the director should do before commencing of this process, because of the practical difficulty in filing the form with respect to shifting of registered office, etc.
Understood, ma'am. So one last question which I have is, so basically, if you can help us with the suggestive actions which the liquidator should ensure, so as to ensure that the proper transparency has been ensured all throughout the process, ranging from sale or disposal of the assets, realization of money. So what all steps can the liquidator ensure so as it projects that proper transparency is there in the process?
Senior code, insolvency and bankruptcy code, along with this liquidation, this voluntary liquidation process is still evolving. Based on the practical difficulties that the professionals are facing, IBBI is making changes as and when required in the respective regulation. So the very first thing that I believe should be there is to be aware of the respective amendments, as to what all amendments are there in the code, in the regulations, whatsoever circular the IBBI is issuing to make the process more easy for the respective liquidator. Now coming to the transparency part. So in order to maintain the transparency when it comes to voluntary liquidation process, with whom you are required to maintain the transparency? With the contributories, because the contributories have entrusted upon you the liability to complete the process and to complete the voluntary liquidation process and distribute the surplus money among them, right? So this transparency has to be maintained with the contributories of the company only. So in order to ensure this transparency, what you can do is, as and when you are taking any major step in the voluntary liquidation process, you may send a detailed regarding the process to the contributories. Did not hold a particular meeting of the contributories, because that may be costly, right? But you can always have the intimation sent to the contributories that this is particular, update, status update, you can say. The status update, this particular thing has happened, or I have done this particular thing, or I have taken this particular step. So this disclosure you can always give to the contributories to make them aware of the steps that you are taking, the progress that you have made so far, and the future course of action that you are otherwise, deciding to take for completion of this process. So these things can be maintained.
Right, ma'am. So that is
Neha,
it
I
from
believe
my
there are
end.
several questions in the chat box as well. Can you please just take one after one?
Sure, sure.
Yes,
So
sir.
your voice is breaking in between, actually.
There's one question from my end, ma'am.
Sir, your voice is breaking. You can certainly put your question in the chat box.
Read out. So what if there is, at the time of sharing of the status, what if there are objections?
So your voice
So
is still not coming very clear to us. Maybe some internet connection issue or so.
So maybe you can drop your concern in the chat box and accordingly you can take that up.
Meanwhile, I have one concern.
Yes, ma'am.
Can you please put a light on the forms that need to be filed under the voluntary liquidation process? You have cleared the part of annual filing. That's okay. The forms to be filed during the voluntary liquidation process under the new V3 portal.
So what all forms are required to be filed during the process? First, of course, is the GNL2 that you are required to be filed. Why GNL2? Because in the GNL2, you will be able to register yourself with the MCA portal as a liquidator, so that any form which will certainly be required to be filed at a later stage also, you can file as a liquidator. So that GNL2 form has to be filed. And for this special resolution, which was passed by the contributories of the company for initiation of the process, that MGT 14 form is there, which if contributories have not filed, then they are required to file. That form is not required to be filed by the liquidator, but filed by the contributories of the company. Apart from that, the AOC 4, MGT 7, these forms are not the domain of the liquidator. So liquidator is not required to file these forms, but liquidator is required to file the income tax form. And at the end, when the process completes, when the liquidator has the dissolution order in hand, at that time, the liquidator is required to file the order with the registrar of companies with the INC 28 form. The INC 28 form has to be there. Also, for intimating the registrar of companies, there's a timeline of 7 days within which you are also required to give intimation to the registrar of companies regarding the commencement of voluntary liquidation process. So for that intimation also, you are required to file GNL2 form. There is a basic difference between GNL1 and GNL2, which often professionals mistakenly file. So I'll just clarify on that part as well, that GNL1 is the application and GNL2 is information. So here we are required to give information only. So when we are required to file information, we are always required to file GNL2 and not GNL1. So it has seen many times that the professionals files GNL1, but GNL1 is not a correct form to file. So these are the limited forms that liquidator is required to file.
One thing, I believe there's one GNL2 that will be the intimation regarding the appointment of liquidator. There will be one entity 14, which will be for the special resolution and is the responsibility of the contributories. I believe there is one form also for the declaration of solvency.
Declaration of solvency form will also be there. Yes, declaration of solvency.
That is MGT 40.
Because when you are filing for the board resolution with the registrar of companies, that board resolution has to be also accompanied by the declaration of solvency. So that will be filed by the board of directors of the company itself, because after board resolution, shareholders resolution will come into the picture. So in between period, the management itself will file the respective forms. So liquidator it will not come within the domain of liquidator. However, if say suppose the management has not filed, in that case, liquidator can file those forms.
Board resolution is required to be filed under which provision for liquidation?
Sorry,
I
ma'am.
think the board resolution for company going into voluntary liquidation is required to be filed under which provision? Because
I think it's
don't see
179(3) of Companies Act. Neha, can you please
because
just
I
check
think
once?
that directs to section 59 of IBC, which specifies the filing of special resolution.
Special resolution requirement is also already there, but
Yeah, but
Companies
then
Act,
this particular provision, I think it directs to section 59, and in section 59 it talks only about the special resolution. So whether the board resolution is specifically required.
board resolution specifically requires, because see the area, the domain of section 179(3) of Companies Act is bit larger than what is provided herein. So it also requires to file for any kind of restructuring in the company which is happening, any kind of changes which is happening in the company. So certainly for that reason, we also suggest the companies to file for that the resolution for winding up as well with the registrar of companies.
179(3) clause number I provides for filing the form even in case of reconstruction. So we can take a view that this leads to actually the compliance in relation to filing of NGD.
And GNL2 was earlier we used to file GNL2 for submission of declaration of solvency under V2 because it is to take that form. But now under the new V3, it is not, there is no provision wherein we can file GNL2 for declaration, because when we select any column, any field for filing the form, purpose of form for under section 59 of IBC, or if we select others category and then select the insolvency IBC code and section 59, in that case it does not allow the director to sign the form. It directly takes it to the liquidator. It throws an error saying that in the capacity of director cannot be filed the capacity filled in this particular.
Earlier, it was always like GNL2 form pursuant to which the director used to file this declaration of solvency. However, if in the new portal, that is not allowing the directors to file the form, certainly the liquidator can file the form. Can register themselves, the liquidator can register on behalf of the company and of course can file the declaration of solvency with the registrar of companies.
Because the registration details go in the MGT 14, where when we select the purpose for voluntary liquidation, that time all the details of the liquidator are asked. So is
Because
it so
there
that we'll
was
have
a
to file
circular
first
issued
MGT
by
14?
MCA in 2020, I recall. There was a circular issued by MCA in 2020, wherein MCA has directed that the liquidator has to register themselves by filing
But
GNL2
that
with the
particular
respective forms.
that particular circular 6th March 2020, I suppose,
Yes,
it
yes,
is
2020. I'm
only
referring
for
to 2028
CRP.
circular only.
It specifically mentions only CRP process, wherein the liquidator has to file that INC 28 order and NCLT order for admission of CRP, and wherein the liquidator will act as the CEO. But in case of voluntary liquidation, there is no such provision or no such facility in the system where the liquidator can actually, sign the forms on behalf of the company as such. So that practically GNL2, we're like having a lot of issue for filing GNL2 by the company intimating the appointment.
In that case, we have to ask the registrar of companies to help us out to provide some backend solutions so that we can now file the form in V3 portal as well. I believe many of the professionals have faced this difficulties in filing forms while moving ahead from V2 portal to V3 portal. And we are still facing several issues while filing form in V3 portal because everything that we files, turns out to be something new therein, which earlier were not there. So certainly we have to ask the registrar of companies to help us out in filing these forms.
So one more thing, I was in between. And there is one more GNL2 that is to be filed for the final report before filing the application with an NCLT, right?
GNL?
2 for final report.
There is no requirement to file the GNL2, ma'am, because you are required to submit the dissolution application along with the final report with the IBBL. And with the, I think the requirement to file this with registrar of companies is not there. So this form is only required to be filed with the IBBL. I'll just check once. Just allow me a second.
Yeah, please. And there is one more concern after this, then I will.
Yes, ma'am. Sure.
That is required to be filed with the
It is
registrar and
required.
the board as well.
Right
the
now,
final.
Regulation 38 provides for submission of final report to board, registrar of companies by the liquidator.
So
Board
for
and
this, so any filing with the registrar of companies has to be done in GNL2. In that case, ma'am, yes, you are correct that we are also required to file this final report, and final report will form part of dissolution application only. And also, I just forgot to mention one part that once you are filing this dissolution application with the NCLT, while hearing the matter, NCLT will also ask you whether registrar of companies is there or whether NOC from registrar of companies is received, or whether the intimation has been given to the registrar of companies. If not, that they will also ask you to give 30 days time to the registrar of companies to revert with their observations if they have any in the application. So certainly this application along with final report is required to be filed with the registrar of companies in GNL2, of course.
Okay, thank you so much. One more concern that, for example, our voluntary liquidation process is in process. Voluntary liquidation is in process of a company. And we have done the filing of the respective GNL2 and MGT 14 with the ROC. And the thing is that certain forms are approved and certain forms are not approved. Okay, so basically the timeline has lapsed in the process and the forms are still showing under process. And as they are the forms of ROC Bank, like Karnataka, Bangalore is the registered office of the company. So in such case, like company should proceed with the filing of NCLT application. Like, can you please direct in this respect that what the liquidator is really supposed to do? That some of the forms are not approved yet; they are under process on the portal. And if we raise the ticket for this on the portal, then the reply comes that the forms will be approved on FIFO basis.
Ma'am, are you referring to the previous forms filed by the ex-management of the companies which are pending?
No, 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 no. The current forms which which are in respect of voluntary liquidation only. The one we have talked about now, NGT 14 and GNL2 regarding
Well,
that
there is
same.
no reason for the registrar of companies to hold these particular forms.
That is the concern we are also not understanding now, but they are not marking it for resubmission also. It's under process. We visited ROC Delhi. So it said that this is your registered office is of Bangalore. So ROC Karnataka will approve it. We have nothing to do with it. And if we are raising a ticket, then the reply is coming that it will be treated on FIFO basis. As simple as that. So in such case, what should we do? Matlab, as a voluntary liquidator, I'm asking.
So you can give me example of one particular form that you have filed for, like if you have filed for this special resolution form. Say suppose
NGT 14s are approved. Basically, GNL2 is under process, I will say. Specific form, if you want to know, GNL2, that is regarding the appointment of liquidators, let's say.
So this was regarding the appointment of liquidator form. Appointment of liquidator already started from the date of passing of special resolution. Filing of the same with the registrar of companies is the statutory requirement and not the legal, is not legally impacting the process per se. So once this special resolution starts, you have filed the form. Now approval of form, there's no reason for the registrar of companies to disapprove the form, because it is based on the directors declaration. It is based on the special resolution passed by the shareholders, etc. So there's no reason for the registrar to stop this particular form or not to approve this form. There may be due to some technical difficulties that form is not getting approved. However, the form, the process should start from the from the passing of the special resolution date itself. Of course, as and when the form will be approved, it will be approved with effect from the date of filing itself, and not on the date when the registrar of companies is approving the form. So that should not impact the continuation of the process, because the timeline is still there. Timeline is ticking. You cannot say tomorrow that because the form was not approved, I have not started with the process, because form is certainly a statutory requirement here only.
But ma'am, again, meanwhile, if the order of the NCLT comes and we need to file INC 28, at that time we will not be able to, because some of the form is in the pipeline that is not approved yet. In that case, how to tackle
there
it?
will be a huge gap from the date of commencement till the date of dissolution order you are receiving.
But
There
ma'am,
may
if
be a
right now you
technical
would see the
difficulty.
MCA working right now, we are not very sure that when that particular thing would be approved.
And
because
the way
there are so many
there are
technical glitches are there, so many things are there. So not always, maybe it could be a hypothetical, but not a hypothetical in all the cases.
And at the same time, ma'am, you can also say that the way the NCLTs are clocked in, you cannot certainly expect the order to be received within a period of a year, because there are several matters that we are also handling which are pending before the NCLT since 2020, 2018, which are still pending, and the matters pertain to voluntary liquidation itself. So you will get enough time to have your form approved by the registrar of
Even
companies.
matter does not come on the because of paucity of time.
And even if the matter will come, bench may not hear the matter. So that will also happen.
Yeah. Acha, I got this clarity from your perspective that in case the form is under process, so the voluntary liquidator should not keep the things on hold, and he should move simultaneously with the filing of its application with NCLT, right? And it just we have form H also now. So in that we can mention that it is under process because we have to mention the exact thing, right? So we should specify that it's under process.
Absolutely. Absolutely. We should specify the exact position.
Okay.
There's nothing to hide from the NCLT, because obviously NCLT, sometimes happens that NCLT go for the entire detail, even the date of the signature as well. In some of our matters, it has happened that in the declaration of solvency, NCLT has also asked for the attendance details of the directors to see who all directors were present in the meeting. To see on what date the declaration of solvency was signed and on what date board meeting was held. So in some matters, NCLT has gone to this extent as well. However, in some matters, on the other hand, NCLT has just seen that the final report is there, the registrar of companies is there, notice was given, pass the resolution. So it is certainly depends upon the mood of the NCLT to have the order, to pass the order for the dissolution of the company. And as regards the approving of the form is concerned, I don't think so that for voluntary liquidation process we should stop proceedings merely because the form is pending for approval. Because it has also happened, I believe that many of the professionals might have faced this situation as well, that at the time when from V2 portal to V3 portal we were switching, the situation, the MCA status of many companies which were under voluntary liquidation eventually, turned back to the previous situation which was active. So the company which was, the status of the companies which were ultimately changed to in liquidation by registrar of companies were moved back to active even if the company's voluntary liquidation process was going on due to this shuffling of process, the shifting of process from V2 to V3 portal. So this has also happened. So these are technical difficulties, technical requirements, which certainly ROCs and their respective authorities are taking care of or eventually will approve as well. Because any new thing to implement will take time, and we professionals have to give necessary assistance to the registrar of companies and to the other regulatory authorities to, to implement these processes eventually. We have to deal with patience while, these kind of shiftings are happening, because these are happening for good ultimately. And one cannot expect that over the night everything will be happen fine. So this trial and error thing will happen initially, and eventually things will work fine.
Okay, thank you so much.
Ma'am, I have a query.
Yes, ma'am.
Barsha?
Yes, ma'am. Yes, ma'am.
Yes. See, I have a voluntary liquidation going on since 3 years now. Okay. We were able to, it is pending due to refund being not released by the income tax department. Now, while we were doing some filings with the income tax department, suddenly the account has been blocked for some security purpose. And we've been contacting the income tax department. We have also visited AO for it to change, but it is not happening. So I need some practical guidance on what best could be done, because unless and until we don't find the replies with the assessments going on, we will not get the refund. And if we don't get the refund, we cannot close the voluntary liquidation. So it's like cascading effect.
So I'll give you one practical example that I have also faced in one of my matter and how I have dealt with that matter. So when it comes to, income tax refund or say some security deposit with some regulatory authorities, there may be a delay in receiving those refunds. However, the liquidation process is a time-bound process. I cannot wait for the infinite time to, these refunds to come in my account. Now, when there are limited contributors in the company, say suppose only 2-3 contributors are there, I have realized all the other assets, I have paid all the other liabilities, only this income tax refund or the other statutory deposits are there pending with their statutory regulatory authorities, right? So what we can do is there's a provision for in-kind distribution. We can take shelter of that particular provision. What is to be done is the amount whatsoever you will receive from income tax department will also accompany by interest, right? So we can say, we can pass a resolution, or we can have a meeting of contributors, and there we can enter a, pass necessary resolution therein that as and when this amount will be received, this amount will be distributed among the contributors in proportion to their contribution. Because all the other liabilities are met, all the other liquidation costs are already met. So whatsoever amount you will receive, say suppose you are receiving the amount after 5 years later. So as and when you will receive them, what will you do? You will distribute that amount among the contributors in the proportion to that contribution only. So that work you are doing at this stage itself, instead of you doing this contribution, you are asking the contributors to distribute among yourself as and when this amount will be received. So you are not required to wait for the income tax refund to receive, and can submit this affidavit to be taken from the respective contributors that as and when this amount will be received, they will distribute this amount in proportion to the contribution in the capital of the company by way of in-kind distribution. So you are making this distribution by way of in-kind distribution, certainly. And there is a provision that allows you to have in-kind distribution for these kinds of assets.
So now my question is, like you said that I have to take the shelter of an in-kind distribution. Okay. So if I go with that provision, so what will happen to the bank account which is operational? So like when I do a final reporting to the NCLT and the order gets passed, so the bank account will remain open, and what will be the status? Like how practically things will work?
Like affidavit, I understand that affidavit I am supposed to take from the contributors, the shareholders, that whenever this amount will come, I will be sharing them. But
so this bank account, obviously, income tax department refunds the amount in the bank account that you have mentioned in your income tax return. So for that reason, you have to maintain this account, this liquidation account. But because the liquidation process getting closed, or you are submitting the dissolution application along with the final report with the NCLT, now you have to close with this account because you have already taken the affidavit that whatsoever amount will be received, the amount will be distributed among themselves in the proportion to their contribution. So what you can do here is you can take out the money from the account, keeping a minimal amount there. That amount also will be distributed among the contributors in proportion to their contribution, because the minimum amount has to be maintained in the bank account. If say suppose your bank is allowing you to have a zero balance account, in that case it's well and good. If say suppose the bank is not allowing, in that case a minimal amount can be left in that account, and remaining all the amount can be taken out from that particular account, and that account will be converted from liquidation account to general account. So the account was a special account till the time you have done the voluntary liquidation. Once you are done with the voluntary liquidation, you can ask the bank, you can provide the necessary affidavits that you have taken from the contributors. You can say to the bank that now, merely for the purpose of this income tax refund, this account has to be maintained. And as and when this amount will be received, this amount will be distributed among themselves, among the contributors, and this account will be closed. This account will not be used for any other purpose apart from this income tax refund, such that contributors cannot use this account for any other purpose. The moment the bank will receive the amount, bank will distribute the amount among the contributors, and the account will be closed. So this practical procedure we have also followed. While the order is still pending from the NCLT to receive, means the final hearing from NCLT is pending. However, in this manner, we have handled to, to complete the voluntary liquidation process from our end.
Two
Can
practical
you
questions, ma'am.
specify?
Sorry.
Excuse me.
Sorry.
Can you specific? No problem, sir. So Barka, can you just specify which section provides this in-kind provision, please?
This in-kind distribution you're talking about?
Yes.
Just a second. Neha, can you please just quickly check this in-kind distribution part?
Meantime, can I ask my question, please?
Yes, sir. Yes, sir, please.
Yeah. So, excellent presentation, but two small practical questions. Initially, when you start actually the process, you basically are required to open an involuntary liquidation bank account. Can you actually continue with the old bank account or not? The reason for this asking the same is that income tax actually basically is linked to the old account. And if we actually want to shift it to the involuntary liquidation account, the refund are mismatched and go back. So if we actually close the old account and the involuntary liquidation structures in the e-platform of income tax today, the refunds are not captured by the involuntary liquidation accounts because of a mismatch, and they go back. So can we continue with that? If we continue with
yes,
that,
of course,
is it not a violation? Sorry?
So we can, of course, continue with the existing account of the company. In fact, in our cases, we have hardly opened a separate liquidation account because there were income tax refund pending to be received from the income tax department. And income tax, you cannot ask the income tax department to refund the amount in the liquidation account and not the earlier account of the company. So what we have done is we have closed all the other accounts of the bank, just kept one account, and then converted that account into liquidation account.
So when you convert that account into involuntary liquidation account,
yes,
what happens is by the name itself, it mismatches and it doesn't come. So we face that as a practical issue. Also, in converting, or if we open a new involuntary liquidation account, maintain the old account in the old name so that there is no mismatch when it comes from the SBI utility and the income tax refunds, it comes into it. There are two challenges that come by. One, you want to control the account, therefore you want to change the signatory. The signatory changes actually by the bank of the directors in the old account. Basically, when you give them as basically the liquidator, they say, well, we'll convert it into involuntary. So it becomes a practical issue and it doesn't get done. And that's one that's the question. So first your comments on it, and then I ask you one more small question.
So in case of this kind of change of existing account of the company, if you are facing difficulty with receiving income tax refund, in that case you can do a separate bank account. You can open a separate bank account and keep this particular account only for the purpose of receiving the income tax refund. If say suppose the income tax department, you are saying that is not allowing you to have the refund, while to be precise, we have received refund irrespective of the fact that we have changed the account's name from the existing name of the company to adding the involuntary liquidation at the end of the account's name. So we have received income tax refund from the income tax department in those accounts as well. However,
I hope
yes,
subsequent inspections by our triple IPs or otherwise, they will not haul us up saying that you're maintaining an account without being involuntary liquidation.
So sir, so far we have not received any such inspection or any such issues from the income tax department. However, certainly yes, if you see that there may be an issue in the continuing with or changing the name of the existing account to another account, so what you can do is whatever money is there, whatever money was there in the existing account of the company, you can transfer the entire money in your account, in the liquidation account basically, keeping a minimal balance in that particular account, as that particular account will be kept only for the purpose of receiving income tax refund. So as and when you receive the income tax refund, you can transfer that money in the liquidation account and close that particular account.
Right. Thank you. Second question is about the fact that the directors initially, gave a solvency structure and they moved on. Subsequently, one of the directors, in fact, who was undergoing various issues with the MCA, had an issue where he was disqualified under 164. And 164 disqualification was largely because his other companies were not in proper shape and they had not filed, etc., and therefore he was disqualified. Does it actually structure, vitiate our insolvency process start that is there? And he had then not communicated anything about the company. We were not required to know anything about the company, but the proceedings initially that were ongoing at the ROC MCA level resulted in the disqualification. What is your view on it?
So sir, this disqualification you are saying arises after commencement of the voluntary liquidation process or before commencement?
Well, the order on disqualification is prior to the voluntary liquidation, however, in public domain after voluntary liquidation.
So if say suppose in the declaration, the disqualification of directors happened after the commencement of liquidation, then you have already received the declaration of solvency from the director of the company and you have already proceeded with the process. So if say suppose even after receiving that, you are saying that the company, the director has given the declaration, but the company is still solvent. So the declaration given by the director is not wrong. It's just that the director has become disqualified, and still you have the majority of directors' declaration in hand, then you should continue with the process. There's no reason to discontinue the process merely because the fact that the director has become disqualified at a later stage.
So typically, I just, just to sort of say that the disqualification of the ROC was 24th March. The insolvency started, or the voluntary liquidation started on 1st of April. The 164 order on the ROC side for its disqualification came on 3rd of April. Now, the order date is March. The insolvency liquidation start date is 1st April. 4th April, it was in the public domain. And there are two directors. So majority means that he's not there then.
So if the disqualification arises before the commencement of liquidation, irrespective of the fact when it came on the public domain, in that case, certainly you have to have a new director on board so that you can take the consent from the majority of directors, because that director has already become disqualified.
Can you take a new director on board after the voluntary liquidation commences?
Before commencement of the process.
Before, all right.
Before commencement. After commencement, there's no need to have any director on board, because the power of director will cease to exist. So director has nothing to do. The only role the director has is to provide the declaration of solvency at the beginning of the process, and during the process to provide you the necessary support with respect to the management of the company to the extent it is required. Otherwise, there's no other reason to have a directors, to have a board, to have a directors once the voluntary liquidation process commences.
Thank you. And last one, small clarification.
Yes.
A vanilla reading of 59.3 proviso would state that if there are any creditors on board, I definitely require their approval. Is that right to say that?
Yes. If
So
there are
even though my solvency basically results in the fact that I have abundant money beyond even the creditors in the balance sheet, I will require their approval to start.
Yes, you have to take. So what you are saying is, first you have the directors are giving declaration that the company is solvent.
Right.
Then shareholders are saying, because shareholders has contributed the money, the
Yes.
shareholders are saying that, okay, you can put the company into the voluntary liquidation.
Yes.
And then you are taking creditors' consent that, see, now I will realize the process and I'll realize all the assets and I'll make distribution towards your dues, whatsoever dues you have with the company. So wait for your dues to be paid off and not to file any other application here and there, because the company is solvent enough and we have the declaration in hand. So it is, in the practical scenario, this is the situation. So of course we require this consent of creditors here, because
So,
here the creditors are not initiating any process.
Yeah, that's right. But then, at the end of the day, that means no voluntary liquidation can commence without the consent of the creditors.
If there are creditors, certainly the consent of creditors are required.
There. All right.
Because earlier, sir, if you recall, there were difference between the members voluntary winding up and creditors voluntary winding up under
Yes.
older regime. Now both the process have merged. So now merging of this process has resulted into taking members consent as well as creditors consent.
Right. Fine. And the new notification about basically holding a stakeholders meeting monthly intervals after 9 months, after 3 months, 90 days.
So, while it is not particularly required to have, meeting of creditors every 90 days or every, quarter, is not particularly mentioned when it comes to voluntary liquidation process. It only says that as and when you are done with the timeline, whether it is 90 days, whether it is 270 days, you are required to hold a meeting of the contributories. Only if you are not done with the process within that given timeline. So to hold a meeting of the respective creditors, to take their consent to continue with the process, to give them the status report as to whatever you have done and what is pending to be done, and then take their consent to continue with the process. So at that time you are required to keep
No, but I think
meeting
there
of
is
the
a new
contributor.
there is a new notification of IBBI which says that you have to hold it every 30 days now.
So this 30 days requirement is not applicable in case of voluntary liquidation matter. It is applicable in case of liquidation regulations, not voluntary liquidations.
And this applies only if we have not completed the process within 90 days to 70 days. Then in that case, from the end of every 90 to 70, within 15 days, we have to call the meeting of contributories.
Right. And finally, one final question. You mentioned that you will never get back the money from the contributories if you have paid them. Whilst it is could be a fact, but how much is the liquidator protected by taking an affidavit from them that they will continue to act as contributories under the Companies Act and be still liable to pay in case of any eventuality?
So, sir, you are paying money to the contributories because they have contributed in the fund of the company. To the extent there were liabilities, you have paid off the liabilities. What will you do with the surplus money? The surplus money has to be returned back to them who had contributed in the incorporation of the company. That is the reason you are giving that money back to them. But say, suppose there are still liabilities pending. You have, while as per your data, as per the claim that you have received pursuant to the public announcement made by you, you have paid all those liabilities, but there may be certain liabilities which eventually arises. Say, suppose some creditors fail to file their claim, but later on they come up with the claim that there are my claim as well. You have not considered my claim. In the voluntary liquidation process, can you say that, no, I'll not consider your claim? You certainly cannot say that, because it is a case of voluntary liquidation, because you are saying that you have enough thing in your table to distribute. So at that time, if say suppose somebody comes up at a later stage before filing the dissolution application, you have to entertain that claim. And if say suppose by the time you have already distributed the surplus money to the contributories, so you are required to ask the contributors to give a certain part from that distribution that are made, so that the liabilities can be made. The idea is that the debt should not impact the surplus money distribution. If there are debts, debt has to be paid first. So the priority, the hierarchy which is provided in section 53 has to be met, irrespective of the fact it is voluntary liquidation.
Finally, one small technical more question. You are very, very clear. So I'll take the opportunity. So if, for example, after making payments to all creditors, you are left with an asset of a share of a group company of the same company internationally, You mentioned we could use the provision of basically making payment in kind. Can we give the shares? And if we do we actually do the valuation of those shares, first pay capital gains here and then give it to them? Or we can actually give them the money, give them the shares otherwise?
So first we have to evaluate if these assets that you are referring to are realizable asset or not. There may be asset of a company which is otherwise have no value at all. So can you just continue with the process with merely because of the fact that you are holding some shares of some vulnerable company which eventually will not fetch you any value? So can you sit with those kind of asset? Of course you can. But if say suppose there are some shares which eventually may fetch you some values, then certainly you should realize those assets and distribute the money. However, if say suppose the realization will be difficult, or the assets are of such nature which may not fetch value immediately but will take longer time, and eventually you have made payment to all the debts of the company, the only asset which is pending for realization or the pending for distribution is this asset only. In that case, you can certainly take approval of your contributors that this is the only asset because of which I am stuck. Either you have to wait for the asset to be realized. I am not giving you a certain timeline by which I'll be able to realize this asset. Either you have to wait for that timeline, or you can decide among yourself that as and when this asset will be realized, you will distribute them among yourself, because I am done with the process. I have paid all the debt. So either way, the liquidator can continue.
Thank you. Thank you very much.
Thank you so much, sir. Thank you.
Ma'am, Barkha?
Yes, sir. Yes, ma'am.
Yes. Regarding that in-kind
distribution.
contribution. Yes. So I think section 35, I mean the third point, which it says that if there is asset which cannot be readily or advantageously sold out
due to its peculiar nature, that the
nature.
same can be distributed. So this section, this regulation 35(3) is there, pursuant to which in-kind distribution can be made.
Okay. Now, second question or second practical issue which I'm facing is anybody has faced and done some research on it, that the income tax account has been locked due to security reasons, and the AO is also not able to respond correctly. We have visited the AO for the same, but nor it is getting any resolution being given by the AO, and the account is completely blocked, and because of which we are not able to reply to the any notices which we are receiving for the refund related, and hence the refund is also not coming. So if anybody has, if you have faced a practical issue and what actions which you took can help us out in getting the activation of the income tax account.
Ma'am, with the grace of God, we have not faced this particular issue that our income tax account itself has got locked. So we have not faced this particular issue so far. And I believe that even if we are facing any kind of issues with respect to, the account got locked because of the wrong credentials or all. So there should always be a back-end issue which the respective help desk department of the respective departments should help us with. So if in income tax also, I believe that the back-end department of the help desk department of income tax department should help us out with how to have the credential back and how to proceed with the login. Because if you are unable to log in to get the notices, you will not be able to log in to file the returns as well. So मेरा पैसा आप नहीं दे रहे हो, ठीक है, आपका पैसा भी तो मेरे को देना है, वो मैं कैसे दूं? मेरे पैसे के लिए आप नहीं कर रहे हो, मत करो, अपने पैसे के लिए तो करो, ऐसा.
चल ठीक है. I'll see if I could get some issue on it. And thank you so much. It was really good presentation, and lot of issues and lot of practical things were resolved.
Thank you.
Thank you so much.
Thank you. I think Neha, we are done with the questions. Okay, thank you so much ICSI IIP for giving us this opportunity, and thank you so much to all the participants for being interactive during the session. It was wonderful session, and it was wonderful to interact with you all. Thank you so much for this opportunity.
Thank you very much, ma'am. The session was very wonderful and interactive. Ma'am, I request you to share the presentation so that I can share with the participants.
Yes, surely we'll provide the presentation. Thank you.
Now, participant, there is lunch break till 2 p.m. Next session will be started at 2.
2 or 2:30? It's 2 o'clock.
2 o'clock.
Okay, thank you.
Amit sir, are you there?
Yes, Anjali.
Shall we start, sir?
Yes, yes.
हेलो हेलो वेरी गुड आफ्टरनून। तो मैंने आपको मेल डाल दी है, तो उसमें अगर कोई आपके क्वेश्चंस होंगे तो आप मेरे को बता देना।
Good afternoon, everyone. Now the session will be taken up by Mr. Amit Gupta, sir. Sir will be taking the topic practical issues faced during liquidation process. Sir is member of ICSI and insolvency professional. He is engaged in practice of profession for the last 20 years in corporate and allied laws and providing out-of-box solution on complex legal and strategic management issues. He is a science and law graduate and diploma holder in banking and finance from Institute of Chartered Financial Analysts of India. He is chairman of Corporate Law Committee of NIRC and member of Secretarial Standard Board. He is keen academician actively serving the profession and has made significant contribution in various publications released by ICSI and is also a member of Secretarial Standard Board. Now I request sir to start the session.
Thank you, Anjali, and thank you, ICSI IIP, for giving this opportunity to interact once again with my learned professional colleagues. The law of insolvency has been so very dynamic and so very evolving that it keeps us engaged and keeps providing us the opportunity to interact on a continuous basis so that we can share our views and we can learn from each other. That is what I'm going to do in next couple of hours of time. So the strategy remains same. We will involve the participant. We will engage them. We will make the discussion. You are free to interrupt during the session at any point of time. We can resolve the issue then and there, discuss, and then move forward. The structure that I'm going to follow with regard to today's discussion, which is primarily on the liquidation and voluntary liquidation. So we will cover these things, but there has been a consistent demand from the fraternity that we should also have a holistic view as to what are the exit options available to the corporate houses, because when it comes to choosing a voluntary liquidation, we also many times are in a dilemma. Is there any other better option, or what all other options are available? I think we will spend some time for that also. And then we'll discuss the voluntary liquidation in detail, and then we'll come to the liquidation process under section 33, which is going to take some more time. And we'll discuss the few of the landmark case studies also to understand what are the nuances. So if we broadly bifurcate the exit opportunities available to a corporate, in ease of doing business, government though has been trying very hard and has provided a framework for even for the exit of the corporate entities also. Exit means we are talking about their dissolution by way of a legal process. So if we broadly understand what is on the platter today available to the corporate houses for taking an exit, then we can broadly divide it into two parts. One under the Insolvency and Bankruptcy Code 2016, and one which is available under the Companies Act 2013. So if I say under Companies Act 2013, one way of dissolution could be under section 248, which is more prominently known as striking off. where again there are one suo motu power of the registrar, one action on the part of the decision taken by the shareholders. Either way, but that is one of the option where you are able to dissolve the company without following the winding up process. This is very important, the last line, that is the without winding up process. And there is one more rider that within 20 years of time, any aggrieved person may file an application before tribunal for the purpose of restoration of that striked off entity. So this point has to be kept in mind. The other way, which is also quite a popular, which is we have group of 10 entities, and we are intending to continue a business into one of the entity, and other entities are not likely to continue. 9 entities can be merged into 10 entities, the 10th entity, and the 9 entities will go for dissolution, here also without winding up, because they are amalgamated to the transferee company. And the provisions which will be applicable as per the provisions of section 230, 31, 32, and if it is a fast track, then 233 will be the relevant provision. Then there is one more lesser known provision, which is under section 271, 272. We'll spend some time as to what is the scope of winding up under section 271, 272, which is lesser known territory for many of us. Then there is one more carve out in the same chapter in which 271, 272 falls. That is a fast track or a summary liquidation under section 361. We'll see on which all companies this option is also available. Then we move to the second legislative framework, which is under the Insolvency and Bankruptcy Code. Starting from 1st of December 2016, the scheme of the Government of India is any corporate which is not in a position to repay or fulfill its legitimate debt obligation or legitimate dues payment will have to compulsorily undergo the resolution process that is called a corporate insolvency resolution process. And only if within the prescribed period of time, that is 180 plus 90 or 330, whatever is allowed, we don't have any resolution possibility, or the committee of creditor decides otherwise prior to that, or the resolution plan is not approved by the committee of creditor or adjudicating authority, the liquidation will be resorted to. And just to remind that in the preamble of Insolvency and Bankruptcy Code, nowhere there is a talking about a liquidation. Insolvency and Bankruptcy Code talks about a possibility of resolution only, and the outcome of failure of resolution process is a liquidation. That is how the scheme is. So this is a significant shift from the previous regime under the 1956 Act to the new regime. We have to bear this in mind, that if there is an entity which is not in a position to repay its debt, cannot go for opting a voluntary liquidation under section 59 because it may not be solvent. Vice versa, it may be solvent also, depends what kind of financial statement it has. If its financial statement is having a solvency, then of course the management can decide under section 59 voluntary liquidation also, but otherwise they have no option than to explore the possibility of filing section 7, section 9 or section 10 petition, explore the resolution plan. If resolution plan is not coming forward, you take the route of liquidation and liquidate the company and distribute the assets as per mandate given under section 53 of the IB code. And then last option, which is the voluntary liquidation, which is primarily for the entities which were created for a specific purpose. Let's say we have created one SPV for construction of a project, and project has got completed. Now there is no more business. We have got 100 crore rupees as a reserve in that entity and we want to distribute. And there is no other legal way by which you can distribute these proceeds among the shareholders. So what happens in those cases? We are taking a route of section 59 and distributing the assets as per the provisions of section 59 to the shareholders. Because if we take the route of, let us say, somebody can say, I can distribute the proceeds by way of a dividend distribution. Now in dividend also there is a cap that how much amount of dividend you can distribute, particularly if the amount is parked in your reserve account. If it is in profit and loss account, then of course there is no restriction. You can distribute the entire amount and then you can go for a strike off of the company also. But if your amount is parked in a reserve account, then the dividend distribution rules, taking out of dividend from the reserve, there is a restriction. You cannot take out the money in one go. You'll have to take 3, 4, 5-step process. Still there will be some money which will be lying in the reserve account. Similarly, buyback is also capped to the 25% of the total limit, beyond which you cannot perhaps go for even buyback route also. So seems that there is no other option viable more than 59 route in those cases where you have the limited objective of taking out the funds which is available in your profit and loss account or in reserve account, so that the proceeds can be distributed in an equitable manner to the respective shareholder. I think Rajesh sir has raised the hand. Sir, please unmute and raise.
Yes, thank you so much, Amit ji. So, under the Companies Act, there is one more provision contained in section 375. So, in case you can touch upon that also, because section 375 basically talks of winding up of unregistered companies.
Unregistered. Fair
And
enough.
this section also defines what are the unregistered companies. So I'm wondering, once a company is struck off under section 248, so that means it becomes an unregistered company under the Companies Act. So whether such kind of company can come within the purview of section 375, then
no,
it also talks of
okay, all right, complete, then I'll
association. Yeah. It also talks of partnership firm, registered cooperative society, then association of persons as unregistered companies, which can be subject matter of winding up under 375.
So we can read 375 together. Allow me a minute. I'll just
Yeah,
open.
please.
I have raised a very important point, and let us travel to 375 also together.
That's actually very interesting provision. And I have discussed it at a couple of times in some forums. But mostly people are not aware about this section 375 provision.
That is in part 2, and let me
Part 2,
allow
yes.
share the screen also. All right. I hope the screen is visible.
Yeah, it's visible.
So here it goes. Let us read first couple of sub clauses, and then we'll dissect it as to what is the purpose. 375 starts with the subject to provisions of this part. Any unregistered company may be wound up under this act in such manner as may be prescribed, and all the provisions of this act with respect to winding up shall apply to unregistered company with exceptions and additions mentioned in subsection 224. Now, what is the meaning of unregistered company? That is, I think, one point of debate
That's
where
contained in explanation.
explanation. So
Yeah,
explanation says, for the purpose of this part, the expression unregistered company shall not include a railway
correct.
company, which is a specific act, a company registered under this act, a company registered under any previous company law, or and not being company the registered office whereof was in Burma or some specified. All right. Then save as aforesaid shall include partnership, limited liability partnership, society, cooperative society, association, or company consisting of more than 7 members at the time when the petition for winding up the partnership form, limited liability partnership, society, cooperative society, association, or company as the case may be is presented before the tribunal. Now, coming to your rest of the process, I think the more or less the language, what it suggests that the process by and large subject to the exception provided in this particular section, subsection 4.5 will
And
be,
subsection 4 is also very important.
yeah. 4, it says that the unregistered company shall, for the purpose of this act, be deemed to be unable to pay its debt for a creditor by an assignment, or I think, yes, it is talking about some particular peculiar situation, which we will come little later. But the point that you raised, a company which is struck off in terms of the provisions of section 248, whether falls in the definition of unregistered company. Now, it is a matter of interpretation that company which is struck off, whether that company can be called unregistered company, or it is just that name is struck off from the registrar of companies register. To best
So
of
once
my
the name is struck
understanding,
off from the register, so that essentially would mean that it is deregistered now.
sir,
Thereafter, no.
maybe I will say I will because what happens if you see section 248 and subclause 8, 248.8, 248.8 provides that nothing in this section shall prevent the winding up of a company which has been struck off. If I'm not wrong, the language reads like that only.
Right.
So I'm saying, in any case, if I am a company which is struck off under section 248, I can always go and file a winding up application under section 271. There is nothing in law which stops me. Contributory under section 272 can file an application under section 271. I did not invoke the provisions of section 375 for the purpose of it's winding up under section 375. Now that is, and we have been doing so also in the past also we have done, and the company which have been struck off by the registrar of company, we have filed the application under section 271, and especially in those cases, the companies which have been struck off with properties. So there was an immovable property which was lying in the company. Company was struck off by the registrar of company, And later on, when it was discovered, then we filed the application under section 271, 272, and the winding up order has been passed and the company has been dissolved, wound up by following the process under section 271. So I particularly, and this similar provision was there in the 1956 Act also, right? If I draw the analogy, and so far best of my understanding, the 375 was essentially oriented towards the winding up of those companies which essentially are not registered but are qualifying to the characteristics, and government want to wound up for the beneficial purpose of the society. And that was the provision in the 56 Act also, if I'm not wrong. And similar provision has been carried out here also. That's why they have included, if you form a partnership firm with number more than what is prescribed for the partnership firm, right? Then the provisions of 375 will become applicable. Likewise, society can also be considered as unregistered company if it meets those number criteria, and those entities perhaps will be fit for wound up under this provision. To be very
Well, this
honest,
association of persons makes it very, very large scope in scope.
I have
Association of
not seen,
persons.
yeah, I understand. So, if I can put my thought to it, I will say why government has kept these provisions under section 375. It is just like enabling provision, that tomorrow if government of India finds any association of person involved into some illegitimate activities, right? And they want to, they are prosecuting that entity also, that they had amassed a large amount of assets and capital, and that against the public interest. Right now government wants that, okay, all right, we have now initiated the prosecution against them, but what to do? So to enable that, 375 is a residuary provision wherein all these kind of unregistered entities can also be liquidated and wound up, and the beneficial distribution can be made to the people who are claimant as per the provisions.
But it talks of inability to pay debts. It talks of inability. If suppose the association of persons, say for example a trust, is unable to make payment of its debts and it comprises of more than 7 trustees.
No,
So that within the rigors of this section.
Rajan sir, I think we'll have to apply the provisions of other provisions of winding up also, because if we read section 375 starting para, which says that subject to provisions of this part, any unregistered company may be wound up under this act in such manner as may be prescribed, and all the provisions of the act with respect to winding up shall apply to unregistered company, with the exception and addition mentioned in subsection 2 to 4. So 2 to 4 are to be also kept in mind and to be followed. But these are not the only provisions under which the winding up of unregistered company will be governed. So saying that if there is a AOP who is able to pay the debt and government wants to wind up, they cannot wind up. I don't buy this view. I feel that is the...
No, I'm not saying that. Government can do that, but I am saying that this provision can be used in the same manner as 433 was used in case of companies, inability to pay debts.
Yeah, that is
Because
also...
the limit here is 1 lakh, you give a statutory notice.
That is a enabling provision under subsection 4. Those are even 3 and 4 if you read both together. So yes, those situations can also trigger a winding up application of those association of persons. So suppose you are dealing with some trust or AOP who is unable to pay the debt, you can file application under section 375 for winding up of that particular AOP also. That is the reading what I am able to make. But coming to the point that you initially mentioned, that whether section 248 struck off company will also qualify, that still I am not able to evaluate as of now, because I feel those companies will still be considered as companies registered. Maybe they are deregistered as of now, but since they have already been dissolved, there is another provision under section 271, 272, which is not stopping them to come forward and file the application. So I feel those provisions will still be available to them, and it really does not matter. Means if I say this is one more provision under which perhaps they can fall, because there is no deterrence that you cannot come into that particular provision. But when I'm saying, when I am already eligible under section 271 and courts are recognizing me as a contributory or as a company, then there is no need perhaps that I should explore the possibility of 375 also. Maybe
But
I'll
if we see subsection 5 of 248 and then
yeah.
subsection 8, are these not contradictory? Because subsection 5 says the company shall stand dissolved.
So
And
there
the
is
stage of dissolution comes much after the winding up.
No. That is the beauty. I'll explain that. My reading goes, the term winding up, term dissolution, and term liquidation are three different terms. And not necessary that I cannot achieve dissolution without winding up. One example that I gave, I can achieve the
Of course, that's there. That's right.
I can achieve the dissolution even through merger. There is no winding up in the case of merger. Similarly,
No,
under
but once
strike
the
of
dissolution is done, so dissolution
I'll come.
essentially means strike.
No, sir, not at all. So in strike off, even in section 560 also the similar provision was existing, which was enabling that I can wind up my company. I can wind up the affairs of the company which is dissolved in terms of provisions of section 560 of the Act. So there is a possibility. I don't see that there is any contradiction. Dissolution is that yes, because you were not doing any business, you have decided that you want your name to be struck off from the registrar of companies register, and then you have filed the application, or registrar suo motu has found and they have struck off your company, and that means the company will stand dissolved in the books of the registrar, in the records of the MCA records. That is the objective, but that is not by way of winding up. In winding up process, you will distribute the assets, you will liquidate the company, right? And then the dissolution will be achieved. So winding up process has a possibility in cases where you have section 248 order also. That's the way. And I have no doubt on this particular provision, because there are many companies. I'll share you those orders also. I think Puja Roller Floor Mill was one very recent order of NCLT Delhi, wherein the struck off company has been wound up. And even there are two NCLAT order also. I'll share you those orders also, wherein very categorically it has been decided that 248(8) is very clear in mandate, and these companies which have been struck off, there is nothing in law to stop that the company cannot be wound up for the beneficial purpose. Now I'll touch upon this particular point again when we come to particular reference of discussion. Let me just resume the discussion where we were at, and then we'll.
Yeah, thank you so much.
Yeah. So we had just taken an overview as to what are the exit options available in terms of this, and good that Dr. Rajan has specified 375 also. So we will henceforth include that also in this presentation, so that we can have it holistically understood. Now, we have discussed, although strike off is an option, as I mentioned, that it is a dissolution without winding up. A strike off company may be restored within 20 years by the order of NCLT. And prerequisites, if I talk about the prerequisites, are like there should not be any business operation for the previous 2 years. And there is a requirement of a nil balance sheet and consent of 75% of shareholder. or passing of special resolution is required, and you have to file the application in the prescribed form with affidavit, indemnity bond, and the other requirements which are specified in section 248 and the rules made thereunder. And your now the CPACE is the authority who on a central basis looks into your application and process, and by publication in the official gazette they invite the public comments, and after that under 248(5) the notification is issued for striking off name of the company, and company stands dissolved in the records of the MCA. Second option, again we have discussed and we'll touch upon the slightly. It is again a dissolution without winding up, and it is done through the scheme under section 230, 233. 230, 232 will be through the NCLT, and 233 of course will be through the regional director. And in this case, the transferor companies gets dissolved by virtue of the amalgamation or merger order of NCLT or regional director in the transferee company, and they are amalgamated to the transferee company, and transferor company gets dissolved. So the prerequisite is that, and that's why you are required to furnish the report of official liquidator. So official liquidator role is involved because that the company, transferor company, is getting dissolved. In case of demerger, there is no such requirement because the company, none of the company is getting dissolved. So OL report is not required to be obtained in the case of demerger applications. That's the reason. Now coming to the winding up under section 271, 272, this is a dissolution after winding up, and dissolution order is passed under section 302 of the Companies Act. Who can file the application? In addition to the registrar of companies, central government, state government, who have the inherent power to file these applications, the power has been, which is for our use, is the power to the company and to the contributory, that they can also file the application for winding up under section 271, 272. Now, how this, in what circumstances this application can be filed? If company is filing, then of course it will require a special resolution of shareholders. If it is filed by contributory, so contributory will sign the application, or in other four situations wherein the security, sovereignty, integrity is in difficulty, then the government or the registrar of company or the state government may file an application. Suppose some state government is in Assam or in Mizoram, and some company is working or involved into the anti-national activities. Tomorrow it is found, then registrar can or the respective state government can initiate an application before the NCLT of the concerned jurisdiction, and that company may be wound up, and even the investigation can also be ordered. Similarly, if government finds any company is involved into the fraudulent conduct of affair or fraudulent conduct of their business, then in those cases also they can file an application, and many such applications have been filed in the past also. Then there is one more clause that if you don't file the file the balance sheet or the financial statement or the annual return for any 5 years period, then you have the registrar has the power to wind up those companies. If you don't file your financial statement and your annual return for the period of 2 years, we have seen the companies are getting disqualified, directors are getting disqualified, and many of such instances have been done in the past also, and the companies have also been struck off. But this is in addition, because striking off may not be possible in those cases where an entity is a Section 8 entity, especially and where the entity is having some charge registered, or entity is having a, let's say, a government company, because that company can also not be struck off by the order of the registrar. So these are few limitations which are not applicable in the case of section 271. So if Government of India wants to initiate any action against these company, provided these conditions are fulfilled, then they can also file. And last but not the least, on just an equitable ground also, the tribunal can pass the order of winding up under section 271, 272. So on just an equitable ground, so if contributory is filing an application and there is a asset involved in the company which is dissolved without winding up, can file an application on just an equitable ground that it will be a great injustice if the company remains dissolved without the proceeds of the, without the distribution of the property which is lying therein. So it would be just and equitable to distribute the property also among its stakeholder, among its claimant, so that on that ground the claim can be submitted. Then there is one more.
So, if you allow, I have a question.
Yeah, Saurabh.
Yes, sir. Thank you, sir. So, in like 271 and 272, the company has also right to file the application for the dissolution and for the winding up. And there's a separate mechanism under the Insolvency and Bankruptcy Code as per Section 10. The company may also file the application. So, what is the differentiate between both of this procedure? Why the same is in existence? If the company is solvent, then company may file the application in Section 59. If the company is insolvent,
I'll tell. Very good question. In fact, I was thinking to answer it at the end of this framework discussion. But good that you have asked, so I'll answer that at this point of time itself. See the difference between, as I mentioned, when the Insolvency and Bankruptcy Code, if you see the scheme when the Companies Act 2013 was legislated, originally all the provisions with regard to winding up as were there in the 1956 Act, they were copy pasted in the 2013 Act also. But later on, when in 2015, this law was getting enacted, and in fact 2014 itself, when the law was enacted, process was initiated and the BLRC committee was recommended, and the law came into force on 1st of December 2016, the Insolvency and Bankruptcy Code. The intent of Government of India for legislating insolvency and bankruptcy as a code, not as an act, was to provide a comprehensive framework for dealing with stressed assets in respect of all kind of situations, whether it is their resolution, whether it is their liquidation, whether it is in respect of the settlement of claims, whether it is in respect of their priorities, whether it was in respect of body corporate, whether it's in respect of individual partnership firm. You think of the situation, and at the same point of time, there were as many as 6 to 8 legislations which were also amended, SARFAC, DRT, and all these BIFR, SICA was repealed by virtue of this particular provision. So idea was that, and government mandate was very clear, that any entity which has been in existence for certain period of time or has been created cannot be closed unless one opportunity of its revival is explored. That is the mandate under the corporate insolvency resolution process. So if you are in default, you are not allowed to go for dissolution directly, as against the provisions of section 433 of the Companies Act 1956, where if you were not able to pay the sum of rupees of 500 debt which was legitimately due to some other creditor, then he may prefer an application before Honorable High Court at that point of time, and High Court could pass the order of winding up. So straight, maybe your company is 1,000 crore net worth, But if you are not paying the legitimate dues of 500 just rupees, then 433 winding up order could be passed. Maybe this was just a threatening and ultimately the money was paid and the settlement was arrived. That's a different matter, but the process was rolled out. Government, when was considering the insolvency and bankruptcy code, thought that it is not correct. When substantial efforts of a people, substantial effort of the company have undergone in creating an asset, which is creating economic value, which is generating employment to the society, which is adding value to the nation, it should not go directly to the dissolution unless and until one attempt for resolution is made. That is the spirit behind the insolvency and bankruptcy code. So now once we understand this background, perhaps we'll understand the framework for its resolution also. When insolvency and bankruptcy code was enacted, so the scheme, as I mentioned, that you have to compulsorily go. If you are insolvent, you have no option but to go compulsorily to the resolution process under insolvency and bankruptcy code. You can't afford that you will not undergo the process of CIRP if you are insolvent. If you are insolvent, then you have to compulsorily go for the process of corporate insolvency resolution process only. Just give me a second. Just give me a second. Sorry. So I was saying when you are unable to pay debt, that means you are insolvent, right? If you are insolvent, then you have no option but to go under insolvency and bankruptcy code. You cannot initiate 59 voluntary liquidation. You cannot opt for any other option also. You have no option but to go and explore the possibility of resolution, or if resolution is not possible, then you go for liquidation under the provisions of section 33 of the insolvency and bankruptcy code. So one underlying difference between the winding up under section 271, 272, if it is initiated by the company, it can only be initiated in those cases where you are solvent, right? If you have a solvency, you have a choice whether you go under 59 or you go under 271. But if you are insolvent, you have no option but to go under section 7, 9 or 10. If you are going on your own, then section 10 is the only option. But that's too, you have to explore the possibility of resolution first, and resolution fails, then only you will be liquidated. That is the broad scheme under which you have to fit into. But if you are solvent, then there is nothing in the law that stops you. You can explore the possibility of section 59. You can explore the possibility of section 271, 272 also. Or if you are fitted into the situation, you can explore the summary liquidation also. Now, so either of the three options are available. So the test that you have to make when the client comes to you, whether an entity is solvent or insolvent. If solvent, then you can explore between 59 and 271. 100 times 59 is better. I will tell you why. Because in 59, the process is rolled out by the shareholder itself. Shareholder are one who passes the resolution by special resolution, and the liquidator is appointed. You complete the whole process. You accept the claim, you make the advertisement, you settle the claim, distribute the proceeds, and after that you prepare the resolution report and file it to the National Company Law Tribunal, who is the adjudicating authority. And adjudicating authority, relying on your report, passes the order of liquidation, and the company is dissolved. Whereas in section 271, the process requires the prior order of National Company Law Tribunal. Unless you pass the order, the admission of petition is not done, the liquidator is not appointed. The appointment of liquidator, who is a company liquidator in this case, there is no difference. Even I go through the process of section 271 also, even the insolvency professional only will be appointed. Under 59 also only insolvency professional will be appointed. But in one case, the appointment of insolvency professional requires the order of NCLT. In the other case, it does not require the order of NCLT. It can trigger automatically by way of a shareholder resolution. So that's the broad difference between 59 voluntary winding up and the winding up under section 271 and the provisions of section 10. 7 and 9 I am not touching because 7 and 9 are creditor driven, right? Either it is the financial creditor or the operational creditor. I hope, Saurabh, it answers your question.
Yes, sir. Very clear, sir. Thank you. Thank you so much.
So we were talking about summary liquidation. Just give me a second. Just give me a second. Someone let me. Sorry. So we were talking about one special liquidation process also, which is provided since 2020. Prior to that, these provisions were not notified. 361 is a provision which talks about the summary liquidation. And this is also a dissolution after winding up of the central government. And application may be filed by the company or by contributory or by the registrar of company central government. Now, in this case, why it is summary? Because here the appointment is done of an official liquidator. The official liquidator under the old 1956 Act, the OL office, who is appointed by the respective concerned High Court, who is connected with that. And in this case, the report is required to be submitted by him within 30 days. And the report is submitted to the regional director because here the approving authority is a regional director. So this entire process is summary because it is assumed that the stakes are not very high, because it is applicable only in those cases where the book value of the assets are not exceeding 1 crore. Second condition is that the company which has taken deposit and total outstanding deposit are not exceeding rupees 25 lakhs, or the company has not the outstanding loan, including secured loan, exceeding rupees 50 lakhs, turnover not exceeding rupees 50 crore, and paid up capital does not exceed rupees 1 crore. So these are either of the, so book value should not exceed, that is one condition, and your deposit amount, your outstanding loan amount, your turnover, your capital, if all these conditions are fulfilled, you are fit for summary dissolution in terms of summary liquidation in terms of provisions of section 361, and the regional director will pass the order. So you can see the fast forward process in which the entire liquidation process can be completed. There cannot be a more faster process, but provided the regional director is taking interest in taking this particular adoption, because so far, to best of our understanding, when we are taking a dialogue with the respective concerned regional director, so far they are also not equipped with the systems and processes are not there. So even appointment of liquidator is also taking time, even coming his report is also taking time. And likewise, so the entire process is getting delayed and dragged upon, right? But if you talk about the spirit of this particular provision, The idea is that if the stakes are not very high, the fast track process should be followed under section 361 and the dissolution order should be available to the company on a fast track mode basis. It is as fast as 3 months time, the entire process could be completed. But this is still in a very nascent stage, because majority of though there are a couple of orders, but I think majority of the places still we are struggling in apprising to the respective regional director in respect of these legal provisions, and they are also in process of building their own SOPs for the same. Now we come to the process of liquidation under insolvency and bankruptcy code. So this is a dissolution after liquidation. Under section 33, we cannot file application under liquidation directly. As I mentioned, only section 7, 9, 10 application can be filed, and only in these 4 situations which we have mentioned, that is one where the committee of creditor has been constituted with 66% majority vote, they decide before 180 days expiry that there is no possibility of resolution. We want the company to be dissolved. So there is a possibility of liquidation of this entity. There is one more interesting case I have just found a couple of months back. There are 2 orders of NCLT. I think one is of Mumbai and one is of some other bench. I am not recalling, where even dissolution order has been passed without appointment of a liquidator. In those cases, those were the facts of those cases were like there was no asset at all. There was no promoter available. Now the process was initiated, nobody turned up, even during the admission process, even during the CIRP process also. So there was not an asset of single rupee. There was not a person who was able to provide. Then even PUF application and such kind of application was also not preferred. So the application was made by the RP for direct dissolution, and the dissolution application was approved by the NCLT. Of course, creditors were there in those cases, but there was no asset available. So committee of creditor decided to file the dissolution application directly. So in situation number 1, there could be 2 variation. One where the liquidation process will be undergone, and the other where the direct dissolution process can also be undertaken. Second option is no resolution plan is approved by the committee of creditor within 180 days, and or whatever time has been extended. And ultimately what will happen if no resolution plan comes, the company has to, the adjudicating authority has to pass the liquidation order under section 33. Or third situation is that committee of creditor has approved the resolution plan and submitted to the adjudicating authority also, but adjudicating authority has rejected that application plan, maybe on the grounds which are permitted, because the scope of inquiry in terms of approval of resolution plan is very limited. Not on other grounds it can be rejected, but of course on those very technical ground as per the framework of law it is rejected, then also liquidation will be ordered. Fourth situation is where the resolution plan has been approved by the adjudicating authority. However, during implementation, the resolution applicant has failed and implementation could not be completed. So these are 4 situations in which the liquidation can be ordered under section 33. Again, I am repeating, as a matter of right, you cannot straight file application under section 33 for the liquidation. You have to compulsorily come through the process of section 7, 9 or 10. And then once the resolution, either committee of creditor decides and you fit into any of these 4 criteria, then only you will be allowed to take the route of section 33 liquidation. So solvency is not in existence in these cases, of course, because there is an inability to pay the debt. That's why your section 7, 9 or 10 must have been invoked. So if you are insolvent, as I was mentioning earlier, you have to compulsorily come through the 7, 9, 10 application, resulting into 33, and then 33 process is followed. And the last, that is a voluntary liquidation under section 59, where you are dissolved after voluntary liquidation. Here also you are achieving dissolution, but it is through voluntary liquidation and distribution of proceeds as per section 53. There is no difficulty because 53 waterfall here perhaps is of no use, but because you are solvent, so you will be able to pay all your liability. Now, all dues you will be making payment. There is no haircut required in the voluntary liquidation. The interesting part, as I am repeating again, in this part, the adjudicating authority comes in picture only at the fag end, when the entire process is completed. So this is again a very fast track process where you are getting appointed by the shareholder resolution after taking necessary approval of the shareholder, and board is making the appointment, and after that you file INC 28 and intimate to the IBBI the status of company undergoes change from active to under voluntary liquidation, and thereafter you are appointed as a voluntary liquidator. You invite the claim, then you write to the different authorities, and you distribute the, you sell off the, you distribute the proceeds, and after necessary realization of assets, and then you prepare the report to the submission of adjudicating authority, and adjudicating authority passes the dissolution order. The condition precedent is that the company should be solvent. If you are not solvent, so declaration of solvency is an important test for moving under section 59. You have a via route available that you can go under section 361 or under section 271, but perhaps we will not advise because those are longer routes still, because those require the appointment of a liquidator by authority, like RD will be appointing or the NCLT will be the appointing authority. Here in this case, since the appointing authority is a board of director with the approval of shareholder and the creditors, so your process is not dependent on some external agency. So you can fast forward and complete the whole process, and since there is no compromise involved, whatever you have 100 rupees liability, you have paid 100 rupee. So there is no grievance also of the third party. The only challenge which we have observed in voluntary liquidation is you may have some money to be received from the income tax department, or there may be some receivable, or there may be some legal cases pending before different courts of law. So in these situations, the winding up process may get delayed. Otherwise, it's a mutual arrangement between you and the company, and basis that the process can be completed as early as you wish. So we'll complete the voluntary liquidation process because that is smaller in scope, and then we'll have the question, and then we'll move forward to the liquidation process. So as I was mentioning, the process of voluntary liquidation is very simple. You have to take a declaration from the majority of directors, designated partner of a limited liability partnership firm, that also comes into this. And the declaration is that the company is having a ability to pay its debt in full from the proceeds, whatever you are able to realize. And they have not initiated this process of voluntary liquidation to defraud any person. Now, it is not a designed scheme to defraud any of the person or any of the creditor. Now, then you pass the resolution of shareholder, and then you make the appointment of liquidator, and also take the consent of creditors, if there are. And this process of appointment has to be completed within 4 weeks of filing the declaration. Once you have filed the declaration, within 4 weeks, this process has to be completed. So approval of creditor, yes, 2/3 in the value of the debt. If there are creditors who are in existence, then you have to take that their approval also within 7 days of the passing of the shareholder resolution. You have to intimate to IBBI and to the registrar within 7 days of time. Then public announcement is required to be made within 5 days, inviting them to submit their claim. They will be submitting the claim within 30 days from the liquidation commencement. And after that, you will be making a verification of claim within 30 days. And then you will be preparing the list of stakeholder. And this process has to be completed within 45 days from the last day of inviting or receipt of the claim. Then there is a preliminary report, which is required to be submitted, again internally only, no external agencies involved. You will be preparing a report, and the report is required to be submitted to the corporate person. This is called a preliminary report, and it is to be required to be submitted within 45 days from the liquidation commencement date. It is containing the detail, what is the capital structure, what is the estimate of assets and liabilities. However, if the liquidator has reasons to believe to be recorded in writing that the books of the corporate debtor are not reliable, then he shall also provide such estimate based on the reliable records. And one more responsibility which we can cull out from the various disciplinary orders. It is a duty of the liquidator also to examine whether the company is solvent or not before proceeding further. So that is a due diligence which is required to be undertaken by the insolvency professional also before undertaking such kind of assignment, because once you are appointed as a voluntary liquidator in the matter, right, then you will be responsible for continuing the whole process. Of course, you have a possibility to intimate that this company is no longer a solvent entity and the declarations are wrong, and you can move to adjudicating authority for terminating the entire process, and company will come back to the active status. But to avoid all those things in the beginning itself, we suggest the due diligence process to be completed. Then completion of voluntary liquidation process, as far as the timelines are concerned, these timelines have been revised from time to time, and currently this 12-month timeline is not there. This has been reduced even further, and whenever the 12-month period will be passed over, then stakeholder meeting will be required to be convened, and the report is required to be submitted. Here also it mentions that annual status report in the event the liquidation process continues beyond 12 months, the liquidator shall hold a meeting of contributories of the corporate person within 15 days from the end of the 12 month from the liquidation commencement date, and at the end of every succeeding 12 months till the dissolution process is completed, and the annual status report indicating that the liquidation is in progress, that has to be submitted. And the final report is required to be submitted on the completion of the liquidation proceeding, and this report is required to be filed with the registrar and to IBBI, and basis this you will be submitting your your application to the dissolution application to the adjudicating authority also. Saurabh, I'll just take your question also. Just give me a minute. We will just conclude this and then we'll take. So application has to be filed with the adjudicating authority for providing, and there is a standard checklist provided by the respective adjudicating authority that they want tick box on each of the activity as per the SOP provided, and the dates and other events are culled out in that particular order. And after hearing you, generally maximum 2 or 3 hearings are required for the purpose of making mention of your details. And generally, there is a report required to be submitted by the registrar of companies also. And in some cases, we have seen the income tax department observations are also obtained by the NCLT while passing the dissolution order. Although there is nothing in law which mandates, but as a matter of practice, different adjudicating authorities are having a different practice. Now, preservation of record is again a liability of a liquidator, that he has to preserve the records of whatever the liquidation process he has carried out, and these records are required to be maintained for at least 8 years after the dissolution process is completed. So this is a very you can say mutually agreed process. So there is no as such complexity involved, except in those cases where the litigations are going on before the court of law, or the tax dues are required to be paid or are required to be recovered, or litigation with regard to assessment is ongoing. Now, except in those cases, we have not seen any of the difficulty in respect of completing the voluntary liquidation process within the period of 12 months. Yeah, Saurabh, now we can take up your question.
Yeah, thank you, sir. So my question pertains to the timelines of 270 days and 90 days. As the regulation says that the 270 days is is applicable when the company approve the special resolution which has been passed from the shareholder and confirmed by the shareholder. Otherwise, the company has there's a 90 days for the completion of the liquidation process. In one of the cases, there was no creditor, identified creditors, and the company has initiated the voluntary liquidation process by passing of SR. But there was no creditor, therefore the company has not taken the approval of the creditor. There was no approval is required. Later on, during the voluntary liquidation process, the company received the claim from the income tax department or from the TDS department. So in that case, the company is required to follow the 270 days timeline or 90 days timeline, because
20 days, 270 days.
But the 270 days clause says that if your SR is approved or confirmed by the creditors. But in our case, there was no SR approved by the creditors, because at that time there was no creditor, identified creditor.
I agree. I agree. Means at the beginning of the process, because you were not aware about the claims that may be filed by the income tax department as a creditor. So you have not taken their consent. But I believe because that was for initiating the process, there is nothing in law that stops the person for filing the claim. Because why extended time has been provided? Because in those cases, 30 days time is provided for the purpose of filing the claim, and then there is a time for verification, then there is a time for preparing a list of stakeholders. So for that reason, the extended timeline is provided. But if you have published and the claim is coming, then I believe there would not be any difficulty that if you are able to complete the process within 270 days time also. So these timelines again are directory in nature. These are not mandatory in nature, because we have seen in many of the cases, even couple of matters we are also doing, where the complexities have been noted. We were informed by the corporate debtor at the time of engagement that these litigations are likely to be concluded within next 3 months of time. And it's almost near to 2 years time, where huge amount is involved therein, right? Although we don't have any liability, but we have a receivable, and in one of the matter we have a liability also part amount. So we are not able to close that, although there is a via option for proceeding with that also. But because we are expecting that at any point of time the order will come and finally we'll receive the due amount also. Otherwise, we could have with that also. So there is no worry, I think, in respect of assuming in your matter that 270 days timeline shall be applicable, and you can proceed with and complete that. There is no dispute on that particular subject. That's what I understand.
Thank you, sir. So just one more question. what your view when the company knows that there are income tax outstanding or TDS outstanding, whether the company is required to take the consent of income tax department as a part of the creditor? Yeah,
See,
any of the government department.
I always advise that even whether maybe consent may not be required, because even if you file at the stage of voluntary liquidation, now if when you are taking a shareholder, if you are aware that yes, there may be a dues, right? I'm only worried that if it is a known liability which is recorded in your balance sheet, then you may have no option but to consider the same. But when it is not known, then in any case, you will be making an application or intimation to the income tax department. Maybe under section 278, now there is a waiver that you are not required to wait. But invariably, we all are waiting for the concurrence of the income tax department under section 278 for the purpose only one, that tomorrow when the adjudicating authority will make a review, they in any case will want a comfort of income tax department that there are no outstanding claims which are required to be settled in respect of income tax department. So it's a matter of caution, and in any case, that application, when you file, in 3 months of time, they are also processing it out. So you have a safer window that in any case you have an obligation, and if you intimate taking the provision of section 278, they also are issuing NOC. So you are also secured, sort of, that tomorrow a dispute will not arise from anyone's side. Now that's the basic objective of sending, though legally we can proceed with without much of the difficulty. If claim is not coming, if claim is coming, then you have to settle it out. If claim is not coming, then you can ignore that also.
Okay, sir. Thank you.
All right. So if there is any question in respect of this up till this now process, we can take up, or I'll proceed with the liquidation under section 33. Any of the point that we have in respect of this? All right, so we will now move to the liquidation under section 33. So we will just start with the basic brief background of the insolvency and bankruptcy code also, although we have discussed a bit about, but just to give a indication to the people who are young in this or new to the insolvency and bankruptcy profession. So they may also be abreast with the why the insolvency and bankruptcy code was enacted. The objective was to remove the problem of multiplicity. When India was considering the option of stress asset resolution, a comprehensive framework, India was grappling with three multiplicity challenges: multiplicity of law, multiplicity of jurisdiction, and multiplicity of forums. And those who have been into the profession for the last 2 decades will agree to me. There were multiple via options available, multiple forums available, multiple legislations available, wherein the corporate debtor used to do the window shopping and try to fit out one or other remedy to stop the proceedings initiated by the lender. If a lender initiate the proceeding under DRT, he was going to DRAT. Or maybe in many matters, he was initiating even the writ jurisdiction. If a SARFAESI action was taken, then he was taking shelter under the DRT, RDDB Act, and vice versa. And in many of the situations, we have taken the best use of SICA provision also has been done. whatever protections were provided, those protections were adequately used by the corporate houses to the best of their advantages, and vice versa. So to overcome all these multiplicity, the insolvency and bankruptcy law was enacted as a code to provide the comprehensive solution to all these things. A, importance was the timeline. B, importance was providing a one common platform for discussion in form of a committee of creditors, where a written rule is provided as to how the committee of creditor will function. Somebody can say that in the Reserve Bank of India framework for restructuring, therein also similar platform was in existence, but the issue was that there was no written guideline available in respect of how the meetings will take place, how the voting shares will take place, how the conduct of meeting will be. So that is what the role is now given to the insolvency professional, who is a expert in all that legislative framework, who is implementing the law as per the requirement, mandate given, right? And the meetings are conducted to protect the interest of each stakeholder. That is the requirement. Then fourth requirement under the IB code was that to detect early as to where the stress is, because the committee was firmly believing that entity who is having a stress, if is detected early, will be resolved for sure. It is like a cancer. If you are detected at a stage 1, there is a reasonable probability that 99% you will survive. There will be some medicine, there will be some medicine plan which will work on you and you will be getting cured. But if you are detected cancer at a stage 4, then perhaps even if we take it to you to ICU, then even chances of revival are perhaps very less. We are not very sure. Maybe we are revived, but maybe we are also not revived. We have to completely dissolve. So that is the case. So early dissolution, early detection of insolvency was the objective, and that is the reason why the net worth erosion parameter was shifted to the default. In SICA, you were admitted once your 100% of net worth was erosion, whereas under the insolvency and bankruptcy code, if you default in the payment of legitimate dues beyond a prescribed amount, you are admitted as an insolvent, and the CIRP mechanism is available for your resolution, right? Similarly, if you are not able to resolve, then early liquidation is also the objective, because it is believed that if you distribute the assets, if you sell out the assets at an early stage, you may fetch out better value. But if they are rested for the 5 years of 10 years of the time, then value also gets deteriorate and you don't get any value out of the same. That is the reason why early detection is also provided. So it's a holistic framework under which this insolvency and bankruptcy code has been working. So the key shift was the moment you become insolvent, your ability, your capacity to drive the corporate debtor is taken back, and that has been given to the creditors. That is called a committee of creditor. That is the fundamental shift, and it is firmly believed that the time you are solvent, the creditors have a full confidence in you and they allow you to be on the driver's seat, because you are one whose brainchild this business is. But the moment you start failing in the honoring your commitments in respect of legitimate dues, you are considered insolvent, and it is believed that the person who has a larger stake in the project, that is the creditor by default, because in general we understand that project is funded in the ratio of 70-30. 70 rupees is given by the bank and 30 rupees is the capital which the promoter infuse. This ratio may change, but by and large, larger kitty is with the creditor who takes the debt exposure, and equity contribution is done by the promoter. So till the time you are solvent, you remain on the driver's seat. The moment you are becoming insolvent, you vacate the driver's seat and let the committee of creditor take a command by way of a CIRP process. That is the idea. The rest all things what were there in the previous law, all continuing here also. 6 main objectives are underlined, that this is a consolidated law. There is a time-bound process. There is a objective of maximization of value of the assets. It promotes the entrepreneurship. It promotes the credit availability to the society, and it balances the interest of all. So whenever you are in doubt in reading any of the provisions of law in respect of any of the chapters, you have to keep these 6 principles in mind and interpret the law according to these 6 principles. You will have your idea. And few unique thing is that no court other than adjudicating authority is competent to deal with this subject, right? And this law has evolved very well in the last 7 years of time. Matter has gone to highest apex court in the country, and several times its constitutionality provisions of various provisions of the IB code have been tested, and now by and large, the provisions have been settled out. And the other beautiful provision is the non-obstante clause of section 238, which says that notwithstanding anything contained in any other law for the time being, the provisions of this rule will be supreme. So that gives you a kind of power which is required for dealing with the stressed asset. Needless to mention that how important this law was. Previous government sworn ceremony was in May, and in 3 months time the committee was constituted. 1 year time the report was submitted. The matter was passed by the parliament and notified on 28th of May 2016, and got implemented from 1st of December 2016. And in just 6 months time, the fast track insolvency resolution process was notified, and in 3 years time, the PG to CD cases, the provisions regarding the same were also notified. And from 1st of April 2021, the pre-package insolvency proceedings were also notified. So this is the small framework in which IBBI is there, IPAs are there, insolvency professionals are there, IPEs are there, information utility is existing, registered valuers have came into existence, and the adjudicating authority are working, and there are NSCLAT appellate authority also, who has 1 more bench functional at a Chennai. There are 5 more benches which are likely to come, but they are yet to be announced. If you see about the structure of the code, then it is divided into 5 parts, and each part is unique in the sense that it deals with one particular subject. So if you are dealing with corporate insolvency, you have to go to part 2. If you are dealing with individual insolvency, you go to part 3. If you are dealing with authorities, go to part 4. Miscellaneous and general are in part 1 and part 5. And each part also is divided into respective chapter. So if you have to deal with definition, it is chapter 1. If it is corporate insolvency resolution process, is chapter 2. Liquidation is chapter 3, which is the subject matter of discussion today. 33 to 54 sections of IB code deals with the liquidation. So the arrangement of section of the entire code is very scientifically done. If you want to read that particular chapter, you go to chapter 3, your job is done. By and large, you'll be able to consume whatever you read. There are, of course, the corresponding rules. Rules are made by the Ministry of Corporate Affairs. Regulations are made by the body constituted by the enactment, that is the Insolvency and Bankruptcy Code, has constituted Insolvency and Bankruptcy Board of India. So whatever regulations are made, whatever legislations are made by IBBI, they are called regulations. And whatever is made by Ministry of Corporate Affairs, that is called rules. That is a basic difference. So just to keep you in back of mind how the rules and regulations are different. So this is a jurisdiction layout, how the jurisdiction is culled out in the entire act. So if you are a corporate, then no matter whether you are a company, no matter whether you are a LLP, your jurisdiction in respect of resolution, in respect of liquidation, will be with National Company Law Tribunal. That means NCLT will be the adjudicating authority. Appeal will go to National Company Law Appellate Tribunal, and further appeal will go to Supreme Court. If you are a non-corporate, then either you can be a partnership firm or you can be an individual. If you are a partnership firm, all matters, the jurisdiction will be with Debt Recovery Tribunal. If you are an individual, you may fall into three categories. Either you can be a businessman, you can be a service class, or you can be a guarantor. So if you are a guarantor, then your jurisdiction in respect of guarantee given in respect of a corporate debtor would be with the National Company Law Tribunal, where the concerned corporate debtor is being considered for resolution or liquidation for that matter, or has been considered. In rest of the two cases, the jurisdiction will lie with Debt Recovery Tribunal. Appeal will go to Debt Recovery Appellate Tribunal, and further appeal will go to Supreme Court. So this is a broad framework in which we are required to operate and understand. And this slide is very important for all of us to understand as to what is the framework of waterfall, because in liquidation, this is very important to have a very clear waterfall picture in your mind, so that you can make equitable distribution in the framework provided by the Insolvency and Bankruptcy Code. So there are 8 heads in which these cost centers are fitted into. You call it a waterfall because it is a replica of a situation wherein you are sitting on a top of the slanted surface, and the slanted surface has got some 8 holes. And if you drop a water slowly, you will see the water has a tendency to go to fill the first hole first, and then if water remains, it will go to fill the second hole, and then will move to the third hole. Then still water left, then it will come to last hole, that is 8th hole, right? It will not be the case that some water will come to first hole, then some water will come to 8th hole. It is not like the case. So that is why it is called waterfall mechanism when you drop the water from the slanted surface. So now you replace these holes with the cost center. First cost center is a CIRP cost and the liquidation cost. Second is a workman dues and the secured creditor dues. Workman dues for the last 24 months and secured creditor who have relinquished their security in terms of section 52. This is very important point. I'll just come back again and explain what does that mean. Then third hole is the employee dues for the past 12 months, and unsecured creditor comes as a fourth hole. Then comes the government dues for the last 2 years, and secured debt who have remained unpaid even after enforcement, means who have not relinquished their security but have attempted to enforce their security, and still there is a money which is left to recover, that will come at a layer 5. Whereas if you have relinquished, you are sitting at a layer 2. Then comes the other debt, which is dues of the operational creditor or the dues of the employees, workmen, and the government authorities. Then comes the preference shareholder, and then comes the equity shareholder. Now, the point that we flagged with respect to, otherwise rest all clauses are very understandable. The point that I wanted to highlight is in respect of secured financial creditor. Now, if you are a secured financial creditor, you have two options. Either you can relinquish your security and enjoy the distribution at a layer 2, or you don't relinquish your security, you go for enforcement and see whatever is left out will be recovered at a layer 5. Now, what is good, what is bad is depending on each situation. We cannot put it in a jacket that one should always relinquish the security so that he'll be sitting at a layer 2. That depend as to what is the total corpus which is available for distribution. Who are the other claimants, right? You have to evaluate on case basis, which is more beneficial, basis that the call has to be taken. Means if you have a security interest which is sufficient to recover 90% of your value, I'll say go ahead and enforce the security. But if you are thinking that the value which you are going to recover out of enforcement of security interest maybe just 5%, 10%, 20%, then you evaluate what you will get if you relinquish. So maybe the claim of other financial creditors are not there, or the employee dues are not there with whom you are going to share. Then perhaps relinquishment may be a good idea, wherein at a layer 2 itself, you can get a 60%, 70% of the amount, and which may be more beneficial than the enforcement of security. So it depends on a particular case as to which option is better. But I can say with my understanding globally, enforcement of security is a preferred choice of the lender while going in a insolvency and bankruptcy code. Renunciation is an exception. In India, the situation is reverse. Even when the lender is having 100% security, we have seen cases where he prefers the relinquishment, where he is, because he feels that if a relinquishment is made in the favor of a liquidator, he'll not be having any subjectivity in which he can be inquired tomorrow with regard to usage of his powers, with regard to following of a process, because if he is going to enforce the security in those cases, he has to auction the entire assets for enforcement purpose and complete the process as per the legal requirement, so that the disputes are not arising. So to overcome these challenges, generally the trend is that the lender is a little uncomfortable in doing so, and leading to a situation where he ultimately relinquishes. Now, challenge here is also one that he want to relinquish, but he has no authority to relinquish in many of the cases. And we have seen as a liquidator, we keep on following to the liquidator, to the lender, for giving his consent for relinquishment. Neither he is relinquishing the asset, he is indicating verbally that I want to relinquish, I'll provide you the document. My file is with head office and I'll get the approval anytime. You please bear with us. To overcome these challenges, now the adequate balancing provisions have been done, that he has to confirm with regard to these things in a specified timeline. Otherwise, he is required to pay the amount which is estimated to be fetched out in case of he goes for enforcement. To that extent, the value has to be provided to the liquidator so that the process in respect of other claimants is not delayed and the liquidation process can be completed in a time-bound manner. So this is the crux of section 53. If we just, before we come exactly to the liquidation timelines, let us have a look of timelines in respect of CIRP also, so that we are hands-on in the back of mind as to what is the scope. So your commencement of CIRP begins on T date, 3 days public announcement, 14 days claim submission. Last day is 90 days. Verification of claim is done 21 days. Last day now is modified bit. So according to that, and verification of claim is required to be done within 21 days. If there is a appointment of a AR, then another 2 days you get. Submit a report to adjudicating authority for constitution of committee of creditor within 2 days. First meeting of committee of creditor is required to be held within 30 days from the commencement of CIRP. Appointment of RP in place of IRP or confirmation of RP, IRP as a RP is required to be done within 30 days. Then you file the application to the adjudicating authority for appointment of RP, and IRP is required to perform and continue the functions of RP if the RP is not appointed within the prescribed period of time. T plus 47 is a timeline for appointment of a valuer. Then parallelly, there is a withdrawal process also. If somebody initiates, then withdrawal application has to be disposed of by committee of creditor if that has been constituted within 7 days. Within 3 days, the RP is required to file an application before the adjudicating authority. And parallelly, there runs one more timeline, which is PUF application. Within 75 days from the date of commencement of CIRP, you are required to make your opinion with regard to existence of PUF transaction. Mark my word, make an opinion. Within next 40 days, you are required to determine. First 75 days, you form an opinion. Next 40 days, you determine. And next 15 days, next 20 days, you get for filing an application. So timeline is T plus 75, T plus 115, T plus 135. And if you see the timeline for filing your resolution plan also coincides with T plus 135. It is expected that by the time you go for filing your resolution plan with the adjudicating authority, your PUF application should also be ready. And if you see the scheme of the act, you are required to kind of give a declaration in the form that you submit with the application for resolution plan with the adjudicating authority as to whether any PUF application is there or not. So what I was trying to make a highlight was on the PUF application 75 days and 115 days. What is the difference between the forming of an opinion and the determination? Forming of opinion is essentially based on red flags. So if there is a no registered office, if the promoters are absconding, if books of accounts are not provided, or books of accounts provided but software is not provided, password is not provided, if there are a lot of related party transactions, if there is an unusual movement in the company, if there is a frequent change in the management, KMPs, auditors, company secretaries, if there is a high value cash transactions, if there are adverse report in the audit report, this list goes on. Now we can have a full session on that, but idea, because in liquidation also we are required to follow all this, so we are taking bit more time on understanding what is the relevance of red flag, opinion, and determination. So first stage is a red flag, and the red flag can start right from the time you are appointed as a IRP. You have to be vigilant in respect of these red flags. You have to keep on searching what are the red flags. You will not have a separate opportunity to find it out. You have to be vigilant in respect of the activities. You will find out these red flags on day in, day out basis. Keep on flagging. The timeline is 75 days. At the 75th day, you form an opinion. I have got this 50 red flags, which are sufficient for me to form an opinion that there exists PUF transaction. I'll meet out the requirement of preferential transaction under 43, 45, 50, 66, and then I'll form an opinion. Yes, maybe I have not anything in my record. These are my suspicions. These are based on my suspicions that I have got red flag and I form this opinion. Now, the time that has been provided further for 40 days, from 75 days to 115 days, this is the time where you have to collect the records, where you determine that, all right, this was a hypothesis that this person might have done a fraud. Now I have the evidences. I have a forensic audit report. I have the report of some third party. I have got the confirmation from the bank statement that this money has been siphoned off. I have the auditor's comment available in the previous reports, right? There may be n number of records which you are required to adduce for the purpose of supporting your application under PUF transactions. Then you prepare your application and file that application in 20 days of time. That is the scheme. So on the 75th day, you did not have the evidences in your hand, but on the 115th day, you are required to have evidences in your hand so that you can prepare and compile your application and file it before the adjudicating authority for the purpose of its disposal. That is the scheme. Now, there is one more parallel timeline. As a IRP or RP, you wear many hats. And one of the hat is that you have to find out a resolution applicant also. So what you do, you publish the information memorandum. You submit IM to the committee of creditor within 54 days from the insolvency commencement. You publish Form G within 75 days. You publish expression of interest within 75 days. Another 15 days time is for submission of expression of interest. You publish provisional list of prospective resolution applicant within 10 days. 5 days is given for purpose of objection receiving, and final list is published within next 10 days. RFRP, parallelly you issue on 105th day, and you receive the resolution plan on 135 day. That is the coinciding with the PUF application also. So you submit the application to the committee of creditor within 65 days, 165 days. Then another 15 days time is given to the adjudicating authority for the purpose of its approval. And appeal can be filed in 30 plus 15 days to the adjudicating authority, appellate authority. And grounds are very limited. Either plan is in contravention of law, material irregularities are noticed against the RP, or debt owed to the operational creditor has not been dealt as per the IB code, and plant does not pay for the CIRP cost as per the IBC provisions. So these are the grounds on which the appeal can be filed. There is no other ground on which the appeal can be filed. Now, once we have understood this entire process, this is a CIRP. As I mentioned, I'm repeating again, you cannot come to liquidation under 33 directly. If you are solvent, you go for 59, but you have to come to liquidation only by following this entire process, whatever we have discussed. Under 33, the liquidation order can be passed. There are 4 situations which we have discussed, and these 4 situations are that decision of committee of creditor with 66% of majority, no resolution plan is approved by the committee of creditor within 180 days or the extended period of 90 days, or the NCLT has rejected the resolution plan submitted by it to the technical ground, or there is a default in the implementation. So these are the only ground. How it moves forward, you will be appointed as a liquidator by order. Then there will be a formation of liquidation state. The liquidation state will comprise of assets of the corporate debtor. Mind you, the assets which are in your possession, but you are not owner, are not part of your liquidation state. Whatever is the ownership, only those assets are possible. Now, here also there is a moratorium, but this moratorium is little different from the moratorium under CIRP. Under CIRP, anyone is prevented from filing any suit, initiating any proceeding, or taking any action against the corporate debtor. Now, in the case of liquidation, the proceedings which were already initiated at the time of commencement of CIRP are allowed to resume, are allowed to continue once the CIRP is over and the company is in liquidation. And rightly so, because if we have already stopped the process abruptly at one point of time on commencement of CIRP, which was not planned, you have to allow to conclude the existing proceeding. While I am saying that it is logical to provide, but at the same time, I am expressing my pain also that 99% liquidations are stuck today because of this provisions only. Because the legal proceedings which are ongoing are not getting concluded. Though very recently, just in February 15, I believe there is a slight amendment, and amendment is only in respect of initiating of proceeding, legal proceeding by liquidator. So if liquidator want to initiate a legal proceeding against someone, then he has to stakeholder consultation committee, he has to take that committee into the confidence. He has to tell economic rationale of initiating that proceeding. It is just not for sake of initiating the proceeding. You have to tell the economic rationale also now. But this is only in respect of initiating the proceeding, not for the continuance. If some income tax department has initiated the proceeding, which came to halt on CIRP, will now revive on liquidation, and that can continue and nobody has a control on that. Though there was a discussion paper some time back where IBBI has been exploring a possibility, will it be a good idea to provide this exception that proceedings will resume only after permission of the adjudicating authority. Means the moratorium under liquidation will be tweaked to provide that the existing proceedings will resume only with the permission of adjudicating authority. If adjudicating authority does not permit, then proceedings will not resume. And why he'll not permit if legitimate proceedings are going on? And I personally welcome this suggestion and the thought process of the IBBI in bringing little more discipline. Currently, what is happening, me and you, whosoever has been working as a liquidator will agree that whenever we are in situations like this and we try to represent to the court and try to explain that, Milord, we are in liquidation, you kindly conclude these proceedings on a fast track. Perhaps it is little difficult for them to understand as to where the process is and why they should listen to us as a liquidator standalone. Perhaps tomorrow, if the proceedings can continue only with the permission of adjudicating authority, or there will be an order which will be passed, which order will be furnished to the respective high court or to any other court of law wherever the matter is supposed to continue. I believe maybe it will not fast forward the process, but at least it will bring a caution to the mind of those respective court that yes, the adjudicating authority has allowed us to continue these proceedings subject to the condition that it has to be concluded on a fast track mode basis. So a little more discipline can come and a little more attention can be paid to these cases which are in liquidation in priority to the other cases, so that the liquidation process can be expedited and can be completed. This perhaps is a one way forward, although there is no possibility whether this will be actually be implemented or not. But yes, this is something which has been proposed, but so far has not been implemented. I think Hetal has raised the hand. Yeah, please go ahead.
Yes, I just want to ask a practical question. Like, suppose you said that the case laws or the processes which were stopped under moratorium in CIRP will again get revived in liquidation and on a fast track basis. So now suppose it's a practical issue that what has happened is GST department have passed an order which claiming a penalty of 10 lakhs from the corporate debtor, which is under liquidation. And after having a discussion and going through the documents and everything, we have a belief that this 10 lakh can be reversed if we go for an appeal. So what is your opinion? Like the CIRP, the
I understood, Hetal, I understood. So henceforth means if we are talking about the new regime which has been implemented effective from 15th of February 2024, the liquidator is under an obligation to present it before the stakeholder consultation committee, the economic rationale. Economic rationale in your case could be that if I file, if you allow me to file an appeal, then I may save 10 lakh rupees for the corporate debtor, and that may be allowed to be distributed as per 53, and the other stakeholder may be benefited out of that, right? But I am saying a situation where the quantum is not that big, now where the amount involved in your appeal is not 10 lakh, whereas it is, let's say, only 50,000, you are likely to get benefited. But you should not, because in many of the cases, this is based on the experience, what the IBBI has taken from all of us collectively, and they have now came out with this suggestion that we cannot make any rule in terms of monetary limits or so, but we can subject it to the discretion of the committee of stakeholder consultation committee to decide on case-to-case basis on the presentation made by the liquidator whether there is any economic rationale to proceed with this appeal or not. Like in your case, I don't know what is the total quantum, but I believe that whatever be the total quantum, 10 lakh rupees is a significant amount. And in any case, in any case, in fighting the appeal of GST department, you are not likely to spend 10 lakh rupees of money unless and until you are going to involve a very senior advocate like Harish Salve for the purpose of appearance. I'm just saying for the purpose of giving a clarity. If my expenses for getting that positive order or bringing that economic benefit to the corporate debtor, if that value is going to be more, then there is no point of fighting an appeal. Maybe you, howsoever good case may be. That is the view of IBBI. That is why they have introduced the concept of economic rationale. It's not legitimate legal rationale. You may be legally very sound. It's a open and shut case. If you file the appeal, you will win. All right. But the cost of filing that appeal itself is more than the value that will benefit you. Then there is no sense that you should go for filing the appeal. You should pay. That is the, the mandate of IBBI. Now you can go ahead, please.
Yes, but in this case, we took an opinion saying that the company is going to be sold as a going concern in liquidation. So, keeping that in mind, when we discussed with the stakeholder consultation committee, they were also of the opinion to file the appeal so that this amount or this benefit of this case being in the favor of the assessee can benefit to whoever is going to buy the company as a going concern in way forward. So just want to understand that is
No,
taking
you
this
can,
kind of opinion is fine.
you can definitely, means if you are coming on a clean slate where you are saying that I am filing this appeal because by the time the new person, whosoever will acquire this entity as a going concern, maybe the timeline will expire. So in the interest of prospective acquirer, I am intending to move this appeal so that this value will remain protected. So in any case, if you are able to save, you will be able to realize better value. So I don't see that there is any issue with regard to lacking economic rationale in your matter. Maybe if you are intending to sell it out as a going concern, but ultimately if your claim is legitimate and you feel that appeal will reverse the situation, then
yes.
You will be bringing 10 more lakh rupees to the kitty. Today, if you are having a prospective buyer, he is going to discount these 10 lakh rupees because they are going to be paid out from the funds of the company only. So if tomorrow the prospective buyer is aware that the appeal is now on verge of decision and or the order by that time comes, he can definitely pay you some additional money on that count also. So I don't see in your case there is any difficulty with regard to meeting the economic rationale what is required. So why the concept of economic rationale has been brought in? Because it has been seen that many of the liquidation matter, because the clarity was not there. Not that the liquidator was having very high hopes, but on the presumption that tomorrow IBBI or some regulatory authority should not come back on him that why you have not made an attempt to safeguard the interest of the company by filing an appeal when you were aware that there could be a winning also on your side, right? Just to protect his interest, he has been involved in filing these appeals where maybe the economic value is very less, insignificant, or it is even in negative. Also in many of the cases, it has been seen that maybe at the time when the process got initiated, the economic value was appearing there, but litigation went for little longer duration, and the ultimate objective was that if we have realized 10 lakh rupees, but we have spent 20 lakh rupees on the lawyers, there the IBBI is saying that, boss, you need to be economically rational at the time when you were taking that call. It cannot be like that you are spending 20 lakh for earning 10 lakh rupees of money. So the ball has been shifted on the onus has been shifted to the liquidator to decide and to present to the stakeholder consultation committee as to this is the economic rationale and take advice therefrom and proceed accordingly. The other point that I was mentioning was reverse to it, where this is a case where you are initiating a appeal or you are filing a case. There was no restriction in any case in respect of these filings. But the reverse case is that where somebody else has already initiated or somebody else has already filed a legal case and is now resumed after commencement of CIRP. Now, the challenge that we have discussed is in majority of the cases that because of these legal cases, the liquidation process is not getting completed. We are not able to move towards dissolution. We have completed entire process. Now, just because there are some 5-10 litigations which are against the company, one is pending before High Court, one is pending before Civil Court, one is pending before Consumer Court, and so on. Unless these matters are closed, we cannot file the report before the adjudicating authority for dissolution. That comes the challenge. Although there are certain options where we can non-realizable assets kind of sale we can do and we can get rid of, but still in many of the cases we have found it is very, very challenging, very, very difficult and we may not just get out of the entire process. So we have to live with that. So in that background, the discussion paper brought in by IBBI, I think some time back, seems very useful, whereby the respective forums will be allowed to continue the cases only after having a permission from the adjudicating authority. At least this kind of check will bring those respective jurisdictions and forums also to some discipline that we are also subjected to one authority, adjudicating authority, who is monitoring us in a form of a progress or in form of a vigilance that how much time we are taking for closing our matter. So maybe I'm not sure whether it will surely benefit or not, but I'm saying when nothing is coming forward, at least a kind of discipline may be introduced, which will help the liquidator in completing the entire process on a fast track basis.
Sir, can I raise one question, sir?
Yeah, please.
Sir, my question is on the same issue only. I have come across one case where liquidation is pending for almost 3 years now, and only one litigation was initiated in Gujarat High Court by the lesser of this is some Gujarat authority which has granted lease to the this company. And now liquidator is always filing quarterly report before the
adjudicating authority.
Not able to close the issue because there is a status quo granted by the Gujarat High Court. So although I am interested in that case because I am pursuing to buy some property for some client there, but is this correct way of doing things where the liquidation can continue or remain open on these things only, whereas the legal position is very clear that nobody can take any such action like cancelling of lease and all those things?
No, I am not aware about the facts of your case. I don't know at what point of time the lease has got cancelled and the process has been stayed out. But I believe
during liquidation, sir. During liquidation, sir.
So you are saying ki at the time of CIRP, no such proceedings were there, but after commencement of liquidation. So ideally, I am saying ki yes, it is a loggerhead situation. You should, or whosoever is a liquidator, he can fight it out that at this end, at this fag end, the I don't know whether this lesser is some state industrial development corporation. It's a government.
Yes, sir. Gujarat State Industrial
Development Corporation, right? So I don't know. Maybe I'm saying ki there is a lease deed where the term says that in the following event, the lease deed shall stand terminated and the property will revert back to the lesser.
But sir, even in that case, such actions cannot be taken. I believe 238 is there.
No, 238 is there. All right. The argument of a lesser in this situation would be, which is a Gujarat State Industrial Development Corporation, they must be saying that why I am required to file any litigation? I am just saying I am a legitimate owner. As per law, as per lease deed, as per contract that has been executed between me and you, I have a right to terminate, and I have terminated the same. And if you were required to return it back, since you have not returned it back, so I am going to the court for taking a order from the respective high court.
But 238 is there, sir. I think no such permissions, leases, etc. can be cancelled.
No, but why? I am saying my view is little different in that, be it as it may be. But I am saying ki if nothing can be done, but you have to honor the contract also. In case of section 14 moratorium, where you have an obligation to continue the entity as a going concern, there I can understand the insolvency professional or a resolution professional can insist that because the factory is going on in this premises, you cannot terminate the lease. All right, your lease is due, I'll pay you as a CIRP cost. But in the case of liquidation, if the event, I'm marking the word, if a lease deed term says very categorically that if in the event the corporate debtor goes into liquidation, the property will come back to me. Maybe there will be a condition that whatever premium, whatever consideration is required to be paid by Gujarat State Industrial Development Corporation will be paid to the corporate debtor. Corporate debtor interest is only limited to whatever right he accrues on that event. Now, beyond that, I have not read your contract copy, but I am saying that this may also be a way to look into your subject, because if you see it from the, if there is nothing in the contract executed between the Gujarat State Industrial Development Corporation and CD, then perhaps your concern is valid. Now he cannot come. He is barred under the provisions of law that now moratorium will come into picture and he cannot now initiate. If he has no such condition that during liquidation or on the event of trigger of liquidation, the property will go back to GSIDC. You have to see whether such kind of conditions are there or not. That is my view. Means we can see the factual matrix of a particular case, and basis that we can take a call whether his actions are legitimate or not. Means I'll say on that way, because he might have gone on a writ jurisdiction in the High Court. He must have not gone as an appeal or before the adjudicating authority. He must have filed a writ that I have a legitimate ownership. I have given him only property to enjoy for a certain period of time and on meeting of a certain condition. And now those conditions are not being met. He is no longer solvent. He is no longer going to continue a business. He is in fact going to be liquidated. And I want this estate, this property to be utilized better for the other industrial house. So if I am saying that you give it back to me, then what is the wrong? Ultimately, what you are also going to do, you are also going to sell it out in the market. So why not you are surrendering it to me? Whatever terms we have agreed in the contract, I'll pay you the money. There is always a provision. They will not take you take it back free of cost. Whatever is the premium prevailing on the date of surrender, they will pay you the money. I hope this address, Vijayji.
Yes, sir. Thank you.
You need to see the factual matrix, and perhaps from that factual matrix we can say based. Otherwise, means if there is no condition, then perhaps your view is correct that this will come as a bar, and the action cannot be initiated once the liquidation process has started. They can only resume whatever was continuing. Had this litigation been initiated prior to CIRP, then this debate was not there. This debate is because you are saying that during liquidation records they have terminated the lease, or they are saying that I am invoking this particular clause. So you have to see what is the lease agreement and whether their action is legitimately right or not. If not, then you can also challenge it before the court of law.
So,
That,
sir, actually, in this case, the government, Gujarat has not gone. Actually, the liquidator has gone in the civil appeal before the Gujarat High Court.
he is challenging that the action of GSIDC is wrong because they have terminated, they have cancelled the lease deed on the wrong footing.
Yes, yes, sir.
So maybe you have to see, means maybe he is right. If there is no clause, then perhaps his action may be right. But,
No, sir, my view is that liquidator should have gone to NCLT or High Court.
See, because this again depends on the, it is not necessary that I have to go before all the time to NCLT. See, if it is a matter of some contract, if it is a remedy available against the state under the writ jurisdiction, so we know the magnanimity of the high courts. So many a times you take a practical view, you understand that the relief, the kind of you can get from high courts may not be possible to be obtained from the tribunals. So that may be reason that he might have taken a practical call that ultimately I am intending to get a relief, and that is because state is involved. So I can perhaps seek a writ jurisdiction also, and possibly the remedy may flow. But that's a call I think he might have taken. I'm not sure the what are the facts, but perhaps these may be the reasons why he might have opted for.
Thank you, sir. Thank you very much.
All right. So we were on the point that the liquidation state and the legal proceeding moratorium, then the liquidator will, on the basis of publication of advertisement inviting claims, will receive the claims. He will again, now here the difference between the collation of claim and the scope of admission of claim. Here it is admission of claim. Here it is not collation. Whereas during CIRP, the role of a IRP or RP was limited to collation. Whereas in case of liquidation, he is acting as an adjudicating authority. He adjudicates the claim, whether this amount is correct or not, whether the document is correct or not, whether the claim actually existed or not. He can verify all sort of document. He can examine all the information. He can ask the person to be present to understand the matter. All these things are possible in the case of liquidation, admission. That is the distinction from the position of a CIRP. Then, where the assets of a corporate debtor are completely liquidated and the liquidator has made the application before the adjudicating authority for dissolution. The adjudicating authority will pass the order for dissolution, and the copy of order is required to be filed within 7 days to the IBBI, and will be required to be filed with the registrar of company with whom the company or entity was registered. I believe two peoples have, yeah, Hetal and yeah, Hetal, please go ahead if you have any point.
Can you hear me?
Yeah, please.
Yes. Regarding the claim verification in the liquidation process, you said that the liquidator works as a adjudicating authority where he or she questions the claims and the documents submitted. So I have a query. Like for one of my clients, they have GST registrations across India which were cancelled last year, and the order was passed during the cancellation as nil, no liability. But in one of the jurisdiction, that is specifically in Karnataka, the GST department has submitted a claim of 8 lakh rupees, which is for the financial year 18-19. So now I am in two minds whether to accept the claim or to go with the order which they had passed during the cancellation of the GST registration.
So in respect of Karnataka, what has happened? They have cancelled the GST registration.
Yes, they have cancelled because it was the business was not going on of the company. So during the CIRP and before the CIRP itself, the client, the party, the corporate debtor had given application for the cancellation of GST registrations across India. And Karnataka had already passed the order in 2023 last year in January, stating that the order that the account GST number is cancelled, and in the order there is no liability, zero liability as per the order. But today, during the liquidation, they have filed a claim of 8 lakh rupees stating the liability pertaining to financial year 18-19. So I am not sure whether one should accept the liability or one should go with the order passed.
No, honestly, I'll not be able to answer this yes or no, but I'm saying ki prima facie, when they have given you the order for the previous year, right, that at the time of closure, that there is no claim in respect of any of the year, and that's why they have closed the registration also. So prima facie, I have no reason to disbelieve the order passed in the past, right? So I will ask them for the purpose of satisfying us that how come there are two contradictory situations in existence. That previous year you had mentioned at the time of surrender of registration or closure of the registration that there is no demand against the outstanding against the corporate debtor. Now, because the CD is in liquidation and the existing management is not there, you are saying that for 17-18 there is a small amount of 8 lakh which is required to be paid. So they have to justify as to from where that liability is coming, and we also have to see it whether that liability is actually legitimate or not, or is it just a false claim that the department has processed. If why it was not noticed at the time of surrender. Now the prima facie belief is that I have a reasons to believe that once that order was passed and the claim was zero, now I have nothing to accept it further, right? Unless they prove it to the contrary that yes, there was a bona fide mistake on their part, and this is a new finding, the assessment process was completed later on, or this was discovered later. There must be something. Now if they have valid reason and we are also kind of agreeable to the same, then we may consider the same. Otherwise we are not likely to accept. Let him go to, we may reject the claim. At max he will go to adjudicating authority, and adjudicating authority might consider in their own view whether the claim is legitimate or not, because appeal can be filed against the order of liquidator regarding rejection of any of the claim. That is a possibility. So if I reject, then there is means I have to use my own assessment system while doing the adjudication, whether I am convinced with the documents, records. Of course, here you cannot just be emotional or sympathetic. Here you need to have a documentary evidence. If your document which are produced before you are giving you a kind of satisfaction that yes, there is a bona fide mistake, and this essentially is a due amount, and the books of accounts of the corporate debtor also perhaps are recording that as 8 lakh rupees as a liability, then it becomes all the more clearer that yes, that liability existed, and this is just a bona fide error on the part of the department, and now they have rectified that. Maybe we can accept that also, but depends ki what is the factual matrix basis that we will take that call.
Thank you.
Brijeshi, you have any other point, or should we move forward?
Yes, sir. Thank you very much, sir. No other point, sir.
All right. So this way the dissolution process will be completed. If we say the entire process, if we see the chronology, how the events will take place. So the appointment of liquidator announcement will be done for submission in the newspaper as well as to IBBI. Then verification, preparation of asset memorandum, formation of this stakeholder consultation committee, liquidation state formation, what will be included, what will not be included. Then you will make the sale of asset, perishable asset. Then there is a very recent change from 15th of February with regard to sale of assets also. Earlier, there was a provision that you can sell the assets which were perishable in nature through the private auction, right? There was one more condition that the previous auction has failed and you are able to realize value more than the reserve price. Then also the private sale was allowed. But effective from 15th of February, this third clause has been deleted. Now, whatever be the situation, private sale is limited to only the perishable goods or those kind of situations only. Other situations are not allowed. And in recent amendment, the role of a stakeholder consultation committee has been enhanced to any extent. Now, specific responsibilities have been given. Every action has been subjected to the concurrence of the stakeholder consultation committee in majority of the situations. And wherever it is expected that they have to positively contribute to the expediting the process of liquidation also, they have added the added responsibility specifically also to the liquidator. Then there will be a distribution as per waterfall under section 53, and then there will be a dissolution. Of course, the time limit is mentioned as 1 year, which we understand that is not possible in any of the situation. If you see the reporting requirements, so preliminary report is required to be submitted within 75 days from the LCD. Asset memorandum is required to be prepared. Quarterly progress report are required to be submitted. Sale report is required to be submitted. Wherever there is a stakeholder consultation committee, you have to submit their minutes also, prepare their minutes. Achha, there is one more recent change in respect of stakeholder consultation committee also, which is there in the IRP process also, and similar changes there in the liquidation process also. Now, stakeholder consultation committee meetings are required to be held at least once in a month. Now, there should not be gap between two meetings more than 30 days, unless the stakeholder consultation committee decides that no, not 30 days, but we will meet on 90 days. Now, once in a quarter, we will meet. Then all right, but by default, the provision is that you will be required to meet on the monthly basis. That is the requirement of law. But the consultation committee can change this default. Final report is required to be submitted to the adjudicating authority. If you see, this is a whole lot of model timeline chart where section 33, section 34, which is commencement of liquidation, appointment of liquidator. Norm is liquidation commencement date. It is called T date. In 5 days, you are required to make publication in the Form B. Then in next 2 days, you have to make the appointment of registered valuer. If it is required, there is a small change in the registered valuer appointment requirement also. In 30 days, you have to invite and accept the claims. So claims are required to be submitted. And intimation with regard to the decision on the relinquishment of interest is also required to be received. 38.5 is a withdrawal modification of claim, which is within 14 days. So it will reach to T plus 44. Regulation 30, if you see of the liquidation regulation, talks about the verification which has to be done within 30 days. 31A is the constitution of stakeholder consultation committee, which is 60 days. And if you see acceptance or rejection of the claim is to be done within 67 days. That is 7 days of admission or rejection. 31(2), if you see the filing of the list of stakeholder and announcement of public within 45 days from the last date of receipt of the claim. 42 is appeal by creditor against the decision of liquidator, as we were discussing about matter of Hetal, where appeal can be filed. Then regulation 30 is about the preliminary report filing with the adjudicating authority, which is within 75 days of the liquidation commencement date. Then submission of progress report quarterly, first quarter, second quarter, third quarter. Then progress report in case of cessation of liquidator. Acha, there is one more change with regard to the resignation of IRP, RP or liquidator. Now, earlier there was no provision. Now there is a specific provision in respect of resignation also. However, resignation will be required to be recommended by the stakeholder consultation committee and will be required to be approved by the adjudicating authority. After that, you will be relieved. But till the time the approval is by the adjudicating authority, you are required to continue and function as a liquidator. Similar provision is in respect of IRP, RP also. Regulation 37(2)(3) is information to the secured creditor within 21 days of the receipt of intimation from the secured creditor. Distribution of proceed within 3 months from the receipt of amount. Application to adjudicating authority in respect of onerous property within 6 months. Notice to person who are interested in the onerous property, you will be 7 days before making an application to the adjudicating authority. Then liquidation of corporate debtor has to be completed within 1 year. An application to adjudicating authority for an order on unclaimed proceeds of liquidation before the dissolution order. Time period to H1 bidder to provide the balance consideration, which is 90 days. I think this we have already discussed during CIRP, what is the moratorium period, and during liquidation, what is the moratorium period. So except that one change that the proceedings which are pending before CIRP during the time of, at the time of commencement of CIRP, can now resume during the liquidation. There is no other change. The process remains the same. A couple of practical issues with regard to the taxation aspects also. The pending assessment or other proceedings will be revived and the assessment will be completed based on the information which is available. Now there is one more clarity. I think Supreme Court in one of the matter has during CIRP clarified that during CIRP there is no bar in completing the assessment proceedings as long as the assessment proceedings are not resulting into any demand. There is no difficulty. So the proceedings can continue, but however, if the department has not proceeded during the CIRP period, the proceedings can resume during the liquidation process and those proceedings can complete, and the claim, if any, from the department can also be filed with the liquidator. No enforcement can be done to recover dues and no assets can be attached as liquidator has been appointed, and he has the power to take control and custody of all assets of the corporate debtor. In one of the matter where department has attached the assets but has not taken the possession of those assets, there is a order wherein the directions were issued to the income tax department to release the property in favor of the liquidator. Whereas there is a settled law that where the proceeds, where the attached properties have been liquidated, have been distributed, have been realized by the department, those proceeds cannot be demanded by the liquidator. But if where the possession specifically has not been taken, in those cases the situation was different and the order has been received in favor. Yeah, somebody has raised the hand. Yeah, Hetal.
Yeah, one thing, during the CIRP, as well as actually 2 years before the CIRP started, the company's account had a lien of by the GST department, which is still in continuation with the liquidation. And we came to know the insolvency professional, means the RP, also wasn't aware of this lien, and it came to our notice during the liquidation. So what will be the line of action for the same? Because this lien
Lien
is
has, to my mind, lien has no meaning. The liquidator has every right on that particular assets. See,
it's a bank account, sir. Mr. Amit, Amitji, it is a bank account, and that amount has been reserved as a lien by the GST department.
whatever be the case, I am very clear. The action of attachment or any action with regard to appropriation of the proceeds, either the money should have been taken away from the lien account and appropriated against the dues outstanding. Chapter ends. There is nothing left for the liquidator to revive. But if a lien is only there, then to best of my understanding, because it is not yet appropriated, the distribution has to happen as per 53 only.
Okay.
He cannot, if at all he has a claim, let him come before the liquidator, let him file the claim, and we will distribute it as per 53. It has to be distributed. It cannot be distributed against 53. That is the point. I think that is the spirit. So far, the orders whatever I have read are indicating this only, because the example what I am giving, income tax department has attached the property, real estate property, and so auctioned it out in the market. The department said because the tribunal said because the proceeds have been appropriated, right? The action cannot be reversed. It will be unjust at this point of time. Here in your case, had the department proceeded against, it is just a lien. Why for the last 2 years they are keeping a lien on the same only? Why they have not proceeded for, if they were very sure that the proceeds, the amount has to be taken from for against the legitimate dues? Maybe it is correct also. They may be waiting only for something, but since that has not been done, their right to claim is not rejected. They can stand in the queue before the liquidator. Liquidator will consider as per 53 and distribute. If I am a liquidator, I'll take this call and I will request them to go that way, and maybe you can file an application before the appropriate authority for the purpose of release of lien, and ask them to file a claim before the liquidator. That's how I look at it. Yeah. Yeah, Brajeshi.
Nothing, sir, nothing.
All right.
Thank you, sir.
Saw your hand raised, so I thought. Yeah, for tax aspects, I think there are a couple of more things. Claim would be filed by government authority before liquidator. This is again a very Herculean task. Now, though, after a lot of training and education to the Department of Tax, CBDT has also issued n number of circular, n number of programs, training programs have been organized by IBBI and IPS to the Income Tax Department, GST Department. Even then, they are not filing their claims in time. That is the biggest problem. they will come at the fag end of the liquidation and they will say that the dissolution should not be, the order should not be passed unless we are heard of. The application will be filed before the adjudicating authority. Now, or they will ask the liquidator to keep the process halted unless they are able to file the claim. So despite many reminders and so this situation has not changed over a period of time. And this is very clear that any distribution has to be done as per waterfall only. So needless to mention what will be the situation like. NCLT in the matter of Shri Ram Lime Product Private Limited versus G Ispat. I think this was a matter of Pooja Bhari, our professional colleague only. So in this matter, a very important judgment has been given that the tax liability which is arising out of sale shall be distributed in accordance with the provisions of section 53 of the code. Now, question is, during the liquidation, if you sell the asset of rupees whose book value was rupees, say 1 lakh, you sold it out for 10 lakh. You have now made a gain of 9 lakh. Question that came before NCLT was on 9 lakh, whether the liquidator is required to deposit the 9 lakh, the long-term capital gain on this 9 lakh, or the income tax department will be required to be in queue for recovery of this tax on the 9 lakh also. That is somewhere around 1,80,000 if I exclude the cess and the surcharge. So the department, the order of NCLT was landmark, and they mentioned that the applicability of section 178 or 194 IA of the Income Tax Act will not have an overriding effect on the waterfall mechanism under section 53, which is a complete code in itself, and the capital gain shall right to be taken into consideration as the liquidation cost. So very important. So that has given a relief to a lot of liquidator in respect of the sale that they are doing during the liquidation proceed. Public announcement, I think there is nothing very great about to discuss. I think, yes, it has to be made and this will be done. Now, liquidation fee, I think a couple of years earlier, the amendment had been made in respect of fee provision, and the regulations have been streamlined. The fee payable to the liquidator is certainly a cost of liquidation, and the cost, if any, incurred by the liquidator in relation to the compromise arrangement under section 230 will not form part of the liquidation cost. The fee which is payable to liquidator shall be in accordance with the decision taken by the Committee of Creditor under Regulation 39D of the IBBI CIRP regulation. In cases other than those covered under Subregulation 1, the liquidator shall be entitled to fee at the same rate as the RP was entitled to during the corporate insolvency resolution process for the period of compromise or arrangement. This is specifically for dealing with that, and as a percentage of the amount realized net of the other liquidation cost and the amount distributed for the balance period of liquidation. Regulation 39D, which is for the fee of the liquidator, which says that while approving a resolution plan under section 30 or deciding to liquidate the corporate debtor under section 33, the committee may, in consultation with RP, fix the fees payable to liquidator in order for liquidation is passed under section 33. For the period, if any, used for compromise or arrangement, for the period, if any, used for the sale, under clause E or F of the section regulation 32 or for the balance period of regulation. So this is a chart which is I think known to all of us how it works. There is a different slabs for 1 crore, for the next 9 crore, for the next 40 crore, for the next 50 crore, then realization within first 6 months, then realization after 6 months, and then thereafter, and then amount realization and amount distributed. Basis that the percentages are mixed provided, you have to calculate on the basis of the formula what is provided. Meeting of liquidation cost, this is again a big challenge in many of the corporate debtor. There may be asset which has a huge value, but liquid value is not there. Bank balance is not there. So to run the process, so during liquidation, there may be a requirement to have a security. There may be a requirement to have peoples. There may be a requirement to have a consultant, valuer. There may be a requirement to continue. Also entity, there may be some recurring expenses. So from where to meet those expenses? The best practice, what majority of the liquidators have been following is they pool the money from the stakeholders in the proportion of their claims. And let's say there are 3 people, one is having 40%, the other one is having 20%, and there is another one who is having 40%. So 3 people will contribute in the ratio of the tentative expenses. So let's say there is an expense of rupees 2 lakh and you are required to fund for the next 6 months. So 2 lakh multiplied by 6 months, that is 12 lakh rupees are to be collected. So to meet the basic expense, basis that each of the stakeholder will be required to contribute to his proportion, and that's how that will be kept in a separate account, and from there the money will be utilized. That's how we are able to meet the day in day out running expenses, because we are doing all this liquidation for the benefit of these stakeholders only. That is the logic and basis that we are making a request to contribute in that particular proportion. I think this is also the same. Yeah. So assessment of a sale as a going concern, regulation 39C. When you are approving a resolution plan under section 30 or deciding to liquidate the corporate debtor under section 33, the committee of creditor may recommend the liquidator may first explore sale of corporate debtor as a going concern under regulation 32E of the IBBI liquidation process, or sale of a business of a corporate debtor as a going concern. I think there is a amendment in this particular clause also. From 15th of February, the role of committee of creditor has become little more stringent in terms of making its recommendation for the cases which are falling under 230, 232 cases. So there they have to be little more specific in comparison to the provision which is specifically provided currently. So that provision has to be coming from by way of a recommendation by the committee of creditor. Where committee of creditor recommend sale as a going concern, it shall identify the group of assets and liabilities which according to its commercial consideration are ought to be sold as a going concern under clause E or clause F of the regulation 32. Now, few of the practical issues, there are a couple of options which are now available. There is a sale of assets, which is plain vanilla sale of assets as a going concern. Sale of entity as a going concern. And merger and amalgamation of a corporate debtor in terms of regulation, in terms of provisions of section 230(32). So these three options are to be applied and used with a clearer understanding, because what we have observed that many a times when the scheme is approved or the order is sought from the adjudicating authority, because of lack of experience, because of lack of clarity, because of certain other issues I can't comprehend, but when we are receiving the schemes after implementation, like if my client is one who purchased the asset and we got involved at the stage after purchase, then we are seeing that the order, because we can't say that adjudicating authority has not given the relief. It's like that we have not presented our case, so the adjudicating authority has also not included those things in the order. Why I am saying so, and this same situation is there in the resolution plan also. So I am saying whatever care you are taking while drafting a resolution plan, the similar care is required to be done when you are seeking a order for sale of asset or sale of entity as a going concern or merger or amalgamation. Whatever is included in the order, you don't require any separate corporate action for doing so. Let us say you acquired an entity as a going concern and you prayed for reduction of capital of existing promoter to 0. You infused X amount of money against the allotment of share capital. All these actions can be well covered by the order of adjudicating authority. You are not required to take any separate permission. Now, what we see in majority of the cases, the order is silent on the reduction of capital. Infusion of capital is included, but there is no utterance of reduction of capital of the existing promoters. Now, leading it to a situation, if it comes to me for implementation, how can I reduce the capital unless it is specifically provided in the order? If I have to reduce, then I have to follow the process which is specified for reduction of capital. I cannot reduce on my own. Then again, you are required to either file the application for reduction of capital or you file the order application for modification of this order itself. My lord, this was missed out at the time and you kindly consider this. So maybe Milords will pass the order, but unnecessarily it is a trouble which could have been avoided. This will delay the entire process. So the point that I'm saying, I'm giving only one example. And the other example could be like in one of the case we were facing, there was no provision with regard to the stepping down of the statutory auditor. Statutory auditor was appointed 2 years back. The sale was as a going concern. Now he refused to submit his resignation. Now, if we have to follow the route of taking central government approval for his removal, then it is very difficult. I'll waste my 6 months' time before the regional director to convince him as to why I want to remove. Why he is not fit to continue as a statutory auditor on a sale as a going concern, whereas the person who has acquired the entity, he wants his person of his confidence as a statutory auditor. So it was a very simple thing. If it could have been included in the order of adjudicating authority, it was very easy that the person will step down, the existing auditor will step down from the date of this order, and the new person so and so will be appointed, or new person will be appointed by the new management. That's it. That could have resolved your problem. Similarly, there could be n number of other corporate actions which are required, like in merger. We many times miss out that the entity CD is having a huge capital. In one of the case, the capital was to the tune of 400 crore. They could have easily taken the benefit of increased authorized share capital. But since it was not mentioned specifically in the scheme and it was not part of the order, we could not convince to the ROC that my capital will stand increased. We have to lose on that front, and there was no opportunity available that we could have gone again to the adjudicating authority for seeking a modification. This was considered not so sacrosanct that implementation will come to halt. So what I am trying to give an indication only. Change in directors again is a, if you don't provide, then how come the directors will be appointed? The directors appointment will again require a constitution of board, and board is not constituted. Previous directors are not cooperating, because in any which case they are powerless. They don't exist at all. So best is that whenever you are either in case of a sale of entity as a going concern, you will make a provision that these peoples will be the first director after the completion of this sale. These peoples who were existing, they will cease to exist. And in majority of the cases, you will be required to take the help of a back office for the purpose of necessary appointment of statutory this directors. Similarly for the secretarial auditor, similarly for the limits also. Now, the limits under section 179, 180, 181C. Now, all these limits can also be adequately covered in the NCLT order, because immediately thereafter, you may not have a shareholders in existence, the board in existence. It may take some time, and you may have to continue the entity as a going concern. You may be having these all issues. Similarly, the related party transactions, maybe if you are a listed entity, then the problem becomes even more, because certain peoples cannot vote on the particular agenda item. So point that I am trying to emphasize is that we have to be extra cautious while framing the application for the purpose of seeking any of these three channels. Of course, when we are in resolution plan, we will take similar care. But whenever you are doing a merger amalgamation in liquidation, whenever you are doing sale of entity as a going concern, or whenever you are selling the assets as a going concern. So mind you that you are crystal clear. Just see and visualize how the implementation is going to take place, because if you are not clear on the implementation part, perhaps you will be stuck at the time when the opportunity will come. Now you will not be able to meet the requirement. I think we're done with by and large stakeholder consultation committees. I think we have done that. We can take the questions. I think we thought that 15-20 minutes we will take, but nonetheless, I think rest all is a process that we have in any case covered in the, yeah, all right. So we'll open for the open questions on anything on the liquidation or dissolution, or whatever we have covered in respect of voluntary liquidation or the other processes of the exit of the entity also. Anything, floor is open for unmute yourself and please go ahead.
May I, sir?
Yeah, please.
Sir, in a case when in 2006 in a company which was in the BIFR, it already wound up by the High Court, but when they went to BIFR, the High Court has stayed the proceeding, stated that this proceeding is stayed till the time the company is in BIFR. In 2014, the SARFAESI took place and the BIFR protection went out. But the High Court did not pass any order till date. Before a year or so, the High Court has stated that now it has to go to NCLT. Can we say that already the order has been passed for the liquidation? Can again the NCLT has to go through the IBC proceedings, or what can be the remedies for the? I mean, the company does not have much of assets also. What can, because
if I remember correctly, when these proceedings were implemented or notified effective from December
1/12/2016.
Yeah. So at that point of time, the wordings used were that if a process has been, I'm not recalling the exact language, but it was saying that if a High Court has issued the notice, if notice from the High Court, who was the competent authority for winding up at that point of time, if they have taken a sort of cognizance of the process, if you have filed the application is one thing, but filing of application, there were three types of cases. One, the people who have filed the application under 433 before the High Court. These cases will abate and the application will be required to be filed before NCLT.
In this case, order has been passed?
I am coming to that.
Yes.
Second situation was that matter has been filed but not yet noticed by the High Court. In those cases also the reference will be filed before the insolvency court, that is an adjudicating authority. Third case was, which is very clear carve out, which was saying that the cases where notice has been issued. Now, exact language I am not recalling, but the sense was that where the High Court is seized of the matter. And in your case, you are saying that not only High Court was seized of the matter, but High Court has passed the liquidation order also.
Yes.
I personally, I have not gone through your entire facts, but I am saying, presuming this situation was in existence at that point of time where the liquidation order has already been passed, which was eclipsed due to certain further actions, due to provisions of SICA, due to provisions of some other SARFAESI action, eclipsed for period of time. Now cannot be unless we say that these are the fresh proceedings and the existing proceedings are null and void. If that be the case, then only insolvency proceedings can commence before the adjudicating authority as per law. The proceedings which which had continued before the Honorable High Court. Now my question, which the doubt why I am having is somebody who has eclipsed this order of High Court in respect of liquidation, is that order still valid? Is that a situation where I am not able to remove the eclipse of either BIFR or SARFAESI in respect of that High Court liquidation order? What is the situation as on date? Whether those orders are null and void, nullified, and the bar has been removed. If the bar has been removed, the liquidation has to continue.
Yes. See, what has happened that High Court has transferred all the company law cases before the NCLT. So this case by that way also transferred. They have not understood. I mean, because there was a clear-cut embargo at that point in time. It was stated that till the time it is under BIFR, the order is stayed. Now, once it has gone out of BIFR, stay has gone out, meaning thereby the liquidation should have started. But now the situation is staying. Now, in the NCLT says that now we cannot have, we do not.
No, let me comprehend it this way. Then means stay has been granted if the wordings were like ki the stay is granted till the time because they were not knowing at that point of time whether the BIFR will continue or not. It was like ki till the time BIFR decides, right? Maybe the company was referred to BIFR and BIFR was to decide. Unfortunately, on 1st of December 2016, the BIFR itself got repealed and the reference got abated. So if the reference to BIFR has got abated, the meaning thereby is the liquidation which was ordered by the High Court should revive. If it has to be stayed, then some positive action is required further by the concerned person that the stay should continue before some appropriate forum, because automatically it cannot. So either you can file a revision before the division bench of High Court, which can take a cognizance, and also you can apprise that there is a distinction between the two kind of cases. There are still not only this High Court, but I'm saying there are many other High Courts all across the country where High Courts are still dealing with the liquidation cases, winding up cases. It is not that all cases have been transferred. Whatever cases which High Court was seized of at the time of 1st of December 2016, they are still continuing. Even in Lucknow High Court, in Allahabad High Court, and every High Court, I think it is not like that. Though I agree that by mistake, many of the High Courts have transferred these matters to adjudicating authority. And I'm also privy to one of such matter where we have remanded back the matter back to High Court of Lucknow, because my matter was at an advanced stage of arguments where the court has taken the cognizance of, and it's a government company. So we requested them, then they mentioned, they agreed that yes, it is a matter which has been sent by mistake. We acknowledge and we will ask them to send the file back. I think your case is also falling into that particular ambit only. You can make a application. Maybe if that is not working, maybe you can make a mention to adjudicating authority where the file has been transferred, that this file, because of so and so fact, I think that may be the easy one. Or you may file an appeal before the division bench against that particular order for taking a cognizance and recalling the file before the High Court itself for the resuming the matter of liquidation. I think.
Thank you, sir. Thank you.
All right. Yes. Anything more?
So in like we were discussing the question for the cases which have been initiated in the earlier act. So in one of the cases, we have initiated the liquidation in the Companies Act 1956 for the members' voluntary liquidation. The process has been completed now. We have closed the bank account and we have distributed the excess amount to the shareholder. So we are in dilemma where we have to file the application before the NCLT or before the OL through the RD through the High Court. So because there was a circular in
Old
2000.
process, sort of old process has to be followed.
Okay, old process.
You have not completed anything under 59.
Yes, sir. We have not completed. We have not informed to the IBB.
So if you go before adjudicating authority, they will not understand, and the whole matter will be complicated. Now, best is that because you initiated the process under the old law, at that time the official liquidator was in charge for the same, and he has completed the entire process. You follow the old route and complete the process, and you will get the dissolution order from there itself. But I don't think adjudicating authority NCLT will take cognizance of the same and they will be passing any order. They will say ki there are two alternatives. You abort the entire process, whatever you have done in the past, but you might have distributed also everything.
Yes.
So nothing can be done. Means you have to follow the old process only. Very few cases are there like which were of your nature, where members voluntary winding up cases, which were pending as on that particular date. Majority
Yes.
cases were which were under the supervision of High Court only. So those cases, the clarity was there. But in this case, I think you have no option but to refer the matter to through OL to the High Court only.
Okay, so we have a liquidator or private liquidator, just an insolvency profession. Like we have not the official liquidator as a liquidator. We have a private.
How come when you appointed him as a liquidator?
So I have no idea like background of the case, but in the I'm dealing with the present scenario. So in our case, a private professional is appointed as a liquidator. In
It is not
the
possible, Saurabh. Then we are. I think we have gone somewhere wrong. Then we are saying that we have followed 59. Where because under the old law there was nowhere opportunity to appoint insolvency professional as a liquidator. It was only under the new law that we are. So we have followed. We have initiated under the old law. Partly we have followed the new route, and then now we are in a situation. I'm not very sure as to what will be the fate of. You may try your luck, or you gather your complete facts. Then you may connect, and you may try to find out what could be the solution to that. But prima facie, it looks like there is something. Some links are missing now, because saying that I started the members voluntary winding up under the 1956. So once you have initiated, that means liquidator was appointed.
Yes.
Official liquidator must have been appointed. So if official liquidator has been appointed, from where come this insolvency professional is coming into picture?
But at that time, there was a professional was appointed as a liquidator, and the professional has
Not
been
possible.
changed and the new professional.
Saurabh, how come
Yes.
it is possible? Because prior to 1st of December 2016, there was no concept of insolvency professional.
Okay.
So how come if your appointment was prior to, either your appointment is afterward.
Yes.
If your
Correct.
appointment is afterward, then you are mistaken, because you have to follow 59.
Right, but the appointment is prior to 59 in force.
Then it cannot be insolvency professional. First insolvency professional got registered only on 1st of December 2016.
There was no criteria like the 10-year experience professional can be appointed, because insolvency professional term has been come in after the IBC. But prior to that, I am not aware about the 1956
Was
or what.
official liquidator only who was appointed. You can collect the facts, and then we can connect. I'll share you my presentation. There is a number, or I'll put it in a chat box. You
Yes.
can call me, and then we can discuss it out. But my view is that perhaps it is means there is something missing. Means it is not gelling with that I have commenced the liquidation, but I have not appointed the liquidator. Then the process will abort now, as per the notification issued by Ministry of Corporate Affairs at that point of time, which was
Yes.
saying that if the process has not initiated, you have to follow new law.
Yes, sir.
Right? I think we need to relook into as to how we can best cover it up.
Okay, sir. Okay. Thank you, sir.
I mentioned my email and mobile. We can connect if you are able to gather all the facts, then we can discuss as to what could be the possible solution. Anything else? Any more points or anything for discussion? Anyone has any experience with regard to any peculiar situation on liquidation, which you might share? All right, Anjali, you are there?
Yes, sir.
So I am done with. You may proceed further. As
Thank you so much, sir. Thank you very much for such a wonderful and interactive session. Sir, please share your PPTs on our email ID.
I will share. All right, sir. All right, Anjali. Thank you, ICSI, IIP, and thanks to all of you, especially Saurabh, Hital, and Brijeshi and Hiten, who have made this section little interactive. So we are also benefited out of the discussion. Thank you. Thanks
Thank
to
you,
all.
sir. Thank you very much.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you. Thank you. All right.